I need to load up the YouTube too.
Jeff, you are currently live on YouTube.
All right, sounds good. Thank you, sir. Let's see. Welcome. It's good to see everybody. What we are going to do is just we're not going to really start officially just yet, but we have so many prizes to give away that we figured we'd kind of start a little bit early, let people kind of get situated, answer some questions, and we will start officially in 4 minutes. So it's not a lot of time. We also give us a chance to kind of go through the schedule, that kind of stuff as well. So I've got my friend Greg Lewis. He's probably, well, for me, he's right here. I don't know.
I'm actually above you.
He's right there.
You're below me.
Hello.
Hello.
I'm used to looking up to you, Greg, so it's cool.
Yeah, well, that makes sense.
All right. So let's see. Let's talk a little bit. Welcome. If you're coming to us and you're joining on YouTube, like and subscribe. It helps a great deal. We appreciate it. Greg likes it. I like it. And I've heard, but I can't objectively prove it, but I've heard you get good karma just by liking and subscribing. So if you are joining us from YouTube and you haven't registered for the event, what you want to do is you want to go register, because we're going to give away prizes all day, including right now, to everybody that is registered. You have to register to win. So from that perspective,
excuse me, you might want to point out that if you're watching this and go to webinar, that means you've already registered. You don't need to register. And if you're watching on YouTube, we have pinned right at the top of the YouTube chat where you can click and go register. But if you don't see that for some reason, just go to metastock.com and click on the large banner at the top of the page.
Thank you, Greg. Do you want to be random? Do you want to guess a random number? Actually, let's go with the prize right now.
Okay.
Let's see. And let me kind of go, just figure out where we're at from yesterday. Okay. Let's see. We're going to give away a Asbury Research Chart Focus 1 month subscription. So actually, let's give away a couple of them. Hello, Satish. Good to see you. Oh, hello again. Okay, so the Asbury Research Focus provides its readers with a weekly outlook of the market. It allows readers to get beyond the talking head and noise and drill down into the market activity. The value of this free prize is $25. And since it's a free month, let's go ahead and give away 2 of them. So Greg, why don't you give me 2 numbers?
All right, I've already pulled numbers from 0 to whatever you said before. I can't remember what it is.
All right. I'll have to give you what will happen after we get started. I'll pull a new list for everybody that's registered today. So go register, and we'll have new numbers next time. Okay, give me 2.
Okay. The first one is 7441. Oh wait, is that too high? That's too high, didn't you?
Yeah,
that is too high. I'm sorry. My second one, excuse me, when I put the daddy in, I put the number too high. So scratch that one. Then, this one, 2004.
It's early, guys.
It is early.
We really hit our peak at around 11, and then between 11 and 12, we're perfect. Then it goes downhill. Let's see. So we've got a Lee F with a Yahoo address. Let me just kind of put that in a different tab. And Asbury. Okay. Give me one more number, Greg, if you don't mind.
1528.
Okay. And that would be Remould, with also a lot of Yahoo addresses today, or so far today. And actually yesterday too, it seems like we had, okay, we'll just look here. Hey Neil, good to see you again. Looks like we had one, I guess not too many, 3 Yahoo addresses. So
Jeff, It is go time, so I'm going to go ahead and.
Oh my gosh, it is. All right.
You ready? You can start the event officially.
All right, sounds good.
Bye, everybody.
All right. Thanks for coming. Greg, thanks for letting me know it's time to start. It's good to have you. If you have questions as we go, make sure to type them in the questions box, which will be on the lower left over there. If you're watching on YouTube, like and subscribe. It helps a good deal. We appreciate that kind of stuff. And I'm excited to kick off day 2 of the conference. Yesterday went great. Let's go ahead and read out the legal disclaimers, talk about the partners, and get on the road. Today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It's not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock and its employees shall have no liability for any investment decisions based on the use of the software, trading strategies, or any information provided in connection with the company. Metastock and its employees do not endorse the purchase of any security, nor are they paid for the promotion of any security. No information contained in the presentation today should be construed as investment advice or the solicitation to buy a security. So hope you enjoyed that. I hope you do learn some stuff today too. I do want to say real quickly thanks to all of our sponsors. AAII, you can find out about AAII.com. Well, you can find out about AAII at AAII.com. Great nonprofit organization. They've been helping traders for many, many, many years now. They do the AAII investor sentiment surveys. Also, they have like lots of actual analytics and reports and things like that that you can get from them. Great organization, well respected, AAII.com. Also want to say thank you to Stocks and Commodities Magazine. Stocks and Commodities Magazine is the magazine that's been running since 1982, dedicated to talking about technical analysis, to teaching about technical analysis. They've got 1.3 million subscribers, 17,000 articles. You can find out about Stocks and Commodities Magazine at www.traders.com. And then finally, I do want to talk about our partner site, the forum, the Traders Forum. It's a free site. You can join the community, can chat with market traders, learn about markets, and basically just kind of share ideas, socialize, talk to people. You can get there at www.thetradersforum.com. Of course, we are Metastock. We'll help you scan the markets, focus on opportunities. We've been rated number 1 31 years in a row. We're offering a 3-for-1 special on Metastock. If you buy a month, we'll give you that second and third month for free. You should try it out. We're going to talk about why all week. If you're interested, get more information, metastock.com/conf-promo, 800-882-3040, or metastock.com/saleschat. Whew, that's a lot, right? Anyway, let's go ahead and kick off. Our first guest today is Zaheer. Zaheer has been a partner of Metastock for a couple of years now. He does a really, really good job. I like the way that he looks at the marketplaces and the picks that he has when he comes in and does these particular presentations. It's always a pleasure to have Zaheer with us. And Zaheer, we're going to go ahead and get you started. How you doing, Zaheer?
I'm excellent, Jeff. Yourself?
Great. Yes, I'm doing very well. And I can hear you, so that also makes it very well as well.
Brilliant.
Let me go ahead and make you the presenter. I'll tell you I can see your screen and pretty much get out of the way. All right, I can see your screen. Thanks for joining us here.
Can I just do a quick check to see if I flip across to Metastock? Okay.
Yeah, it's coming through. Oh, that was beautiful. Wow. What is that? What is that software you're using again?
I believe that's the beautiful version of number 19, Metastock 19. We're going to be going through.
I will get out of your way. It's all you. Thanks for coming, Zaheer.
Brilliant. Thank you. Right. Hi, guys. Hope you're well. It's a great day. It's a great day. I hope you've been enjoying the wonderful speakers that Metastock always put together in these events. So it's a real pleasure to be amongst them. Right. Real interesting times in the markets, guys. As you're probably aware, the S&P 500 last week broke out, printed new all-time highs, and the topic of today's training is discovering overlooked stocks, creating wealth beyond the media hype. And I really want to focus on that section there, guys, the media hype, because in July and August, as you are all probably familiar with, we saw declines in the stock market. And if you go online, as always happens during periods of decline, you will see real sort of fear-mongering headlines about the stock market crashing. Fast forward to today, and the S&P has recovered from those declines and is now printing new all-time highs. So we have to bulletproof ourselves. This is something that I learned very early on in my journey, is that I've got to bulletproof myself from the news headlines and really learn to focus on the charts, because ultimately the charts are the source of truth. And during the early parts of my journey, I learned a lot about software that was available. I've got a degree in software engineering. I'll be talking a little bit more about that in a second. But ultimately, through that journey, I came across lots of different software, and ultimately settled on Metastock because of its capability. And we'll be going through that today. So once again, we're going to be looking at stocks, how to find stocks beyond the media hype. Okay, so a brief background of what we're going to cover today. First of all, how the MAT came about. We'll then look at stocks and performances since 2023, because October 2022, that's when the bull run really came into play. And then 2023 is when I started putting my portfolio together. And we look at how I did that using the Market Advantage Toolkit. And of course, we'll end up with a Q&A. Any questions, Jeff, that you feel are timely, please do come in at any point. Okay, so just a brief background of myself. I have a degree in software engineering, so that's really where my love for trading technology came into play. I worked for Oracle Corporation for a year. If you guys are looking at the Oracle stock, it also broke out and set record highs earlier this month. I didn't last too long, to be honest with you guys, when working for Oracle, because I realized that if you're going to work a 9 to 5, it's got to be something that you enjoy. And after I graduated and I worked for Oracle in a sort of 9 to 5 capacity, I realized it wasn't for me. So I quit and I became a TEFL teacher, teaching English as a foreign language. So I lived in Asia, Taiwan mostly, but also Japan and the Philippines, taught English, had a great time out there. Early 20s, doing what early 20s do in Asia, having a lot of fun. But ultimately, guys, there's no money in teaching. And, being born and brought up in London, money was always something that I was interested in making and growing. So when I came back to the UK, I then got into advertising photography. And advertising photography is really where I started making some decent coin and started saving money, because ultimately our images went on the side of buses. And we had usage rights. We had good clients like Audi, Coca-Cola, Barcelona Football Club, La Caixa Bank, Whirlpool. We had images going into editorials like Harper's Bazaar, Vogue. We were doing some really good stuff. So money started coming in. And that's really when I started learning to invest my money. Like everyone else, I started day trading, realized the pitfalls of day trading, too much time. Really spent a lot of time being glued to the screen, trying to work, put photo shoots together, and then also staring at my screen. It just wasn't really a combination that fit well with me. So I then came across books like Way of the Turtle by Curtis Faith. Highly recommend if you haven't read this book. That was a complete game changer for me. Way of the Turtle by Curtis Faith. If you're not familiar with the Turtle Trader Experiment, Richard Dennis, William Eckhart, and the success of the Turtle Trader Experiment, then I highly recommend reading that. So trend following came about 2006, 2007 is when I started implementing it, started learning the technology that was available, such as Metastock, and then co-founded Sublime Trading in 2018. That is our education platform where we've been helping professionals put a portfolio together. And again, the word professional there is quite important. Professionals are often busy, they're short of time, long careers, long days, families, married, kids, all of that good stuff. What they want is to put a portfolio together that adapts around a busy lifestyle. And that's really where trend following and the technology that Metastock has created that really sort of helps individuals create these sort of portfolios. What we want are smart processes working in the background while we sort of get on with our day-to-day. And then fast forward to last year, 2023, that's when we had our hedge fund set up, incorporated in Luxembourg last year. We've had our track record going back to 2016 verified. It averages at just over 30% a year since 2016. And again, all of that has been achieved with Metastock being really part of the foundation of the whole portfolio building process. So my goal when I started really sort of taking to social media in 2012, 2013 was to put trend following back in the limelight. What I was actually very fortunate to come across books like Way of the Turtle. I found a couple of decent mentors in my early days who really helped me sort of start implementing trend following as a strategy. There was a lot missing, which myself and my co-founder have created and put together, but we really started getting our teeth, if you like, into trend following around 2007, 2008, 2012 is when I took to social media, started sort of building a profile for myself. But the real goal was to put trend following back in the limelight, because it was ultimately being buried, or it was a forgotten art where lesser strategies were taking center stage. And what I mean by lesser strategies, often short-term strategies were and are still being pushed as get rich quick schemes. And then you've, of course, got approaches like value investing, which they have their place. But when you look at this table is taken from Excess Returns, a comparative study of the methods of the world's greatest investors. Again, a book worth reading, guys. If you look at this table, Richard Dennis is at the top of this table. And if you look at mid-table, you've got people like Charlie Munger, Warren Buffett, and Benjamin Graham. So this really sort of intrigued me. Why is it that our social media channels are loaded with images of Warren Buffett and his success, which, you know, is undeniable, but people like Richard Dennis, you know, don't really get much of a look in. And if you look at Richard Dennis at the top there, guys, 120% over 19 years. We're not talking about 19 weeks or 19 months. We're talking about 19 years. That is a long period of time. Yes, Warren Buffett, he's got his 23% track record over 50 years. A lot of that, remember, guys, is dividends. His actual stock picking process, if you like, is not as prolific as people at the top of that table. Often when you look at the everyday individual, what they're looking at is growth. They've got a certain amount of money saved up. They look at what they want to achieve by retirement, and a lot of people are short on their investment goals. So value investing isn't necessarily the right approach. Trend following and growth momentum, if you like, is another way of looking at it. It tops performance tables. And so that was my goal. My goal was to put trend following back in the limelight and make it accessible to everyday individuals like us. Fast forward to today, I'm in the privileged position to be able to spread my message across wonderful platforms. Of course, I've built this wonderful relationship with Metastock over the years, but Benzinga have given me a platform. A number of brokers have, of course, allowed me to speak at the investor show, which is going on this week. I believe Bobby's coming to the UK for the investor show as well. I will be meeting up with Bobby, which I'm really excited about. But ultimately, guys, I've been allowed to spread my message and share my message across these wonderful platforms. So let's get into the meat of it, guys. 2022, we had a 28% decline in the stock market in the S&P 500. October 2022 was when the stock market found support, and it then went on this 65% bull run that we find ourselves in today. The stocks that have been found, or the stocks that rather I've invested in over the last 24 months, if you like, have all been found using the Market Advantage Toolkit, using Metastock and the Market Advantage Toolkit. So here are some of the stocks. I'm going to start with some of the stocks I've invested in, and then I'm going to show you how I found them. First of all, Amphenol. Now, note how many of these stocks you may know or you may not know. And the point here, guys, is I'm based in the UK. Most of the stocks that I invest in are US stocks. So the scanners, when they go to work, the explorers, when Metastock goes to work, these stocks that Metastock finds for me are stocks often that I haven't heard of. But when I look at the history of these stocks, these are giants. These are stocks that have been around for decades, and they've performed exceptionally well for their investors over those years. Amphenol is a company I'd never heard of, but since 2022, it's climbed 112%. Now, this is a stock that goes back many, many years. Since the bull run started in 2022, it's climbed 112%. Boston Scientific, it's climbed 140% since 2022. FTAI Aviation, this has climbed 800%, guys, since 2022. So it was trading around $14 in 2022. It's now $130, a massive climb. GoDaddy, of course, we all know GoDaddy, but how many have looked at the stock over the last 18 months and potentially even got GoDaddy in their portfolio? I can tell you that not many people have. They've heard of the company because we all know where you can go and buy your domain names. But we've got to be more than just consumers. We've got to look at the fact that we can potentially invest in some of these companies. GoDaddy has climbed 143%. Guys, let me put it this way. You walk through a mall, a shopping mall, and you look at all the companies around you. What you see are just people spending money. When you walk through a mall and you've also got some of these stocks, these companies in your portfolio, or you look at these companies and go, I could potentially invest in that one day, it's a whole different shopping experience. The way your mind opens up when you understand how vast the stock market is and how you can actually pick out these stocks and not only just pick them out, but really learn to invest in them well, it just becomes a whole different experience walking through a shopping mall. So GoDaddy, 143%. Nvidia, now of course, guys, Nvidia has taken the limelight for many a year, particularly with the whole AI revolution. It's climbed 1,000% since 2022. But the question is, we've all heard of Nvidia. I'm sure some people have it in their portfolio, but we've got to be able to invest in these companies in a really sort of objective way. And not only do we want to invest in them, we want to maximize profit. So that means we want to identify when to get in at the very start of these moves and then ride the whole move up in a very clear and systematic way. Wingstop has climbed 531%. This is a restaurant that sells chicken wings, guys. It's climbed 531% since 2022. So you can see the diversity here of the different kind of companies and the different sectors, but also how well they've performed since 2022. Now, I also use the MAT to invest in commodities and currencies. So I'm long on gold. I've been long on gold since March of this year when it broke out, started printing new all-time highs. Gold has climbed something like 23-24% since March. Silver, if you see WL there, that means it's on my watch list. So once silver breaks through that $30 mark, it's currently in an area of consolidation. If it breaks through the $30 mark, I'll add silver into the portfolio. Palladium, I was short on it for a good 12 months. There's been a recent rally in Palladium, which triggered my stop losses. So I'm now out of Palladium. But again, found using the MAT. And currently, I have the euro dollar and the pound dollar. They're also on my watch list. The point here, guys, is important to diversify the portfolio with trending assets from other classes. Don't diversify for the sake of diversification. Over diversification kills portfolios. What you want is to understand how to diversify across trending assets. So if you look at, say, an amateur's portfolio, they may have 20 different assets, 20 individual different assets. If you look at my portfolio, I may have only 5 assets, but I've got 4 positions running on each one. So that's still 20 positions. It's because I've compounded and I've repeatedly bought more of a winning asset. So we want to concentrate our portfolio across winning trends and then rebalance every 12 to 18 months, typically when reversals come in. And then again, go back to the scanners, diversify, find the best stocks from the best sectors, and repeat the process again and again and again. Systematic and simple is the way I like to keep it. Okay, so just to give you an idea of the portfolio and how it's performed, we have a service at Sublime Trading, which is called the APL, the Asset Position Log. Ultimately, it's just a copy service. Whatever assets that we have bought and placed in our portfolio, we share them with our community members, and they can then copy the process and copy those assets in their own portfolio. We started building our portfolio in February of 2023. That's when the bull trend had really confirmed itself. We start with a $20,000 account. That's because that's typically the minimum amount that our community members start with. Some have $1 million, some have 100K, but 20K is the minimum. It's the very minimum that our community members are required to have. And the reason for that is because of risk management. The more money you have, the better you can manage your risk. You start with $1,000 or $2,000, $500. People usually end up losing these sums of money pretty quickly because you can't manage your risk on them. Whereas with $20,000, you can put 1% here, 1% here, 1% here, and very much spread your risk. Since February 2023 to September this month, we have achieved an 86% return so far on the stocks that are performing well in our portfolio. this is what it looks like. Often it's quite slow in the beginning because winning stocks take their time to come good. But then once the compound effect starts kicking in, boom, you have this real growth in your portfolio. And this is the beauty of compounding. It's very slow and unremarkable in the beginning, but if you give it the time to kick in and allow those winners to run, the exponential growth factor, once it starts kicking in, is mind-boggling, and it's never ever boring to watch. Here is a quick look at my sort of sector exposure, and you can see how I look at the strongest stocks and diversify from the strongest sectors. Most people tend to just focus heavily on IT, and that's because Nvidia and Microsoft and Apple, all the sort of big tech stocks, take all the headlines. Whereas what we want to do is move away from that. And the reason for that is because if you go back again to July and August, when we had the declines in the stock market, the reason why we had those declines was because big tech had a very difficult earnings window. But if you look at the lower weighted stocks like Walmart, stocks like Coca-Cola, they all broke out and printed new all-time highs. Hence why you want to have a diversified portfolio. You do not want to just focus on IT because of the weighting that IT has, big tech has on the indices. It gives you an inaccurate picture of what the stock market is actually doing. Industrials, guys, has been going through the roof in the last 12 to 18 months, and there's some wonderful stocks in that sector that should really be in your portfolio. Okay, so we want to use the MAT to invest in trending stocks that are outperforming the S&P 500. Now, what exactly does that mean? Well, the S&P 500 is an average. It's an average of 500 stocks. So if you invest in the average, you get an average return. Some stocks match the average. Some stocks underperform against the average, but there are always a handful of stocks that outperform the average. That means they move up quicker and hand out profit quicker over a 12 to 18 month period. These are the stocks that we want to find using MetaStock and the Market Advantage Toolkit, and the stocks that you want to add into your portfolio. So just to get a visual representation of what I mean about stocks outperforming the index, the S&P 500 has climbed around 64% since 2022. The low of that green shaded area, that's October 2022. That's when the bull run came in. Now, if we look at all the stocks that I have shared, Amphenol. So once again, the S&P has moved up 64%. Amphenol has moved up 112%. Boston Scientific 140%. FTAI Aviation 800%. GoDaddy 143%. Nvidia 1000%, Wingstop 531%. All of these stocks have moved up quicker than the average. So if we can find these stocks, add them into the portfolio and repeatedly compound them, that's how you'll boost your performance to beyond the average return of the S&P 500. Let's say over 20 years, the S&P gives you a generous 8, 9, 10, 11% a year, the S&P 500, which is not bad. It beats the banking system. But if we can find stocks that are outperforming the S&P, we can then boost that to an average of 30% plus. So stocks outperforming the index, they move up quicker, they deliver superior returns over 12 to 18 plus months. That's typically how long we hold for. We then have our trailing stop losses that are managing each position. We then take our profit, rebalance, and go round and round and round. Very systematic and very simple. Okay, all stocks that are found by the MAT, they all follow a particular pattern, which we call the 4PS method. Now, going back over the decades, there have been many ways of counting waves in the market. Elliott waves, for example, Fibonacci, for example, Gann theory, for example. Personally, I think all of these methods, they had their time. Like all industries, we've evolved. Technology has helped us to get better. And so what I put together was what I call the 4PS methods, which is the 4-phase sequence method. Every stock that I invest in goes through 4 very clear phases. Let me break this down for you. So phase 1, phase 2, phase 3, and phase 4. Phase 1 is a proven performance. If a stock has performed well in the past, it's very likely to perform well in the future. So what I'm looking for when I go into a stock's history is periods of trend that have lasted at least 12 to 18 months. If I've seen this in the past, then the chances of that happening going forward are extremely high. This is the beauty of technical analysis and trend following. Phase 2 is a base. So you know the expression, the longer the consolidation, the bigger the breakout. Often these sort of expressions, they're just well regurgitated theory expressions that we hear everywhere. People don't really know how to execute on them. And that's what really bothered me in my early days. What did all of this mean? How do I turn it from theory to implementation? So what I understood was that when a stock has a proven performance history and then goes through a sideways market and then breaks out from that sideways market, what we have is a stock that is about to trend. That consolidation base is typically 3 to 6 months. That's what I like to look for, minimum. But the longer, the better. Gold is a really good example. Phase 1 for gold was from 2001 to 2011, went through this massive 700% rise. Then from 2011 to March of this year, it went through a 13-year sideways market. Then in March of this year, it went through phase 3, which was the breakout. And then phase 4 is the current trend that gold is in. It's climbed around 23, 24% since March. And the history shows that when gold trends, it can trend for many, many years. So we could see this current trend that gold is in, it could last the next 5 to 10 years. Okay, may not, but it has every chance it could do that. And what we want to do is not try and guess or predict. We simply want to follow. This is what trend following is about. If gold is going to move through $3,000 to $4,000, why would we want to take profit? Instead, we want to hold and we want to keep on buying more. At some point, it will fail, no problem. That's where our trailing stop loss is coming. Same with all the stocks that I've shared just now. Nvidia, Wingstop, Amphenol, GoDaddy. GoDaddy is a great example. All have gone through this 4-phase sequence method. What I'm looking for is phase 3 and phase 4. That's really where MetaStock and the explorers come into their own. And that phase 4 trend typically lasts 12 to 18 months before we get the next phase 2. That could last for however long it lasts. And then we have the next 3 and the 4. So even a long-term trend like gold, it may move up for the next 4 or 5 years, but there'll be various phases, phase 1, 2, 3, 4, 1, 2, 3, 4, that happen during that rise. So what's good about that is that we can hold for a certain period. When the phase 2 comes in, we can potentially take profit, wait for the next breakout, so on and so forth. Okay, what we want to do is use the MAT, the Market Advantage Toolkit, to find phase 3 and phase 4 stocks. So how do we do this? Let's switch to MetaStock. Okay, let me just close this for a second. When you first open MetaStock, this is what you are presented with. All the magic happens in the power console, which is this P in the top left corner. So I'm just going to open that up. And on the left-hand side of the power console, you will see that there are a number of functions. The first function is the explore function. The explore function is where we can go to town with scanning the market. So I'm just going to find all our scanners. So everything here with the MAT next to it, these are our scanners. Now, what you'll notice is that we've pretty much got a scanner for any eventuality. The 2 most important scans are really simple: breakouts and pullbacks. We've got breakouts for long opportunities and we've got breakouts for short opportunities. If the S&P 500 is bullish, as it currently is, I simply scan for long opportunities. I do not take short opportunities in a bull market. Some may do that to diversify. That's not my approach. I simply like to buy in a bull market. So my favorites, what I like about MetaStock 19 is that you can actually favorite now your preferred scanners. So if I go to the favorites in the top corner, you can see that I've got a breakout long setup for UK and US. So the top one is UK, the top one is US. We're going to change the names in the next iteration because the UK scanner can actually be used for any small to mid cap market. So we have a growing community in India. So they use the UK scanner for the Indian stock market. If you guys are from India and if you're not investing in Indian stocks, first of all, why? Because the Indian stock market has been, why not rather? The Indian stock market has been going through the roof since last year, and it's continuing to go up. If you look at the Nifty, which is the S&P 500 for India, it just keeps on going up and up and up. And there are wonderful stocks that have moved up 200, 300% since last year. Again, they've all been found using this small to mid cap explorer that we use for the UK market as well. And then for the larger cap markets, we have the US scanner. That the back end, the programming of this is all down to volume. Volume is different for small to mid cap markets as it is for the large cap markets. All of the parameters are explained within a wonderfully detailed manual that comes with the Market Advantage Toolkit. Also, if you move your mouse over each of the scanners, it gives you a breakdown of what each explorer does. So typically what we do is, let's say the US market, once I have chosen my scanners or the scan that I want to complete, I then go to the markets. So looking at the US market, you can see that I scanned these 3 particular markets, and altogether you're looking at around 10,000 stocks. A wonderful, wonderful number of stocks that we can then scan through and create an initial stock list. So typically I will have anywhere from 100 to 200 stocks on an average day that are being picked up by the explorers. On a very, very bullish day, the explorer can pick up anywhere up to 400 to 500 stocks. Now, these are still quite large numbers, but very, very manageable to go through within half an hour when you know what you are looking for. So once the scanners have done their work and it's created me an initial short list of stocks that are breaking out, remember these are breakout scanners, so any stocks that are breaking out, and there are other parameters there in the back end, volume, for example, all-time highs, for example, stocks that are above the weekly and the daily 200 simple moving averages. These are all programmed into the back end so that it's literally picking out the cream of the crop stocks that I can then analyze using the charts. So what I do, let me just give you an example here. View all reports. Right, so this is an example of the scan that I did yesterday, and you can see that 114 stocks were picked up by my scan yesterday. I like to scan the market every single day because there's opportunities coming on a daily basis. At the very least, you want to do it once a week. At the weekend when the markets are closed, you can prepare for the week ahead. But I scan the market every day to look for stocks, and also because we have a service where we share these stocks with our community members. What I then do is I save that list. So you can see here on the right hand side, there's a save function. I date it according to the date of the scan, so 23rd of September. I then go into the charts section and I then analyze those stocks one by one. So you can see here, this is my scan for the UK market for yesterday. If I just open that up, you can see all the stocks that were found for the UK market. And these were all the stocks that were found for the US market. For today, I have created a custom list. So I'm going to start with the S&P 500. So I'm going to go through some of the stocks that I have found that you guys should potentially be looking at because they are all breaking out from that phase 2 into phase 3, and some of them are or have already moved from phase 3 into phase 4. So these are actually very investable stocks. Okay, so once the stocks have been scanned and picked up, we then open the charting section of Metastock. Just bear with me for a second while it loads up. Here we go. Sorry, it's being a little bit slow. Right, there we go. Okay, so what we have created is a 4-screen setup to do the analysis. What I'm doing here, guys, is multi-time frame analysis. What I understood was that if the monthly, the weekly, and the daily are all moving in the same direction, we have multi-time frame analysis and we have a multi-time frame alignment, sorry, not analysis. You have multi-time frame alignment when the monthly, the weekly, and the daily are all moving in the same direction. And what you have then is a high probability asset, an asset that is trending and likely to keep on moving up. So we're going to start with the S&P 500 just to give you guys an overall view of what is happening. In fact, I can use my mouse. Bear with me 1 second. Right. So the S&P 500 is moving to the upside. How do we know that? Because it's printing new all-time highs. We also have the ribbon at the bottom, which says bullish. So there's a number of parameters in the back end of the MAT that tell you whether an asset is bullish, bearish, or neutral. So you can see here that at this point here, going back to October, the MAT started producing a red ribbon because it was in the early stages of potentially being a bear market, one like we saw in 2007, 2008, and then 2000 prior to that. But that bear market did not materialize. It found support at the weekly 200 simple moving average, and we saw a bounce to the upside. And we can see that the ribbon is confirming that we are in a bull market. Also, what is beautiful, guys, about Metastock is that it has an inbuilt commentary system, which we have programmed, and that updates you bar to bar to bar. So you can see that there is an upside down triangle on September's bar, and there is a commentary that is going with that. So if you move from bar to bar, that commentary will change according to the bar that you are on. So it's fantastic because it will tell you exactly what is happening at any moment in time. So the monthly is bullish. So let's open up the weekly time frame. The weekly is bullish because we have a number of parameters set into the back end. Notice the color of the bars. We've got green, gray, and red. When the bars are green, we have a bull trend in play. When the bars are gray, the start of a consolidation. When the bars are red, a bear market. Now, I said earlier that the 28% decline in the S&P 500 failed. The bear market failed at the weekly 200 moving average, which is this black line, and we can see that it rebounded and moved to the upside. Now, here's the thing, guys. If you go back to the start of 2023, end of 2022, start of 2023, our media channels were covered with the talk of failing banks. You remember that, what was happening in Silicon Valley? And our media channels were covered with the talk of failing banks. Now, here's what's interesting. Failing banks are as old as banks themselves. Banks fail on a regular basis. So why was it that that was the hot topic back in 22, 23? Yet, fast forward to today, none of that sort of fear-mongering materialized. And in fact, the S&P went on this massive 65% bull run. People will do better to turn off their media channels and focus on the chart. It tells you everything you need to know. What we see in our media channels just ends up being fear-mongering. It's very disconnected to what's really happening in the stock market, and people will end up making better decisions just focusing on the charts. Also, you had people like Cathie Wood coming out at the start of 2023 saying that she's dumped her NVIDIA shares because NVIDIA is not going to go any higher. Well, we've seen that NVIDIA has climbed 1,000% since she dumped her NVIDIA shares at the start of 2023. So again, these people that we consider experts, are they really the people that you want to gravitate towards, or is learning how to do it by using the charts and using tools like Metastock give you everything that you need? And I can tell you guys that everything that you need is right here in front of you. If we go to the daily in the bottom left, just open that up. Again, the daily is in a bull trend. We've got bullish ribbons across the bottom. It's telling us that we are in a bull run. Now, here's the decline of July and August. Sorry, I went the wrong way. Oops, it's July and August. See the decline of July and August, guys? But it failed in August, and we've seen a recovery and now new all-time highs. So you can imagine, potentially, some of you guys on here right now, when the July and August declines were going on, you may have closed positions based on what was happening. You may have stayed out of the market. You may have opened up short positions. Ultimately, a lot of decisions would have been made that would have negatively impacted your portfolio. If you have a systematic approach that doesn't get caught up in all of that and just really focuses you on the chart and gives you a broader perspective of what is happening in the market, you will make better decisions. Now, what's great about the MAT as well is that when the market is aligned, when we have multi-time frame alignment, the bars will turn blue. So you can see that the S&P 500 has been aligned according to our parameters since the start of the year, January 2024. Yes, there have been times where the alignment has fallen, has become disconnected between the monthly, weekly, and daily. But overall, and that's really where patience comes in, because there are times where pullbacks will come in. But overall, the trend filter has been blue, telling us that we are in a bull market. Okay, so now that we know that the S&P is bullish, we then want to start looking at the stocks that are performing better than the S&P 500. So as I mentioned earlier, that a lot of stocks were breaking out during July and August when we had the declines. A lot of stocks were performing well. The stocks that don't get any media attention, the ones that have a smaller weighting on the indices, a lot of these stocks continue to push up. Waste Connection. It'd be interesting to know how many people actually know these stocks. I think at some point I'd like to do a poll, maybe on one of the next presentations that I do. Again, Waste Connection. It's not a household name here in the UK, but when it came up with the Explorers and you look at the history of the stock, you think, wow, this is an absolutely phenomenal stock. Buy high, sell higher, guys, is really my philosophy. This green line and this red line, the solid green and the red line that you can see, the horizontal lines, the solid green and the solid red, this is the high and the low of last year. Any asset that's trading above the high of last year and printing all-time highs is only likely to continue pushing up. So you can see that Waste Connection is one of those stocks. The ribbon at the bottom is bullish, and it has been bullish since, again, December, January of the end of last year, start of this year, and it has climbed quite nicely since that initial breakout. If we look at the weekly, you can see that the trend filter has been green since the start of the year. That's when it broke out from this consolidation. So going back to the phases, guys, the phase 1, the phase 2, the phase 3, the phase 4, if you look at Waste Connection, it has a very solid history of performing very well. It then went through a long-term consolidation, which is that phase 2. Phase 3 is the breakout at the start of the year. And then phase 4 is the move that we are currently in. And you can see that the ribbon is bullish, telling us that we are in a bullish trend. Remember, this is the weekly time frame. So we've gone from January to September, where we are now, with a nice move to the upside. And then if we come down to the daily time frame, you can see that the ribbon has been bullish. There have been times where that has been disconnected. Now, look at that period there where it's gone flat. Those are the summer months, guys. May, June, July, typically the markets go quiet. They go sideways. Institutional money dries up. People go away on holiday. This isn't a time to really be selling your positions. This is a time to apply patience, let the stock market settle, and then usually post-summer, the money starts coming back in again. And you can see that the breakout happened for this one, it happened quite early. It happened in June, and it's now continued this climb to the upside. Currently going through a bit of a pullback. That's okay. After every move, it creates another pullback. So we're going back into that phase 1, phase 2, phase 3, phase 4 scenario. Here's your phase 1. It's now going through phase 2, which is this correction. We're waiting for phase 3 and the breakout. Now, if we go to the daily in the bottom right, this is the strategy page. I'm just going to compress the chart. So what do I mean by the strategy page? Well, my entry point, my stop loss, and my compound level are all displayed on the chart. The entry points, you can see all of these green diamonds. These are entry points. So the software is telling you buy here, buy here, buy here, buy here. So the first diamond will be your first position. And then the next diamonds are all potentially environments where you can start buying more. Remember how I said I buy one position, I buy my initial position, I risk 1%. If it fails, I cut out with a 1% loss. However, if it returns a profit, I keep on buying more of that asset. So I actually have multiple positions running across Waste Connection. Also, there's an added filter where you see the circle. So again, the difference between the circle and the diamond, a circle is a low probability entry and a diamond is a high probability entry. Again, all of this is explained in the commentary. Go to the expert commentary and it's all broken down there for you. It's telling you whether the entry is one that you want to consider or not consider, one to stand aside on. Remember, we're looking at hindsight. So in hindsight, you're thinking, yeah, I should have just got in here. In fact, in hindsight, you're thinking, why didn't I just get in at the bottom? Hindsight's a beautiful thing, as they say. What you want is an entry that is a high probability entry in real time. So you have more chance of making a profit than a loss at that moment in time. And this is what these diamonds are telling you, that there is more chance of returning a profit than a loss at these moments when these diamonds are appearing. The dotted red line is my trading stop loss. So you can see how well the trading stop loss works. It's based on the volatility of the asset. So the more volatile the asset is, the wider the stop loss will be. So for example, take something like Tesla. Tesla is an extremely volatile stock. So it will have a much wider stop loss. Whereas these stocks that you're looking at now, Waste Connection, for example, Coca-Cola, Walmart, these aren't overly volatile stocks. They're very sensible stocks that perform very, very well over a sustained period of time. So the stop loss won't be as wide, but still manages the stock very well. So you can see this current pullback, guys. If I just expand the chart, you can see the red line, the dotted red line is around that area here. It may not be very clear, but you should just be able to see it. And if you look at where the pullback is, it's about halfway between the top, the all-time high, and that stop loss. So that means that it's being very well managed. If Waste Connection continues to come to this red line and hits this red line, that's when I'll consider exiting my position. However, if it stays around this area and then starts working its way back to the upside, all I've done is I've applied patience, allowed for the next bull run to kick in. And remember, October, November, December, these are synonymous with bull markets, right? So we could still have a very strong end to the year. So I want to hold on to these positions as much as possible. Okay, let's move on to the next stock. I'll just go through them a little bit quicker. I'm just conscious of time. Right, next stock, CBOE Global Markets. In fact, this is a stock that I have covered numerous times on my presentations for Meta stock, and a very good stock. You can see that it performed very well between 2016 and 2018. That's your phase one. Phase two was this long-term consolidation from that high of 2018 to the breakout at the start of mid 2023, and that's when we started taking our positions, and that was around $140. It's now trading at $210. In fact, it has gone through another phase two and it's now breaking out. So again, this is a stock that's right at the start of its next major uptrend. Looking at the ribbons, we've got a bullish ribbon on the monthly, we've got a bullish ribbon on the weekly, and we've got a bullish ribbon on the daily. And if we come down to the daily in the bottom right, we can see the bars are blue, telling us they're aligned. And if you look at where the stop loss is, guys, if I just compress the chart, if you look at where my trading stop loss is, you can see where it is in relation to this next trend that it's appearing. We start breaking out and getting new breakouts in the trend. That is a trend that could potentially move to $300, $400, $500 and so on over the next 12 months. Okay, next stock. Coca-Cola. As I mentioned earlier, Coca-Cola is a stock that when in July and August, when the S&P was declining, Coca-Cola continued to move up and it actually set record highs. So we can see that it has a bullish ribbon on the monthly, bullish ribbon on the weekly, the trend is green, bullish ribbon on the weekly, come down to the daily time frame as well, trend filter is green, and bullish ribbon. So we have that multi-time frame alignment between the monthly, weekly, and the daily. If I just open up the daily itself, guys, you can see that here is in July when it broke out, started setting record highs, when the S&P, the Nasdaq, the Dow, they were all declining. Coca-Cola has climbed quite nicely. So again, it shows the importance of being diversified and not being so heavy in the IT sector. And again, you've got all your parameters in the daily bottom right, entry point, stop losses, levels where you can compound, trailing stop losses, the quality of the breakout signals, all there for you. MasterCard. Don't know how many of you guys are looking at MasterCard as a stock, but it is a real powerhouse. A real powerhouse of a stock, and it is now setting record highs around that $500 mark. You can see the ribbon is bullish on the monthly, bullish on the weekly, bullish on the daily. And if you come down to the daily in the bottom right, you can see there's multi-time frame alignment in place, and it's now starting to give its first quality, high probability breakout signal. If you look at the breakout signals prior to that, there were circles. So it's telling us that actually you may want to be a little bit patient here and wait for the right time to enter. And it's now starting to produce that environment. A breakout above $500, a convincing breakout above $500, and we could potentially see MasterCard target $1,000. And often people will say, well, you know, how high can a stock go? Well, Nvidia, $1,000 before, $1,200 before its 10-to-1 stock split. Chipotle Mexican Grill, $3,200 before the 50-to-1 stock split earlier this year. Berkshire Hathaway A-class shares are trading at $700,000 a share. So how high can a stock go? Well, that's not for us to predict. It's simply to allow the stock to dictate, and we follow along without questions, because if it's giving us profit, who are we to question? PKG, Packaging America, again, not a stock that I wasn't familiar with until it came up, but again, a real heavyweight of a stock. Bullish on the monthly, bullish on the weekly, bullish on the daily. If I open up the daily in the bottom right, the bars have been aligned, the timeframes have been aligned since July, and it's producing these breakout signals now since August, telling us that this stock is likely to continue moving up. So again, a real heavyweight of a stock. I think I've got one more for you. Let me just have a quick look. Yes, Sherwin-Williams. Again, a stock that I wasn't familiar with till it popped up on the Explorers. Solid history of performance, just broken out of a long-term consolidation. So the high of that is December 2021. So it's only just broken out. So you're looking at a 3-year, pretty much a 3-year period of consolidation is now breaking out from that consolidation. Start of the next run, which could see this move to $500 and beyond. The ribbon is bullish on the monthly, bullish on the weekly, bullish on the daily. If I open up the daily in the bottom right, you can see we have that multi-time frame alignment, and the software is now starting to produce entry points. This is already in my portfolio. I've recently added it to the other stocks that are already in there. Okay, guys, I hope that really gave you a sense of my process. I start with the Explorers, create the shortlist, put the shortlist into, save the shortlist, add the chart, get them into the 4-screen setup, do my analysis, and then start adding those stocks into my portfolio, and then using the daily in the bottom right to manage and compound. Very simple, straightforward, and systematic. Okay, I'm aware of the time, so just to summarize, this is how the MAT works. I have a 3-step blueprint. First, I want to pinpoint when to invest. So that's where the market conditions come in, and I look at the S&P 500. If it's bullish, I look for bullish stocks. If it's neutral, I stand aside, although there's always stocks that are moving up, so I can still invest. If it's a bearish environment like 2000, 2008, I will short the market. Step 2, identify top trending stocks to invest in. So that's where the Explorers come in. And then step 3, invest using a proven trend following strategy. And that's really strategy execution, everything that I've just gone through: entry points, stop losses, risk management, trailing stop losses, compounding. All of that is all inbuilt into the MAT. There's no guesswork here. There's nothing for you to create. It's all been done. It's all been back tested. It's all been used live. And it's what ultimately helped me get my hedge fund created and domiciled in Luxembourg last year. So this is a proven system. Ooh, excuse me. Right. So this is your edge. Use the explorers to scan for the best performing stocks. Use the 4-screen setup to shortlist the best stocks. I break them down into tier A and tier B. Tier A is what makes it into my portfolio. Tier B is a watch list of stocks. Create a risk management framework. Typically, I don't risk more than 2% per position. I then use the daily bottom right to place positions in my broker account. This is where the manual element comes in. This is a perfect combination of technology and human discretion. There is no AI involved because AI is not intuitive enough to do what we do. Your brain is far more comprehensive. It just needs to be trained a little bit. I then place a set of positions, let's say 10 stocks. I cut out the losers with no more than a 1% loss or 2% loss. I then strategically hold and I compound those winners. And then I manage using the trailing stop loss. I typically hold and compound over 12 to 18 months before I take profit and rebalance. I then repeat the process. And here's a point that people overlook. Financial literacy is low. We're not taught about this in schools. We're just taught to build careers. So someone has to get on top of this. Someone has to learn to build a legacy and then pass that legacy onto their loved ones, their kids, to carry on their hard work. Because the day we leave, our kids will be left in the same situation, which is in a state of financial illiteracy and constantly giving money away to the institutions and to the banking system. What you want is to take control of that situation. And so this is really where you want to take hold of the situation, get on top of this, learn it, do the hard work, and then train your kids and loved ones to carry on your legacy. Something to be really, really proud of. Okay. 16 explorers, 16 expert advisors, 11 bespoke indicators, 11 templates, detailed manual explaining everything, and an excellent support structure from myself here at Sublime Trading, my team, and Metastock. This is priced at $199 a month. Currently, $99 a month. That's a lifetime. When we start putting the prices up, this will not go up. You will stay on the $99 a month price tag. And also, there is a one-time offer which the sales team can run you through as well. There is an offer on the one-time offer. In addition to that, you'll get a one-to-one onboarding call with myself so that we can discuss your portfolio, see how you're getting on and how the MAT can come in and help you. And you've also got a private community to discuss daily setups. Ultimately, guys, people at this point normally say how much it's worth. But what I would say is that this system is priceless. The reason why it's priceless is because it's helped me get millions under management. We have 7 figures currently under management since last year. And that is all due to this system that we have created. So once again, guys, it is $99 a month. Over to you, Jeff.
All right. Great job, Zaheer. And congratulations on the hedge fund. I hadn't heard that yet.
Yes, we call it the Reversy Fund.
Awesome. Leslie, do you have time for just a couple questions?
Yes, please. Yeah.
All right. Returning officer from India wants to know what is the difference between this strategy and Elliott wave theory.
Well, Elliott waves is just a theory, right? It's just a way of counting. So you look at a chart and you try and look at where wave 1, wave 2, wave 3 is, and then also where the ABCD corrections come in. What the challenge with things like Elliott waves is that it's very subjective. With the tools that we've created with the MAT, we remove that subjectivity as much as possible and have a very, very systematic approach that makes it far simpler to understand when the start of trends are. So that's the first thing. And then secondly, there is a strategy that's actually built into the MAT. So you've got your entry points, you've got your stop losses, your risk management, your trailing stop losses, your compound levels. That's all built into the MAT. Elliott wave theory is just counting waves. It's not really a strategy.
I like the old adage that you could give a room full of Elliotticians the chart and have a room full of different counts.
Absolutely. Yeah, exactly.
Kirby wants to know, I think you said over diversification kills portfolios, but you also say typically 2% per position.
Yes.
How do these things tie together?
Well, it goes back to the example that I gave earlier. Over diversification is, let's say, if you have 20 individual positions. Now, some of those will perform well, some of them won't perform well. But instead of over diversifying across 20 individual positions, what you want to do is find just the best trending stocks. Let's say really good 5 stocks that I've covered right now. MasterCard, Waste Connection, Coca-Cola, Fiserv. CBOE. Those are 5 really good stocks. Now I've got them in my portfolio. They're all performing well. Instead of adding to that with an unknown stock, I'm just going to keep holding these stocks. And as they keep on moving up, I'm going to keep buying more of them. How do I buy more of them? By adding 1% or 2% position. So keeping that position sizing and just adding more of that stock. So I'm concentrated. I have diversified to a certain extent because sector rotation comes in, but I'm not diversifying for the sake of diversifying. I'm focusing on winning stocks from the right sectors and then repeatedly buying them. So it's concentrating across a smaller diversification of stocks rather than diversifying for the sake of it.
Okay, thank you. Brad wants to know, do you use ATR stops when you actually put on a position?
Yeah, spot on. So the ATR stop loss and the trading stop loss is all based on an ATR formula. So volatility, as I mentioned earlier, is the stop losses are based on the volatility of each individual asset, and that of course is ATR.
All right. Kirby says, I got it. I understand. Thank you for the
fantastic. Great question. Great question.
Let's see. Eric wants to know, does this support anything but meta stock?
Oh, I don't understand the question.
He wants to know specifically, does this work in Thinkorswim or does he need meta stock?
Oh, absolutely. I mean, I've never used Thinkorswim, so I can't comment on it, but we have used meta stock forever. So for us,
I love how you use scanning because I think it's what we do best, for sure.
And that is absolutely true because we've used other platforms with scanners, and those scanners are extremely limiting. You don't have any limits with MetaStock. So credit where credit is due. MetaStock is phenomenal, and that's why we use it.
Mike, and I promise this is the last question just because time, but yes. Mike wants to know, would you add to a position on a dip or any other particular trigger? So when you're buying, is there any chance that you ladder into a position? Do you buy more on any particular trigger?
Yeah, absolutely. Absolutely. Great question. So, but I only add to winning positions. So let's say I buy Coca-Cola. Coca-Cola has moved up. My 1% risk is now, say, a 2% or 3% profit. A pullback comes in. I now look at that quality of the pullback. And, of course, we've got scanners that are scanning for pullbacks. So if the scanner picks up a good pullback, I will add to Coca-Cola, which is in profit, on the pullback. But if that pullback isn't a good quality pullback, I'll wait for the breakout. So absolutely, but only add to winning positions. So if I've got Coca-Cola and Coca-Cola is in negative, my first position is still in negative, I'm not going to add any positions because you're just adding to losses, and adding to losses can ultimately add up and really sort of do damage to your bottom line. So only add to winning positions, whether that's a breakout or a pullback.
All right. Thank you very much, Zaheer. I'm going to go ahead and just kind of give out the websites and the address, and then going to move on. You did a great job.
Thank you.
Really
Thanks for having me.
All right. Let me go ahead and do this.
Thank you.
Zaheer, thank you very much.
Thank you.
All right. Go ahead and do this. Okay. So, before we do that, Mike, thank you for the comment. Very nice. If you want to take advantage of this, here, I'm going to turn on my camera before Greg tells me to. If you want to take advantage of this, normally the price is $199 per month. As part of this conference, it's $99 per month. That's a locked-in price. You get it forever. And you'll also get access to their community portal, a trial to Metastock if you need it. Eric, if you want to try out Metastock for free, we'll give you a free trial. So there's a number of ways you can do this. You can find out why it's been rated #1 for 31 years straight. Metastock.com/conf promo, 800-882-3040, metastock.com/saleschat. With a trial to Metastock, just because I know some of you don't have Metastock yet, you're going to get all the data you need to run it. You're going to get our access to our support staff, which is right over there. They do a great job. You'll have actually somebody sit down and walk you through the program. Lots of training that's available on the Mac community as part of how to get running with Sublime. Awesome package. Metastock.com/conf promo, 800-882-3040, or metastock.com/saleschat. So big, huge thanks to them. Of course, we are Metastock. Been rated #1 31 years in a row. Helps you scan markets, test trading ideas. We've got a patented forecaster that we're going to talk about tomorrow. Real-time alerts, commentary, all of the pricing starts at like $69 a month. Metastock.com/conf promo. Metastock.com/sales chat, or give us a call. We'd be happy to send you more information. Make sure that this is something that works well for you. 800-882-3040. Real quick shout out to one of our sponsors, AAII. Let me reset that a second. AAII.com. Great nonprofit organization. They've been helping traders. They do the AAII investment survey very, very often. They do a lot of research reports, a lot of stuff. Really cool organization. AAII.com. So our next presenter is Fausto Pugliese. Satish says, do we have Metastock conference offer for promotion for India? Yeah, metastock.com/conf promo is where all of the promotions are. Satish, thank you. Fausto, how am I going to introduce you today? Well, okay, so Fausto is so dedicated to his job that right before his wife gave birth, he did a webinar with us. Right before. Right and before. He lived to tell the tale.
Well, listen, I'm so committed to you guys, and you know what? It's I hope I have no women out there upset with it. Wait a minute, you did it before. Well, she wasn't too far from, but listen, I love just teaching people. I just love, and you know what? I know how hard and how much is involved to do this. But it was fine. I got there in time, 30 minutes. It worked out great, Jeff. But
Fausto, should I take that story out of the rotation?
No, well, you listen, you got other ones in there. I mean, we go way, way back. I mean, I don't know how long it's been, like 25 years now. I mean, it's like, who's counting?
Yeah, not me. I forgot how. It's been, I'm so old. Fausto's going to talk about level 3. By far, if you're interested in kind of looking at where market makers are lining up, Fausto is the guy to listen to. He knows it in and out. I'm going to go ahead and get out of the way, Fausto. It's your turn.
Yeah, no problem. Just I need to give me access to share the screen.
Oh, well, okay, if you insist.
You did that.
Okay, here it comes.
Oh, there we go. Perfect.
I'll let you know we can see it too. And then I'll get out of the way.
Now you can get out of the way.
All right. My job here is done. I'll see you in a minute.
Thanks, Jeff. Thanks for that great introduction, everyone. And welcome, everybody. And like he said, my name is Fausto. I've been doing this for over 30 years. And what I'm going to do is I'm going to talk about how to identify false breakouts and avoid the trap, like just how Jeff told you. I'm one of the original day traders. I live here in New York. I was trained by some of the best traders in the world. I'm going to show you some things that are moving in the market. Actually, what I'm also going to do is I'm going to, if anyone wants to give me some stocks, I'm going to show you how to use it. You could apply this towards anything. If you're a day trader, swing trader, options trader, hell, you can even do this for futures trading if you want to. So got a lot to cover. And then what I'm planning on doing is I want to invite all of you how to get this stuff. I'm going to give you my book. I'm going to show you where to get the data, everything, which is awesome. But I love Metastock. I mean, Jeff and everyone there at Metastock, I've been doing this for a very long time. And listen, one thing that's great about these events, you're going to meet great presenters, great gurus, and you really should try a little bit of everybody's stuff. That's the most important thing. But this is what we're going to really be covering. We're going to talk about how to follow the big money. Now, why is that? Well, I guess if I ask anyone this question, we all could probably agree the way things go up and go down is buyers and sellers. I'm going to show you how to read the future. I know it sounds crazy, but you're going to see it. It's not that hard. I'm going to show you the tools that you need to do it, the best times to trade when to do it, and more or less how to do it as being an overall round trader, depending on where you are in the world. You could do this West Coast, East Coast, Europe, whatever it is. I came back from Greece a couple of weeks ago and I was trading. I'm like, wow, this is pretty cool. I'm 7 hours ahead. So I get to enjoy the beach. And then I was done. I used to come back at like 6 o'clock at night and like, okay, day's over. Works out great. So there's always a good time to trade for everyone. Now, regarding about what we're going to be covering, I'm going to talk about the Magnificent Sevens. All right. Now, there are over 25,000 stocks in the world that are trading. Okay. So you can't trade them all, but I'll show you where to find them. I'll show you which one's going to give you the least amount of risk with the high amount of reward. Now, my style that I'm going to teach you is not, I didn't invent this. It's not the Fausto Nachi, whatever it is, the Fausto MACD, whatever it is. This is actually how Wall Street traders trade. This is how market makers trade, the traders in those trading firms. You could apply this towards anything. It's not that complicated. It does get a little complicated if you deal with fast-moving stocks, but I'll show you some small ones and so on. Now, let's go to the live markets. Let's just have some fun right now, and I'll show you where we're going with this, all right? So right here, we're looking at just a regular basic execution system. And what I have right here is I have the level 2 quotes, which we're going to talk about. We got time and sales. We got a one-day chart, an intraday chart, and a watch list, and the big percentage gainers and losers. Now, what's nice about the Metastock is they all have this platform. It's great. It's a top 20 list. This is really what we go by. Now, listen, I really don't care what we trade, okay? And neither should you. What you should care about is how to risk the least amount of money with the high amount of reward. And, you know, you could see PLTR has been doing really, really well lately. You can see it here since August. The stock was at 22. It's up to about 37. And today it's on a downtrend. It's like, okay, well, it's been up. Why is it going down? Well, I'm going to talk about that. I'm going to tell you why it's going down, okay? And why you should be shorting the stock and not thinking it's going to break new highs. Because there's a reason why. What makes them go up? What makes them go down? Buyers and sellers. Now, they do this on every stock, just like NVIDIA. You know, you're probably looking at NVIDIA, and I don't know if anyone here follows me on YouTube or Instagram or TikTok, but I do a lot of videos on NVIDIA. I show you exactly what made it go up today, why it made it go down today, what the trend is. I got a video that went viral on NVIDIA, got over 1 million views on it, and all on NVIDIA. And because I tell you where the worst times and best times to trade. We'll talk about Tesla. We'll talk about how to trade that, all these good things. But there are a lot of stocks that are moving. But the key, what I'm going to do here at this day is I'm going to show you this. Okay, this right here, ladies and gentlemen, is my professional trading room. And right here on the left-hand side, you can see all my instructors that work for us and all the students around the entire world. Now, as of right now, we have about 173 people in there. You could see the trades right here. We're talking about it. We do live commentary the first hour and the last hour. But what I want you to focus on is look at the stock BILI. Did anyone see the stock BILI? I mean, here we're talking about Tesla, Intel. We're talking about all these. What is BILI? Why is the stock going up? You know, let me bring it up here. BILI. Wow, interesting. Up 13%. Stock went from $17.40 all the way up to $18. Nice little move, right? Did you see this other? There was another stock that made a big move this morning. BNZI. Stock went this morning, went from $4 all the way to $11. Wow, that's even better. That's almost, I don't know, 300%. I mean, it's up almost 100 right now because it's on a downtrend. But why did it stop at 11? Why is it now at 7? What made it run from this price? These are things we're going to talk about, okay, and show you. Now, I know we don't have too much time, but trust me, I'll teach you to be a better trader within 10 to 15 minutes. So with that said, let me just move this down and let's get right to it. Now, like I told you, I'm going to invite all of you guys to come into my trading room for a week. I can't teach you how to make money in about an hour, okay, in the next 30 minutes. But if I spark your interest, you definitely want to register, and I'm going to give you training courses. I'm going to give you access to the trading room. You could talk to my staff, everything. And like I said, at the end of the presentation. So my question to everybody is like, you have to ask yourself and be honest with you. How long have you been investing for? I mean, taking it very seriously. Now, for me, I tell everybody this. If you've been trading for 2 to 3 months and you're not really making money or don't really get it, you got 2 issues. Number one, you probably didn't have a good guru, a good trainer, or 2, it's just not your style. So for everybody here, you know, listen, I am an actual swing trader, day trader. People like, well, I do futures. Okay, great. That's great you do futures, but are you making money? I mean, are you really making money? If you have it figured out, have you really making money trading options? Are you really making money trading crypto? So when it comes down to it, if you're just starting out, if you're not being very successful within 2-3 months, listen, it's a great job, great business. You're probably in the wrong just market or have the wrong mentor. Now, the other reason why people fail is 90% of the people fail just on this alone, okay? Who really trained you? Now, I'm going to do something really cool here, okay? Let me do something really cool. Hold on a second. Okay. Okay, hold on a second. Okay, so does anyone here use ChatGTP? Okay. All right, so what I want to show you right here is I'm going to bring this up right here. Now, I asked ChatGTP right here. It's coming up right now. Okay. What is the percent of traders that make money without training? Now, if you read right here, it says small percentage consider make money without formal training education. Various studies show that around 90-95% of the retail traders lose money in trading. You got a 5 to 10% chance to succeed. Now, obviously, you're not going to be part of that 90-95% because you're here, right? Think about what the competition. Why would you want to be in this business? All right, it's like you have almost, you're like guaranteed to lose money. Now, if we ask, what is the percent? That do get training. Now watch what ends up happening. Region success rate obviously goes up. Now you're talking close to about a 10 to 20%. But it all depends on who trained you and what kind of style you're doing. And it's pretty cool. I like ChatGTP, and I always kind of ask these questions. So the question is, who trained you and who taught you how to do it? Now, let me explain something to you. I've been doing this for 35 years. I love what I do. I have a passion to teach people. I was trained by some of the best traders in the world. I'm actually featured at NASDAQ. I do a lot of presentations. I'm going to show you exactly how to trade on their system. And there's a reason why I do a lot of presentations for brokerage firms, exchanges, all this stuff, because if you know what you're doing, you're not going to be part of that 90 to 95% failure rate in training. Now, before I move any further, I'm going to do everyone a big favor right now. I want to give you my book. Okay, I'm not going to charge you. Okay, you could go to Amazon. You could pay me $47, and I could, split the profits with Wiley. But you know what? I want to be generous. I feel like if I could teach all of you something, it would make things better. So right there is my email address, Fausto@ctucorp.com. Why don't you, we just posted in the chat room. What I want you guys to do before we go any further, let's take about a minute because I know you got a lot of classes coming up. Open up your inbox. All right. Go into your inbox, and if you can right now, just type in Fausto P, and say, please send me your book. Please send me your book. All right, and just hit send.
Done.
And what's nice, it's a fast read. You guys are gonna like it. It's a fast read. It's color. It's everything. And I think you guys are gonna really enjoy it. It's gonna give you a good little head start. I think this is gonna get you past that 10%. Okay, just reading on that book. Now, I've been teaching people. You could see these people just look just like you. I love training people. I love making people very successful. I'm married, 3 wonderful boys. You obviously heard what Jeff said. That's my wife, and my oldest son right there. That's the one that I basically was my firstborn that I did the event with. So I don't know if Jeff knew who that was, but there he is right there. But I love what I do. I also have a home living channel, which I love to do. I cook, I garden, I background chickens. But the thing is this, the reason why I'm telling you this is that I want you to let you know I am human just like you, okay? But I couldn't do those things that I did unless I became very successful at trading. That's why I love trading, and that's why I love telling everybody, you can do this. You just got to know how to play the game of trading. Got to have the right tools, got to have the right education. You got to surround yourself with good people. Now, we all know what happened with the Federal Reserve. They lowered interest rates. It was over 0.5%. You see here that we've been having big rallies in the market. Some of you are probably encountering this situation. Who here could say you're selling, you're getting out of your winners too soon and you're holding your losers too long? Well, I'm going to cover that. I'm going to talk a lot about that. By the way, just a couple little shout outs. I see a lot of you guys just sent me an email. Rumpel, I just got yours. Rue, I don't know who this is. NJ, Steven, thank you very much. David, Jack, got your book? Good. Good to see you guys all sending it in. Perfect. All right. Now, what's nice about the book too, you'll get a little bit of a heads up with what we're talking about. Now the next big thing is this. Are you ready? What's going to come up next in the market? All right. Well, listen, you got to follow the big boys. I mean, listen, I was just in Toronto and I did a 2 weeks ago, I think. Yeah, 2 weeks ago I was there. Was it 2 weeks? Yeah, I guess so. Yeah, 2 weeks already. So I was just in Toronto. I was at the Money Show. I did a presentation, had over 100 people that were there talking about how to follow the big orders. And let me tell you, man, when I hear the people, the audience, how much they just love that, they said, Fausto, why can't they have more people like this talking about it? Well, listen, that's why I love teaching you all, because a lot of people fail in the industry. And the thing is this, you just got to follow the big boys, just like these people you see on the screen. I'm going to show you how we do it. So now what I need everybody's 110% attention, because what I'm about to show you now, you're going to see how Wall Street really does work, okay? And it's just going to make your life a lot easier. Now, we're going to talk about two systems. We're going to talk about level 3 and level 4. Now, I'm going to show you where to get it, okay? And you're going to love it. It's free. It's great. You're going to see how these exchanges work. And like I told you, I'm going to invite all of you guys to come into my trading room, and you're going to see how we use it live. I want to start off with something called level 2 before we get to level 3 and level 4. Now, level 2, listen, everyone here has level 2, okay? And basically, I'm going to have my little pointer over here. Let me draw a couple of things. Let me explain to you how to read level 2. I know some people probably already do, but let me just kind of just make sure that we're all on the same page. All right, there we go. I got my crowns. Okay, so these are your buyers. That's the bid. And these are your sellers. Okay, and you got 3 columns. The first column is a 4-letter abbreviation of a brokerage firm or an exchange. The second column is the price, and the third column is the amount of shares that they want to buy. Everything's multiplied by 100. Whoever wants to buy for the most amount of money is up on top. Whoever wants to buy for less money is down at the bottom. So what you're seeing is a negotiated market where people want to buy and sell the stock for. Okay, sounds amazing, right? It's like, great. Some of you probably even have it, but you probably don't use it because you're probably saying, oh, it moves too fast. I don't understand, you know, and it is, and you're wrong. And let me tell you even something even that you might not even know. It's been outdated since the 1990s. Okay, so it's really kind of not really beneficial. Now, what is beneficial is what we're going to talk about right now. Is something called basically NASDAQ book viewer. So AK, I call it level 3. Now, this is basically going to tell you where, well, let me put it this way. NASDAQ controls about 50% of the volume in the market. So imagine you were in the market and you could actually watch where 50% of the orders are around the entire world. Hell, you'd just be happy just to even know that there were orders out there you could even see. You can. And that's why if any of you here subscribe to my channel on YouTube or Instagram or TikTok, I have tons of videos on this. And like I said, I'm really short for time, but I'll do the best that I can to kind of give you just scratch the surface so you can understand the basics of it. So let me explain to you what we're looking at. It's the same thing like level 2, but there's more. See, level 2, you are only seeing what that stock is trading at that exchange. Now there's the New York Stock Exchange, you know, you got the CBOE, you got ECNs out there. There are other places that you could trade orders. You're seeing every buyer and every seller in the entire world that is trading the video, okay? Every buyer. And you're seeing who's paying the most and who's paying the least. Who's selling it for the least and who's selling for the most. You're seeing every single order. It's almost similar to like when you look at, if you trade options and you see the strike prices, you know, but now those are strike prices, but those are orders where you could buy it and sell it. These are actually every future order out there in the entire world that are trading the video. And by the way, I'm going to show you a hell of a lot more. So I don't want to, spoil it, but let me explain to you in more detail. All right, because we're going to show you a couple examples here. So let's look at how we utilize this data. So we're looking at Tesla, for example. So Tesla, you could see it's coming down, right? Start around 1050, it's at around 2290, right? $229. Stops right around this 2270, $227. Hits $272, goes up back to 230. Now, why did it stop at 227? Why not 225? Why not 280? Why that number specifically? Well, what makes a support level must be buyers out there, okay? There's no other reason why. It's not Mr. Fibonacci or MACD. It's a buyer. It's support. Support and made that there are buyers out there holding it and looking to buy it. Now, if you look over here on the NASDAQ book viewer, which I know the writing's a little small and I blew up on top, but when you get at $227, you have 217,000 shares looking to be bought there at 14 and 14 orders out there. Now, how much money is that? You bring up my calculator. You are talking about 217,000 times $227. So you're talking there's over $50 million that are looking to be bought at $227. Now, there are buyers at all different prices. Look, you got 1,000 share buyers, 1,500, 2,000. So when you're looking at all the orders, you're probably wondering like, okay, there's so many buyers out there. Yeah, but 95% of them are not necessary, okay? What is necessary is that big order out there. And that big order out there is what makes the big support level that you always wondered how does that actually come to fruition? Well, it's because of that. Now, so let's look at another example, okay? Hold on. PLTR, big resistance levels, goes from 35.80 all the way up to close to 37, right around 2 o'clock, and it comes back down to 36.40. Why did it stop at 37? Why not 38? Why not 40? Why not 36? Well, it's a resistance. But resistance does not exist unless the sellers are out there that make that resistance. So when you look over here on the sell side, you got about 167,000 shares. You got 65 orders out there at that 37. Now, let's think about this for a second, fellow traders. Do you really think you know more than the 167,000 share seller out there? And yes, by the way, those are real, okay? And if you don't believe me, at the end of the presentation, when I invite you in my trading room, if you want to use your money, which is, I don't know if you guys have, what is that? 37 times 167,000 shares. I don't know if you guys got about $6 million in your account, but if you want to test it out, we'll go test it out. Okay? So let me just tell you, they are real. Okay? Now, how many of you out there, I'm going to say it again, feel like every time you sell a stock, the damn thing goes up? Or every time you buy a stock, it goes down, right? You ever feel like that? Like somebody's watching you? Well, let me give you a little history. Nobody's watching you. You're just not watching them. That's what you have to look at as a trader. And let me tell you, when I started 30 years ago, I was, I'm 50. Oh, my birthday just passed. Actually, I'm 53 now. I was like 22 years old. I was just an ignorant kid. I thought I knew everything. And we all know 22-year-olds, a lot of us are older. You feel like, we all think we were unstoppable back then. We all think we knew. Let me tell you, I blew up 2 accounts, but finally living in New York and being very fortunate that my dad was able to, first generation Italian, I'm first generation. He came here, was a gardener. Thank God he had somebody he knew that he was cutting their grass. Was a big trader, and he said, you said, Mr. Pugliese, I like you. I want your son not to cut grass. I want him to be successful. I'm going to take him under my wing. I'm going to have him come work for me. And let me tell you, what I learned on the first day on the job, when I saw this stuff, I'm like, how could anybody not want to know this stuff? You know what I mean? Like, how much smarter and better trading decisions if you just knew where the street was? where BlackRock was, where Goldman Sachs was, where the institutions are. Hell, you're probably even hearing something, where's AI? All right, it's not just AI. It's the high frequency trades, the algorithms, the dark pools, which, by the way, you're going to get that in my book too. Okay. Let's go over a couple of examples that we traded just yesterday, right? A couple of stocks. AVGO, right? The stock is going down. Now, you ever own a position, the stock's going down, you're like, oh my God, I don't want to lose any. And let's say you bought it. What is going to prevent the stock from going lower? It's, what's going to say, oh, do I sell it now? Do I hold it? Is this thing going to zero? Well, you got to know where the buyers are. So when we go to the exchange and we say, okay, well, they must know more than me. I need to find the orders. I notice that there's a 95,000 share buyer right at 162. Now we're at 163.60. So let me tell you something, like it or not, that stock is going to go to 162. Okay. Because the 200 share buyer is not going to help out, and neither is the 1,000 share. But that 95,000, listen, when you look at all those orders out there and you see a lot of 2-3 digit numbers and you're dealing with a 5-digit number, I think I'll take that more seriously, because that's the only reason why the stock is going to bounce. And sure enough, look what ended up happening. Went down to 62 and shot up to 165. And don't tell me you've never seen that before. It happens all the time. And I'm going to show it to you in the live market hours in the next few moments. Okay, so don't worry about that. Let's go look at NVIDIA. Same thing. NVIDIA is going down. The trend is your friend. You don't buck the trend. You probably heard that 1,000 times. Okay, well, bottom line is, when is it going to stop? NVIDIA is going back to zero. Where's it going back? I mean, NVIDIA had a great run up, right? Well, you got to see where the orders are. And when I work my way down and I'm at 114, 59, I'm like, okay, well, oh crap. There's a 140,000 share buyer at 113.85. I mean, I don't know about you, but in theory, I would say that's support levels. Well, guess what? What do you think happens next? Stock went right there and shot up to 115. Like I said, don't tell me that has never happened to you before. It probably happens all the time. You're like, I don't understand. I just sold the damn thing, and and as soon as I sell it, it goes up. I mean, I couldn't take the loss anymore, or maybe you got stopped out. The way you get stopped out, if you break through support levels, okay? And the only way you will break through a support level is two things that could happen. The buyer gets executed, or he wasn't there in the future. And that's the things we're going to cover when you come into my trading room. We'll talk about that. Right now, I'm just teaching you basic, 101 support and resistance levels, buyers and sellers. Now, let's think about it, traders. When's the last time you knew where those 100,000 share buyers? How much smarter and better trading decisions will you make if you were able to see those buyers and sellers out there? Because I was completely amazed. And let me tell you, nothing really has changed. 30 years ago when I started till today, the only difference, believe it or not, is back then you just had to be licensed as a trader. You had to pass your 7, your 63 license. You had to work for somebody. You had to split the profits with them. I had to go commute back into the city. I had to pay $25 a ticket. Today, what's it costing you? The tickets are free. You don't got to be licensed to do this anymore. And so nothing really has changed. And now they're actually giving the data to you giving you the data. How about when a stock hits a top? Okay, let's look at a stock hits a top. So here you have Apple. It's going up, right? Trend is going up. I'm going to show you another one. Well, guess what? You're working your way down. Need to know where the top is. You may want to take a profit, because we're always looking to take profits. And a lot of you are not really doing it. And sometimes you wish you did. But when you look at a stock like Apple, listen, if those 22,000 shares are looking to get out on the sell order, I'm not going to question that. Okay. And you know what? If I didn't, boom, the stock goes down. So they do it on all these stocks. And I'm just talking about the fabulous 7. I didn't even talk about some easier ones, less expensive ones. Let's go check Moderna. Morning runner, nice big runner up, 69 all the way to 75. And you're like, oh my God, we're making so much money. Well, guess what? Now you get into that big, you're like, how could it run up so much? Do I take my profit? Well, listen, you got 100,000 shares sellers sitting there at 75.40. I don't know about you, but look what ended up happening. Hit 75.40 up to the penny and came right back down to 72. So I can go on and on and on showing you over and over again. And like I told you, I'll invite all of you to kind of see it live in my trading room, not including you're going to read a little bit more about in the book. But just to let you know, what we call these are iceberg orders. That's what they call big block orders. Now, I came up with that word after watching the movie Titanic. I think, wow, what a sad story. Titanic hits an iceberg order, and all those people died. Well, listen, you don't want to hit an iceberg, and you probably did once before, and you probably didn't realize you hit it because no one really ever taught you. Okay, but it's not what's on the top of the water, it's what's at the bottom of the water. And most people don't have the right tools or didn't think of it to, look on the bottom. And the bottom is those orders because you can't see them. They're not the big orders up on top. They're on the way in the bottom. Now, what happens when a stock breaks through an iceberg order? Now, listen, you could break through iceberg orders all the time, okay? And you could see an order like this with 63,000 shares, and all of a sudden you're talking about 1,200 orders out there. They could break it. Listen, resistance levels break resistance all the time. But the thing is this, when you break a resistance, there's another resistance. So there are always going to be new orders out there. Now you're going to come up to the next biggest iceberg order of 100,000 shares. And you know what? You break through one, you're going to test another one. And like it or not, it's going to go to that next resistance levels. And then all of a sudden, you wake up and they're like, wait a minute. It broke through that resistance, and all of a sudden it came to another big resistance. And then sure enough, now you backed it down to 250, 254, and you're like, what the hell happened? I was breaking resistance levels. My Fibonacci's were doing great. Everything was awesome, and it happens. Well, guess what? Once again, if you're not following those orders, you're trading blind. Now, just to remind everybody here, I know we're looking more of a day trade, but you can do this on a swing trade. Absolutely. You could do this on a long-term trade. I'm going to show you in the next few moments in a live market, so don't worry about that, okay? But let me just remind everybody. I know some of you here, like, I'm not really a day trader. I don't have the time to do it. Well, listen, what happens over the course of the day will trickle into a swing trade. And what happens over the course of a couple of days, which is a swing trade, will turn into an investment. So if you want to know how to swing trade or invest better, you damn well better keep an eye on what's happening over the course of the day, because you don't see these orders out there, boom, you could lose your money just like that. And remember, like I said earlier, a lot of us always complain about the same thing. We sell our winners too soon and we hold our losers too long. Now, who here would like to get the book viewer? Okay, anybody here interested? All right, this is what I'm going to do. Okay, there's my email address. I'm going to give it to you again. All right, and there's my email. You guys have it. It's posted on the screen. And the reason why I bring this up is this. I really don't want to hide anything from you. I'm not going to tell you where to get it. You could get on the NASDAQ. This is not Fausto's indicator, okay? This is directly through the exchange. I don't work for the exchange, okay? I've done, my God, maybe 30, 40 presentations for them. But I have 2 videos I want to give you so you can watch how to use it. So when you're trading on your MetaStock platform and you trade with your brokerage firm, because some brokerage firms don't give it to you. Believe me, they don't want you to see what they do, okay? And that's another topic in itself I don't want to get into. But just send me an email, just like you did before. By the way, there's a bunch of you just emailed me for the book. Yeah, just go on my email, just go on your email and and just send me an email. Fausto. Just send me a book. NASDAQ book. Just whatever. Just write that. And make sure you write me your name. Because some of you, I hate calling people, I don't know your name. Just send me your name and I'll send it to me and boom, I'll get it. All right. So I'm going to give you 2 videos and I'll show you how to download it and get it. Because this is the big thing. It's not free. When I used to do this, it was about $1,000 a month to get the software. And now it costs $15. For $15 to see where 70% of the volume is like unheard of, right? So, and you're getting directly through the exchange. I know some of you ever watch TV and watch the financial station, you see the New York Stock Exchange, there's nobody there anymore. They don't have to because the exchanges took it away from them. They want to give it to everybody. You all have a seat on the exchange. Don't tell me you wouldn't pay $15 to have it, to walk on the New York Stock Exchange floor. Okay? You'd be like, I could do that? Yeah, you can. And I'm going to show you how to do it because now, like I said, that's what the exchange are doing right now. All right. So as everyone out there is filling that out, and some of you are dropping, giving it to me because these are all the great gifts I want to give all of you. It's why I love teaching people. Like I told you, I hate seeing people lose money. When I was in Toronto and you have all these people standing there, and they're all, that's why you're there, right? You want to see what you're doing wrong. Great traders never stop learning, but it takes sometimes, you have to listen to a couple of people till you see this. You're like, oh, now it makes sense. But let me show you a couple other things. Okay. If you thought level 3 was pretty cool, wait till I show you level 4 now. Okay. So there is a level 4 version. And basically what it is just now it's going to be on a heat map. All right. And now you can see exactly where the levels are and everything else, which is pretty cool. And I'll show you how it works. I'll show you a couple examples. Let's go to the market. All right. Let's look at NVIDIA. Now, NVIDIA, we're getting a big run up right now. Okay. All right. Now, NVIDIA just ran from 115 and it's at 119.50. Now the question everyone has to ask is this: why is it making such a big run right now? But that's not important. We know what is important. If you own it right now, your question is, where do I get out? Where do I get out? Because there's always, listen, the video was up at 140s, okay? It dropped down to 90. Where is the resistance? So let me show you. Here's level 4. And I want you to see this right here. Right here on the right-hand side is called the current order book. Oops, hold on. My pens. See right here? This right here is level 3. All right. And if you notice, these red lines are the bigger blocks of orders. Those are the iceberg orders. And if you look right here, let me kind of zoom up a little bit better for you. Hold on a second. Erase this. Okay. So let me bring this up. So you can see right here at 120, you're coming up to a 1.1 million share seller. Now listen, it just took out some other sellers out here. You could see the green balls? Those green balls are time and sales. Those orders, the big orders got filled. That big green ball means that this order right here, which was at the time was about 270,000. Okay, he got executed. That's how you had a breakout, right? But it's coming out to a really big seller over here, 1.1 million. So how much money is that? Just out of curiosity. 1, 6, 4, 6, 5, whatever. Regardless, doesn't matter. Times 120. So you come up to about $140 million worth of stock that's looking to be sold at 120. Now let's do the math. Do you want to, see if it breaks through 120? Let somebody else break 120. The stock if you own at 115 and went to 120, remember the game plan is to knowing where the resistance levels are. You got to know where the resistance levels are. Now, if we break it, no problem. If you're a swing trader, no problem. Where's the next resistance? You got another 1.2 million at 125. You got another 1.8 million at 130. Got even better. You got a 2 million share seller at 140, and you got another 1.7 million 150. You see how you could apply this towards a swing trade? Now watch this when I bring up now we're just looking at orders, right? We're just looking at orders. Now watch this when I bring up the chart. If I draw my trend lines, here's 120. Here's 125. Here is 130. Here is 135. and here is 140. So when you look at those, and let me zoom in. Maybe I can zoom in here a little bit better. Okay, there we go. So you can see a little bit better. So now you could see, like, listen, oh yeah, I know. I mean, it's obvious 140 is resistance, right? Oh, it's obvious that 135 is resistance. Oh, it's obvious 130 is resistance, okay? It's obvious 120 is resistance, right? Support, right? So you see how those supports and resistance levels are there? And you see this big wick right here? Like, wow, how did that thing go up so much? You know, like maybe it's the comeback to 130. It might, but let it break through 120 first, okay? Because we can always buy it back. Because when everyone soared here at 135, and the thing came all the way down here down to 90, and wonder why, and then like, oh, I'm going to come back. It's going to go back to 130. Here's the 160. You'll see. Then it obviously didn't. And you know what's pretty cool? I want to show you another thing really quick here. Hold on. When you guys have a chance, if you're not subscribed to my channel, I'm just going to bring up Instagram. Okay. Let me clear this out. Erase all. Okay. So we got like almost 100,000 followers on Instagram. And what I want to show you is this. Okay. This video right here, you can see these all, you can see I've been trading NVIDIA for a while and I really know how it trades. But this video right here is pretty cool. It's got like 900, you can see right there, it's got 900 and almost a million share trader. But look at this video. I don't know if you guys can listen to this, but I want to play this quick video really quick. Listen to this pretty quickly, okay? Hold on.
A really tough time at 125. Let's go check it out. You can see right from here, we were getting close to 125. Stock was trending down all day. We get down to that 125 and it gets closer and closer. Trending still is going lower. Finally, we get to 125 and you'll see that big iceberg order. He gets filled. Once he gets filled, all those big orders start disappearing. That seller was done. And look at the big trend, next support level, 120. If you want to survive in trading, you have to follow the big orders. And
so that basically, I don't know if you guys heard that, but that's basically how these big orders get affected. You know, you see those iceberg orders, you see where they are, and you know it's nicer on that chart. But you know what? I wouldn't be too concerned. You guys could hear the audio. Thanks a lot, Greg. You know, about level 4 and everything else and whatever. You could still do this on level 3. I mean, level 4 costs money, you know, and I'm not here to sell you stuff, okay, because it's not really necessary. But what is important is there are other things that can make things a little bit easier for you with your trading, but you got to start somewhere. So if you believe that there are big iceberg orders out there, hopefully this proved it. I'll do one more because we got a little time. Okay, we got a little more time. What was pretty good too? Intel was a pretty good one too. So here's Intel. Intel's been having a big run up too. Intel's been doing great. And you could see right here, actually, let's do Tesla. Everybody likes Tesla. Tesla's another good one. So you can see this is called program trading. I'll show you something very cool here too, okay? So right here down at the bottom, when this stuff kicked in right here, that's 930. And this is program trading. And you could see all these orders starting to show up. Look at all these orders, 280, 275, 270, 265. Look at all the program trading that some of you are like, wait, well, what does program trading mean? Well, if you want to know where the algorithms are, you could see them. But now you have a little sense of a direction and get an idea where the stock is going. Now, if you go here and so it makes it a little bit difficult to clear this out. And you bring up Tesla, you could see here that Tesla, you can see the resistance levels there at 254. You can see another big resistance levels here at 256. And when you go here, look at those orders, 257, 258, but the real big one's at 260. for about 395,000 shares. So, and you could see it when it got close to it, never want to get past those little lines that came up there. So there's a lot of orders. Now, if you notice, there's no buyers. Look, a lot of lines up on top, no real big heavy lines on the bottom. So Tesla, if you could see here, has been having a really, really nice run lately. You can see Tesla's been out to 180. Look, it's almost at right here, right? This big resistance. You see right there in a long-term trade. So you're like, oh yeah, that makes sense. It's 260 right there, maybe even 260, maybe even 270. But you're right, 270 is resistance. But you know what? 260 is the more big resistance. And how do we know that? We saw the big orders out there. That is how you need to trade today's markets, ladies and gentlemen. All right. So to get everyone's attention, I see a lot of you guys sent me emails about the book viewer. Gunther, I got yours. John, I got yours. Elliot, I got yours. Good. All right, good. So I'm glad I got everyone's attention. Everyone's happy here. All right. So just to finish up, everyone, so everybody get a chance to register and get ready for the next presenter. Just to let you know, CyberTrade University has been endorsed and I've done presentations for some of the biggest brokerage firms in the industry. You could see here, TradeStation, TastyWorks, Schwab, NASDAQ, Metastock, all these big brokerage firms. So we have a very big reputation in industry for doing this for over 30 years. Not only that, but you've probably never seen this before, but we have a 5-star rating on Google, okay, over 30 years. That's the kind of customer service we give everybody. That's the kind of reputation we have in the industry. So we've been very credible. That's why we do so many presentations with Metastock. They want to have reputable people here, and we love what we do, and I just love teaching people how to do it. Now, what's important here is, how could you all learn more? Well, like I told you, you could subscribe to my channels, which I think you guys are gonna love. I got over 3,000 videos just on YouTube alone, and and we do some nice quick little shorts and stuff like that. Just go on any of the channels, look up our name, and you'll find it. But what I want to offer all of you is this. I want to give you guys a little sample taste of joining me for a week in my trading room. Live commentary, watch lists, how to use the platform, everything. And all I'm asking for is $9. That's it, $9. Now, what you're going to get for the $9, if you have a phone, you could scan that little QR code right there in the bottom right there. Just turn on your camera. I'll bring you right there. Or you could type in c2.co/trial. We'll put that in the room if you can. And we do a lot, basically is what you're going to get. You're going to get full access to our trading room. You're going to get full access to our staff. You get our instructors. We're going to do live commentary. We're going to give you some workshops. And you know what? In a week, I'll give you $9 back if you feel like I waste your time. Now, some of you are like looking at like $9. Why is it so cheap? Listen, I don't need the $9. Okay, I lose money on $9. Okay, a lot of it. I just look for serious people. Okay, I mean, I know everyone here will register for free, but in this business, trading is not free. Okay, you really, and I'm not asking you to dish out thousands and thousands of dollars. Okay, $9 just tells me you're a real person or not. That's it. And what's nice about when you register, you'll get a Q&A. You'll get we'll even give you a quiz. You know what I mean? You're gonna actually talk to my staff on the phone. And actually as a bonus, I'll even throw this in. If you do register, I will even talk to you myself. Okay, I'll even give you a free coaching class. Now, why I would do that? Because I'm a person that feels like I'd rather be honest with you and knowing this is for you or not. And wouldn't you like to have a doctor at least consult before you actually go out there and go through the surgery? And that's the reason why I do things like that. So, it's a great start. Do we have things over on top of that? Absolutely. But I'm not here to talk about that. It's not important. Right now, it's important that I taught you level 3 and level 4. I taught you how to follow the orders. Now, if you like what you learned in 30 minutes, now why don't you come and join me for a whole week from 8 o'clock in the morning with pre-market up to 7:30, up to 4:30 in the afternoon, in the after hours, live trading all day long. All right. Now, before I go, does anyone have any questions I could answer for anybody here before we go?
We have a couple comments.
Oh, you got comments? Go ahead.
This ongoing session has enlightened me.
Say it again.
Satish says, this ongoing sessions have enlightened me. So, Satish, I'm glad you learned something.
Oh, is that a comment? Thank you very much.
It's a compliment, yes. Thanks.
Compliment. Thank you. Listen, like I said, I just love teaching. I had a guy, Jeff, that came up to me to show, and he said to me, he says, Fausto, I see you all the time. I mean, you make millions, you're a millionaire. Why you waste your time doing this? You know, like, meaning like, you're just a great trader. Why you teach? I said, well, I enjoy teaching people.
It's fun.
You know?
Yeah.
I
Right.
like it. And the guy's like, I don't understand. Like, why waste your time doing it? I'm like, why are you here? I said, listen, God always said in the Bible, he said, listen, you feed a man a fish for a day, you feed him for a day. You teach a man how to fish, you feed him for life. The market was very good to me, okay? And I feel like giving back to people because you saw from, I showed you on the ChatGTP, it's a 90 to 95% failure rate. And I hate seeing people that because, Jeff, you know, we've been through this all the time. Everyone always looks at us like, you know, oh, you're going to lose your money. People are very negative, and it's not. It's just not being properly educated. That's all.
Well, yeah, and I do think that's an experience that a lot of people actually go through. Is they come in, they just go, okay, Uncle Harry says, let's go do this, let's do it, you know, and they just, yeah.
Yeah.
Harry says, Fausto is full of enthusiasm. I was with him for a long time. Excellent mentor. Plan on joining him again in the near future.
Thank you very much. And you could actually read a lot more compliments like that on the Google reviews too. I think you guys will like that too. It's very important. You guys see that everybody there is just like you, you know, and I think it's important that, you know, and thanks for that compliment, you know, thanks for showing up.
Awesome. No, just the fact that people should go to ctu.co/trial, or you could click on the links, or you could get your phone out and do it on your phone.
Yeah.
Anyway.
Phone scan it. You know, we don't ask for, you know, really anything, just more or less. So just kind of just shows, let us know if you're a real person or not. But Jeff, thank you so much for having me. It's so great seeing you. And it's always been a pleasure. And I can promise you one thing. I'm not going to have any more babies. So I don't have to worry about me not making it here to something like that again.
Okay, that's good to know. Thank you so much, Fausto. I appreciate it.
Thanks a lot. Thanks for having me. Everybody enjoy the rest of the presentation. They got a lot of great speakers. Listen to them all. Try a little bit of everything. You're going to learn something, but just don't be ignorant. You got to learn before you can earn. All right. Thanks, everybody.
Thanks, Fausto. Looking great, too. All right. Oh, let's see. Okay, we're fine. All right, Mr. Lewis, I'm going to have you come help us real quick. Actually, we'll leave it here.
I am here.
All right. We're going to give away a prize.
Woo.
And this is a prize that will require me to go to the post office for the winner. So.
Okay.
All right. You can see my camera, right? I'm not sure where mine is.
I can see your desktop. It says join the community.
Okay.
You. Yes. Excuse me. I can also see you. Your camera.
Right.
Yeah. I can't actually see your camera. I can see you.
Okay.
With the image your camera's providing.
I understand. All right. Let's see. Oh, here's what we're going to give away. You know Steve Bigelow. Steve Bigelow is a great technician.
Of course.
Partner of ours. We absolutely love him. And he wrote a couple of really good books. This one is called The High Profit Candlestick Patterns. Candlestick Profit, Eliminating Emotions. And in addition to that, in addition to those two books, I'm going to give away one of his mouse pads, the major signals. And this has kind of like the doji and kind of the major signals, so you can kind of have it as a reference and also use it as a mouse pad. So all three of those I'm going to take to the post office and send off over to you. And we just need Greg to help us pick a winner. So Greg, if you don't mind, will you give me a number between 1 and 58 and 95? And we'll figure out.
I will. I'm using the Google random number generator because I've learned that if you try to randomly pull a number from your brain, you're never going to pull 1 and you're never going to pull 598. Those people have zero chance. But if you use a random number generator, which I'll do right now. Okay, the number is 5257.
5257.
I would have never guessed that high if I'd have done it randomly because I'd have been try to stick more to the middle.
Okay, yeah. So this is person
5257.
Cool. Joe R with a Gmail address in the USA. So there's a lot of Joes out there. Unfortunately, Kelly doesn't like it if I dox people on the internet. So we just go with the first name and the last initial. But Joe, I will reach out to you. If your name is Joe and you have a Gmail address and your initial is R, there's a good chance you just won. I'd say, I don't know how many Joes are in my list, but it's probably not more than 10%. All right. Greg, thank you for the assist.
You're welcome. Carry on.
I want to invite all of you to join a community that we're working on here. A partner, join our partner community. It's called thetradersforum.com. If you go there, you can sign up. You can go through lessons. You can chat with other traders about the markets. You can learn. Thetradersforum.com. Go check it out. It's cool. It's a new project. We're working on it with a partner company, thetradersforum.com. We'd love to have you there. In addition, here we are. We are Metastock. We've been talking a lot about Metastock today. Metastock's great at scanning. I've talked about how I like to use it to scan markets, find ideas, all that kind of stuff. You can use it to test markets. We're doing an extended trial here at the event. If you buy a month, we'll give you the second and third month for free. You can get that, as well as all of the offers that we've been talking about that we're selling here directly at Metastock. Metastock.com/conf promo, metastock.com/saleschat, or give us a call, 800-882-3040. And we'd be happy to answer any questions you've got, all of that kind of good stuff. So without further ado, the next guest we have is John Seville. John Seville is a good friend of mine too. I remember talking to John when we initially started to talk about, and one of the things that stands out to me about John is the name of his corporation is called Acorn Wealth Corporation. And I was like, well, that's a really cool, interesting name. He's like, yeah, what we like to do is we like to kind of take acorns and grow them into eggs, or grow them into oaks. Take traders and kind of develop them and kind of help them grow into great traders. I thought that was kind of cool, although I don't feel like he just explained it well. He's going to probably have to explain it better, but that's okay because he's right here. John, how are you doing? I do see your microphone came on, but I don't hear you.
Okay, how about now?
All right, that's better. Did you find the nemesis, the mute button?
Yeah. Well, this is the problem when you have so many different microphones. I have my desk studio microphone. I have my VR vision goggles microphone. I have my AirPods microphone. My Jabra workout.
Right. Yeah.
There's so many microphones. It bounces between them in the
most random way, right? Yeah, we always talk about how it's really kind of pretty difficult. Like when you want to find that mute button, it's always kind of the last thing you find. So I do see your screen, but I think I'm seeing a Camtasia screen.
Yep, yeah, 1 second here. It popped off the screen for a second. Okay. You should have it. You should have it there for you now.
Okay, perfect. All right, I'm going to get out of the way. John, it's all you.
Excellent. Okay, so everyone can hear me loud and clear, I hope. Now?
Absolutely, yes.
So, g'day, and we will jump on into things. And I've been sitting here listening to the previous speakers talking today, and I think you're going to really love what today's talk is all about. And I'm very, very excited because this is the first time ever anyone has ever heard me talk about this. It is something very special. We weren't sure if we're going to have it ready for today, but we pulled it off, and I'm thrilled to dive into it because it's very timely for what's going on in the market. And ties right into my favorite strategy, which all comes back to smart money trading. So quick hello to everybody familiar with the audience. Hello, and real quickly, we'll just go a quick disclaimer. This is for educational purposes only, not a recommendation to buy or sell any securities discussed. Acorn Wealth is not a registered financial advisor in any jurisdiction or province, so always be aware of the risks of trading before taking any action. I will certainly be talking about some positions today that I'm holding, and something that I'm very excited about. But once again, it is not financial advice. Past returns discussed do not guarantee future results, and always speak to a financial advisor before taking any kind of action. All right, so we're going to kick things off. Are you ready? Give me a 5 in the chat box, or your favorite number. We're going to dive right on into things, and we're going to talk through some things today, which I have a funny feeling that many of you will have not seen talked about at this level before. So if you've seen some of our talks before at the end of the year, at beginning of the year rather, or back here at Metastock earlier in the year, these are some issues we started to probe into, and we're going to dive even deeper today. So let's start with the market. This year has been, I suppose, no different to any year, but it's certainly been riddled with headlines. You know, inflation, rate hikes, AI advancements, energy prices. You know, it's been, and the directions that have been, or the forces that have been driving the market have not been necessarily broad spread. There has been a lot of focus on particular stocks and particular areas where the majority of that growth happened. And yes, you will hear the news and the pundits on TV and things like that talk about the Magnificent Seven, and that's where all the market's movement has been. But that's not entirely true at all. And we need to dig deeper into some of these issues to find where the pockets of strength, or the diamonds in the rough are, that I often refer to. So what has the market been doing? Well, let's dive into that. Let's firstly look at how we answer that question. Because one of the things that my mentor taught me in my early days, I started learning to trade 20 plus, well, gosh, I'm aging myself, 25 plus years ago now. It's all I've done for my teenage years, all the way through my adult career. I had one other job, which was working in a video store, and that was it. I've been in the market all my life. And one of the key things one of my mentors told me was that there's no such thing as the stock market. It's a market of individual stocks. So even me saying, what has the market been doing? There's problems with that. What is the market, right? One way we can look at what the market's been doing is we can look at price movement, or otherwise referred to as performance. This is the most common. Is the market going up? Is the index going up? Is the index going down? So let's start with the status quo. Let's start with looking at what the market's done. But I'm not even going to start by looking at what the S&P has been doing. I'm not even going to start with looking at the Dow. I'm going to just put that to the side and get right into what matters more. What matters more is what's moving in the market. Would you agree with that? Put a 1 in the chat box if that's ultimately more important. Not what the S&P is doing, but where the opportunities are within the market. Put a 1 in the chat box if you agree with that. I suppose unless you're invested only in the S&P ETF, that would be maybe one reason to think otherwise. But this is certainly our line of thinking. So when we take the onion layers back and we look at where the performance has been, over 6 months, utilities as a sector are up 18.73% over the last 6 months. Impressive. Real estate up 14.91%. Financial services up 10.25%. Now, every other sector in the market over the last 6 months underperformed. So Basic materials only up 1.38, energy only up 0.83, communications only up 0.66, industrials down 0.3, consumer defensives down -2, consumer cyclicals down 3.5, technology down 6.95, healthcare down 17%. So if 6 months ago you took the viewpoint that the market was bullish and you equally spread yourself across the sectors, you know, or through darts, what would you have actually performed at? Potentially, if you put your money in healthcare, technology, consumer cyclicals, and consumer defensive, you could have been watching the market going up and wondering why on earth you aren't making any money. Has anyone been in that boat? Anyone kind of felt that way this year? As we can see, the performance was certainly really within 2 top sectors or 3 top sectors out of 11. Now, let's go further. What about over 3 months? Real estate, the best performing sector over the last 3 months, up 14.52%, followed by utilities, followed by financials. The same 3. 1 month, utilities up 18.73, real estate up 14.91, financials up 10.25. The same 3, right? This has been some of the most important insights that I think people needed to be aware of at the beginning of this year. Are there any acorns in the room? Or anyone who joined us for some of our events earlier this year? If you did, these were things that we spoke about at great length, and I talked about why real estate was my absolute favorite sector for 2024, and it's where I've been most heavily invested in this year up until recently. So now all that's well and good, but that's what's now already happened. That's been the performance till now. But what about what's happening today? What's happening right now? What's potentially going to happen next? So if we take a look at the last 1 week, you'll notice that there's actually been a shift, right? Because the problem with performance is just because something's been the best sector for 6 months, 6 weeks, or 6 years doesn't mean it's going to be the best tomorrow, right? So we've always got to be thinking about where the money is going next. Where is that smart money flowing? It's because it's like an ocean. If we can see where the water's going, we can potentially predict where that next big movement may be. And for the area I'm going to be talking about today, I think it's going to be a very big area. I think it's going to be a very big move, and I'm very excited about it. So let's move past looking only at performance. Let's look at another way that we could look at what the market's doing or about to do by looking at smart money. You know, we started Acorn in November 6, 2007. So what's that? 17 years ago. So we've been around for a long time. I've been doing this for 17 years as a company, and obviously years before that as an individual and private investor and student myself. And smart money trading we started in 2015 as a part of Acorn Wealth, because it is such a critical piece to what we do, and you're going to see why. So remember what we just talked about here, like talking about real estate, talking about why it was our favorite sector this year, why we were heavily invested in it. Well, the performance of that, why we picked it, comes back to looking at smart money. And so can everyone see the chart here? Just want to, I'll take my face off the screen for a moment so you can see the chart completely. Can everyone see right here? It says real estate ETF IYR. So what we're looking at here is the real estate sector over 10 years. And what we're looking at specifically is we're looking at the insider buying versus selling. All right, so the blue line, let me just explain this. I'll just take my pen out. The blue line, which you can see running through the chart, that's the sector performance. That's real estate as a sector. And the green line down the bottom is showing you the buy versus sell ratio. So how many buyers versus sellers? Okay, and so over the 10-year period, what I want to point out here is notice the occasions over 10 years where insider buying versus selling has really spiked. Now this line you can see here is the average over 10 years. So look at those times where we spike over the average. Here, what happened after? Was that a bottom that you would want to trade or even invest in? Well, that was the bottom of 10 years. So absolutely. What about here? Terrific rally there, which lasted almost an entire year. What about there? What about there? I mean, that's the 2000, the bottom of the 2020 crash. At the bottom of the 2020 crash, right there, that was inside. That's when insiders loaded up with, I mean, hundreds of millions and billions of dollars at a time where everyone else was panicking, but they saw value in their own stocks and they knew best, and they acted and put their money where their mouth was in their own companies. So all of these times we saw these kind of significant spikes. Would you agree that these were insightful actions to be aware of? But what really caught my attention was the more recent trend. So what we saw in mid-2022 into the beginning of this year was this really strong accumulation. Think of it like a stock chart, right? Where you can see a trend in the candles, making higher highs, higher lows type of thing. This was the first time in 10 years that we'd ever seen this, right? The way we'd seen high after high after high, getting higher and higher and higher. Mass accumulation from insiders, from smart money. Now, at the same time that was occurring, I want you to take a look at the sector performance. So what did the sector do performance-wise as the insiders loaded up on more and more and more money? What was the performance of the sector? It was down, right? It was drifting lower. And for those of you who are a bit more technically minded, there's a saying for this. It's called divergence. Divergence is one of the most powerful technical indicators out there, because what we're looking for is when what most people are looking at indicates one thing, whereas what's really going on behind the scenes indicates something completely different. So we had price going down, giving the illusion of this is a bearish sector, but in fact, it was perhaps one of the most bullish sectors that should have been on your radar because of what smart money was doing behind the scenes, because they were loading up and we weren't seeing that anywhere else. And it's the first time we'd seen it in 10 years in this space. What happened after? Well, that we've talked about the data, but real estate, IYR, became then for the entire year one of the best sectors you could have been in. Certainly in the last 3 to 6 months, right? So if you take a look at the chart, you can see the way this, in fact, actually shaped up from a technical perspective. This was a flag pattern, for those of you, again, who like to look at patterns and so forth. This was a beautiful flag pattern that recently reached its target just above $100. And as you can see, that's the performance as a sector. We're now just kind of forming some consolidation and waiting to see if we will break further in the short term, or we're headed for a short-term pullback. But this has already had an absolutely awesome move. So what did we do about it? So once we had identified that real estate was based on, at least based on the rules that we follow and teach, was likely to be one of, if not the best sector to be looking at this year, we then had to go and find the right stocks. Because just as the market isn't a market, there's, in any sector, you're going to have diamonds in the rough and landmines that you want to avoid. So how do we find those high quality stocks? Well, we went and scanned and searched for the stocks in that sector that had the most powerful argument. And once again, going back to the beginning of this year, for those of you who attended any of our other workshops, and I think we even spoke about it here at last Metastock event, IGR was one of my favorites. It was at the time that I bought this a few times. I can't remember all the specific dates. The most recent re-entry was somewhere around 5.15, somewhere around here. And at that first re-entry zone, I bought it there, then I bought some more there, then I sold it there, then I bought back in here. So there was a few in and outs. But when I began accumulating, this was a stock that not only had a bullish pattern like the market, it was not only on the verge of that high probability breakout, but it was also a stock that paid at the time, I believe it was 18% dividend, give or take. And of course, dividends can always be cancelled or changed. But what made this extra special is that they had reportedly not reduced their dividend in 30 years. So you've got a stock with a really high dividend that's hadn't reduced that dividend in a significantly long time, not after the 2020 crash, not after the 2008 crash. And those are the things you want to look at, right? What do they do at the worst of times when markets completely fall apart? Did they change or cancel dividends? And they didn't. So to me, this was a stock with tremendous upside just as a stock alone, but also one that paid me 18% a year to hold it. Now I'm out of that. I sold that a couple of days ago because it's run so hard, so long, and the most recent dividend date's already transpired. So and we'll look to get back in potentially. But I just wanted to walk through the process of the smart money way of how we look for opportunities. And now this is just scraping the ice, the tip of the iceberg, as Fausto was talking about before, the iceberg order. Anyway, this is just the tip of the iceberg, and we're going to dive into where I think the next major move might be, and that's where it gets even more exciting. But before I go into that, is this all making sense so far? Am I explaining it clearly enough? Perfect. Awesome. Okay. So what is the next one? Well, again, before we dive into what I think could be the next really big move and the next really big sector, I just want to come back once more to what's underpinning this whole philosophy, and that is tracking the smart money. This has been a theme that I'm very passionate about, that I've talked about since Acorn began in 2007. Because insiders, I mean, look, you can sit in as many webinars as you want You can listen to as many experts as you want, some good, some not as good. But ultimately, when it comes to the fundamentals of an industry, and certainly of an individual stock, there is only one expert that actually matters, really. And I'm putting myself in that bucket, right? Don't listen to me. My opinion doesn't matter at all. What matters is the data. What matters is looking at the people that know, right? So we're all making educated guesses. We're doing it with systems that give us an edge. We're doing it with systems that give us structure. But when it comes to the fundamentals, insiders are the only ones that aren't guessing. They know about product launches, mergers and acquisitions, big customer contracts, litigation or court cases that are being resolved, medical breakthroughs when it comes to biotech companies, and so on and so forth. So if I was trading a stock, certainly if I was investing in a stock, I want to be checking that box that there is a fundamental story in play, that there's strength and health to that company. And it is certainly my belief that tracking what insiders are doing with their own money is the most important story to know. Not what they say, but what they do. And there's been multiple reports on this and research done on this from Wharton School of Business that says by imitating insiders, you can reap exceptional profits. There was the University of Michigan, which said insider purchases have abnormal returns. And the list goes on. Harvard and Columbia, Wall Street Journal, Peter Lynch. I mean, it's been well documented. It's the worst kept secret. And this really is a game changer when it comes then to being able to pinpoint potentially exciting ideas that have not just a great chart, but potentially some real legs in it from the presence of those fundamental qualities. And I won't be able to play this for you because I don't think I have the ability to in GoToWebinar. I'll see really quickly if it does work. Let's have a look.
John, this is Greg. If you set it, if you set up the video and then share the video like you're doing your desktop, then it should be able to play it with the audio and video.
Well, let's have a look.
Okay, so I'm going to pin you down now. Okay,
Yeah, we can
I've heard one strategy a few times,
Yep.
and that ultimately, you know, what is what investors want is a strategy. But what is your smart money strategy?
A strategy is firstly more than one thing. It's not just one indicator or one scan. It's all of those things together, which is the difference between a strategy and a bright shiny object.
Okay.
And so the strategy that we teach and that we follow is firstly, how do we find the idea? Because I'm not a fundamentalist.
Okay.
I don't want to be. I'm not analyzing annual reports and things like that, which others like yourself are probably expert at.
I've done a few.
A few. What I'm more interested in is letting the experts, letting the smart money do that research for me and tapping into that. So the way we find ideas is we're looking for stocks where there is a substantial amount of insider buying going on behind the scenes.
I like that.
And,
I like that.
And we love that.
That's one of my strategies too, by the way. So yeah, I love that. Yeah.
Well, I mean, you've got to assume that the CEO and the CFO have a fairly good understanding
Right.
when a company's undervalued.
Right.
And you'd hope that they know what's going on.
And likewise, if the insiders are dumping the stock, then that might indicate there's something that's not so rosy on the inside, possibly, right? I mean, a couple different ways to look at it, right?
If you look at the tops of the market in 2020 crash, very large insider selling compared to buying prior to that. The 2022 drop, we saw the same situation, in fact, 3 times as much insider selling before that drop there. So
you go.
There's the insight.
Right.
There we go. Now, so for those of you that
Okay, so I'm gonna
those of you that are Shark Tank fans will recognize that fine gentleman. That's Kevin Harrington from Shark Tank. And I really, it was a humbling moment of mine in my career, and I thoroughly enjoyed talking shop about smart money. But what was perhaps the most humbling of all was that when he shared with me, it was one of his favorite strategies also, tracking the insiders. And so, but what matters more than all of that is the value that then can bring to individual traders, to people like you, and to bring that full circle. Let's go back to one of the major moves that we saw in another sector, which was oil. Who here was trading or investing back when oil hit $0 in the following the post 2020 crash? Who remembers $0 oil? Right? $0 oil. What is the fundamental principle of making money? Buy low, sell high. And it never gets cheaper than free, than zero. Right now, I mean, I think, in fact, oil did technically go below zero in that weird anomaly. But how many people missed $0 oil and kicked themselves for it? Right? I'm sure there's a lot of people in here that didn't load up when oil hit zero. Ask yourself why. What stopped you from pulling the trigger? Because most of the people I spoke to over the years have shared with me that what held them back was they didn't know what to do. It happened too quickly. There were a deer in the headlights. They weren't sure which stocks were going to survive and which would become the next Enron, you know, because I'm sure there's a lot of people in this room who've gone through buying because they thought it would cheap and it got a lot cheaper. So I get that. But that is where, once again, smart money plays such a critical role and such a valuable piece to our research. When we saw oil hit $0, we went straight to our insider scanning. And we scanned not just for stocks with insider buying, but we scanned for stocks in the energy sector that had significant insider buying after oil crashed, right? Because it doesn't matter if they loaded up right before. In fact, that doesn't look so good, does it? Guess they didn't see it coming. Now, what I want to see is a stock that's gone, you know, that's plummeted along with oil, and then the insiders just load up. Because what we're tracking here is human psyche, and what we found was stocks like Tetra. So this was an oil and gas extraction company. It was off the radar, behind the scenes. You very unlikely would have heard about it just reading through the paper. But this was one of the stocks that came up in the insider scan that we shared with our students, where we had actually 8 directors that purchased. And they didn't just purchase, they added 216% more, 121% more, 50%, 62%, 110%, 124%, and one director increased his or her position by almost 1,000%. So what we're seeing here isn't just buying. We're seeing extremely high, what I would consider extremely high conviction buying at the right time, right? And there's the chart. Back in, gosh, I don't know, maybe Jeffrey, you might remember what version of Metastock this was. This is back in 2020 when I 2021 when I took this screenshot, where we actually talked about this back in an old, an archive event.
I think it was 17.
Yeah, well, there you go, right? So when I say this is stuff that I've been living and breathing by for a long time, these are literally slides that I pulled out from a almost 4-year-old Metastock deck, just to show you back then. That was a 470% move from where they bought, and then from where we alerted it at 92 cents. CPE was another one, a better known company, Clement Petroleum. 3 insiders, $3 million worth of buying after oil crashed, and that's the important thing. What's the story that the data tells us? What's the insight that the data gives us? Because I'm a big believer in something we talk a lot about in our analysis and reports, that there's too much information out there, not enough insight. Again, who would agree? Information, sure. Insight is what we need, though. And so this is the insight by seeing the data the right way, and at the right time by the right people. And so, and that whole story backing it up. CPE had a 1100% rally after the approximate timing that those insiders loaded up there. CDEV was actually the one that I bought. I didn't buy the other two. I bought CDEV instead because I'm more speculative, and this was certainly the speculator's pick. All of these shared in our smart money alerts, but this was one that was kind of around 31 cents when we found it. We had multiple alerts on that and multiple in and outs that I traded on it, but that was a very same pattern, and despite the lower price in the stock, $20 million of buying from 2 10% owners, as well as the VP director and chief financial officer. So, you know, if we're going to, you know, look, now past performance doesn't guarantee future results. We know that. There's nothing out there that's 100%. But we should certainly learn from these things, because this isn't just a technical indicator. This is, we're tracking people that are taking their own money most of the time, but owners might, 10% owners might be corporate money and whatnot. But in most cases, what we're tracking is people taking their own cash, taking that out of their bank account or out of other assets and putting it into their own stocks. To me, that is the best vote of confidence from the only people that know that you can get. And this is, I chose this specific example of energy for a reason, because what I'm seeing in the market right now, and again, let me foreshadow this by just reminding people that this is not financial advice. I'm not a financial advisor, so do your own due diligence and talk to a financial advisor before taking any action. But this is the data that I'm seeing right now of what might be a story that's building right now that could be next. And now you understand the backstory. This is what I've been so excited to share with you now that you appreciate where this has come from. And it is energy. I think that while real estate was one of our favorite sectors earlier this year, I'm quite excited about the energy sector. And I think that there is potentially in the longer term, over 6 months, 12 months and longer, there's potentially some extremely exciting opportunities here. Anyone else in the room an energy fan? Anyone else already looking at this sector right now? Put a 5 in the chat box. Energy, energy, energy. So let's start off with the chart. Let's look at the performance. If you looked at the performance of energy 2 weeks ago, you probably wouldn't have batted an eye at it. Energy throughout this year was, if you looked at performance only, was a dog. Performance only, terrible, going straight down. So if you are judging whether something is a great buy or not based on performance, you would never have been looking here. But performance alone is misleading. What we saw when we looked at the energy sector from a performance only perspective was, first and foremost, we saw that energy was in a downward channel. And a downward channel is a bullish pattern. It's a predictor that it's going to break out to the upside after 3 touches on resistance. And if you can see my chart here in meta stock of the future, not the 2017 version I had before, but you can see we bounced 1, 2, 3 times, which is kind of what we call the rule of 3. We also bounced 1, 2, 3 times on the bottom. So if it were to follow the rules of a downward channel, this is set to break out to the upside. And we published a public video, which we sent out to 67,000 people on this day, right there, saying that this could be the bottom of energy, and started publishing alerts to our members. Full disclosure, I am long XLE. I have a position in XLE, the ETF itself, and I'm still holding that. So performance, check, perfect pattern, but it was more than that. It's a lot more than that. The next part to this, and I really want you to see this screen, so I'm going to take my webcam off once more. The other thing that we're seeing is, look at the insiders. So don't worry about the red line for now. We won't get into that, but just focus once again on the buy to sell ratio and the sector. So here is the sector performance. So again, what I want to ask you is, what do you notice about the buying versus selling? What is the smart money doing since April? It's going straight up, right? Had the sector reacted to that yet? No. So we have another one of these scenarios, much like what we discussed in real estate, where we had this climactic buying loading up as prices drifted lower. So accumulation, divergence, all of the words I love to hear when I'm looking for a long. And so we have this very similar story where, as the stock built a very bullish pattern on the way down, it was also occurring with insiders buying up behind it, and perhaps in one of the strongest ways across all the sectors we've been observing. Now, again, anything could happen tomorrow. The world could end. We could stop using fuels tomorrow, and the energy sector could crash. I mean, anything is possible. But what we're seeing here in the smart money is a story that we've seen before and that we like a lot. And what could be the reason behind that? What could be the reason why energy may very well be so strong now, but also may continue to be a very special area of the market? Does anyone have any guesses, any thoughts on that? What do you think one of the main reasons or main stories is, outside of the pattern, outside of the insiders? Why energy? Well, I'll tell you my thoughts. And it's just my opinion, but this is beyond just oil and gas. That's right, Gentry, exactly. Right on. Anyone else want to guess? What we're seeing now is not just an oil and gas energy drive, but also a shift towards clean energy. And this absolutely comes back to AI. Not just running, finding out what you'd look like in a black dress or a pink suit or whatever, but we're talking about this kind of one of the biggest innovations and potentially, whether it's good or bad, changes to humanity since the internet. This is a huge thing, but love it or hate it, it's bigger than just what most people perceive it to be. It's also an energy story, right? It's also a massive energy story because the amount of energy that AI consumes is enormous. The amount of energy when you search for something on ChatGPT, like Fausto was talking about, or any of these kind of apps, it's estimated that the amount of energy that search consumes is 30 times more than doing a specific search on, say, Google or Yahoo or Bing or whatever, right? 36 times more, roughly. Now, this was actually commented on specifically by the former CEO of Google himself, Eric Schmidt. He was doing an interview to Stanford students about the future of AI and a lot of other fascinating topics. It's about 30 minutes long, and I watched it 2 weeks ago. And this is why no one has ever seen this presentation before, and no one has ever seen the offer that I'm going to be giving to you in just a few minutes, because I was just so excited by all the information I've been reviewing, what I was seeing in the smart money and the patterns, that I didn't want to miss $0 oil as I saw it. Eric Schmidt's comment in this interview was that the infrastructure needed to power AI is immense and will only grow as these systems become more advanced. Energy will be the foundation of all technological advancement. That's interesting, isn't it? All right. If you want to see that represented a different way, and I apologize for the sides of this image being cut off, but what this says is Google and Microsoft now consume more electricity than 100 countries. Okay, so these blue bars is Microsoft and Google's electricity consumption in 2023, last year. In 2023, Google or Microsoft alone consumed more electricity than 100 other countries. Just one of those companies last year consumed more electricity than Iceland, right? The two combined, enormous. Now that was last year. What does everyone know or has heard about the new iPhones coming out later this year? Or already being rolled out now, but the software updates happening, I think it's December 16th or something like that. All iPhones will be AI powered, right? Siri's going to AI search for you. A lot of apps, almost every app seems to be AI enabled. Microsoft Office, Windows Copilot, almost everything we touch. Expedia, Airbnb. So forget 2023, where we're going is, if you want to think about that 36 times multiple that we discussed before, it's a significant potential increase in this type of energy demand. It requires a significant amount of energy to operate. It needs large, reliable grids. We need massive data centers and management of those. And so if you go back to what Eric Schmidt said about that, he said that his comment was, we don't even have enough power in all of the US to be able to meet this energy demand. That was his comment, just to paraphrase him. And he went on to say, whoever controls the energy controls the data. So this really got me thinking. I'm not an energy expert. So I thought, well, how am I going to go out and find where these opportunities were, where these opportunities may be now, and where the ones coming up that we may not have even heard of yet. It might be some Canadian solar plant that we've never heard of. How are we going to track them? And it goes back to the same way we did it with $0 oil, is going back to our smart money process. And so this isn't just scanning for insiders. It's a lot more. We're looking at who's buying. We're looking at what institutions are buying. We're looking at the percentages they're buying, the timing that they bought, what they owned before, what they own now. We're looking at the history of those insiders or investors in previous transactions, either with this company or with other companies. We're looking at how many people are buying and how close together. It's a process that I would dare to say, perfected over the last 20 years that I've been doing this. There's very few people that have spent their entire life tracking this stuff. This is my life's work. It's my passion. But more than just the insiders, also looking at the timing, looking at when that special point is where the insider fundamentals meet up with the technical timing. And I think that's why a lot of people who try tracking insiders never see the real value as much as I do, because you do need to have both, right? You can't just simply buy because an insider buys yesterday, because in some cases it might take a month or two until it starts to turn around, like we saw with real estate, like we're now seeing with energy. So getting that timing right, my gosh, makes a big difference. And so it is a very special recipe that we have put together that all goes into tracking this, finding the best opportunities, and then sharing them with our community. And so today, what I'm very thrilled to offer for the very, very, very first time in Acorn and Smart Money history is something very special, which is our Smart Money energy alerts. This is something I've been working on for other reasons for the better part of 12 months. And what I've been doing is building, I think it's about 16,000 lines of training that I have built into my AI assistant to track and find exactly these. Because I was spending about 20 to 30 hours a week going through so much research, and a lot of it was repeating steps that I knew could be automated but couldn't figure out how. And I've done this a long time. It's too many different places to pull the information from. And I'm a little bit of a freak that a perfection guy that I do like to kind of do it myself. I would never trust anything or person to do everything for me. I still want to be able to have that rubber stamp, right? And so this is a very special project we've been working on that is for the first time available today. And what this is it's specifically tracking the energy sector. So you'll be getting real-time access to the research that we'll be putting out in terms of a video report on the energy sector and our favorite setups, updates on all of the energy stocks that we have narrowed it down to that we like at the moment, and ones in some cases I'm already in that we've alerted this week and that are just starting to break out today. Going through all of the insider processes, the industry they're in, why they're positioned to take advantage of this particular context of story that we've been talking about. Going through, all of the bits and pieces that we've covered today. And so right now, today, as a big bonus for the event, you'll receive a quick start lesson. It's about an hour and a bit long. It's split up into chapters. You'll be able to go straight into, and it'll take you through the whole process, start to finish, of why energy, what we're looking at for potential entries and targets, and our favorite stocks that we've just picked this week. So that's the first part. On top of that, for the next 12 months, you'll get updates on those setups, as well as a monthly energy surge report. So this will be a detailed report looking at how the sector's going, if anything has changed, as well as looking for any new opportunities that we locate through this very special process, especially ones that have the combination of insiders and the sectors. We'll be providing you with a custom watch list you can import into whatever platform you use, so that you'll have everything we identify in a downloadable format in terms of that watch list and breakdown. And all of that starts right now. That is the Smart Surge Energy Report. And again, 12 months access to that, 12 months access to the monthly video updates, written reports, and kicking off today with our that very special event that we have you'll receive within minutes of signing up. But perhaps the best part about it of all is that you get to take advantage of this for only $97. I wanted to do something for, instead of charging what it's worth, which is $14.97 was the plan of what we were going to launch this for. But, I've known Jeffrey for a long time, and we're very excited about this. We wanted to be able to show you and share with you just how special this is. So we wanted to put it at a price where everyone could afford it, especially if you've purchased other things in this event and plan to, as there's some other great speakers here and coming up. At least this gives you an opportunity for the next 12 months to see what smart money can do for you in a sector that I think is very special. So, and if you agree, the link there to get started is acornwealthcorp.com/power. And what we've also done is for the if you do enroll now or in the next hour, what we've added to that is a additional report that you may have guessed earlier on I'm interested in, which is ones that are stocks that also come with a very special or potential high dividend yield. So the ones I'm invested in already, the ones that I picked up yesterday and the day before, those are not just the energy special scenarios, but also ones which at least currently pay quite a special dividend and have a story behind that. We're sharing that additional report with you, as well as a upcoming live event where we'll be doing the scan live together and showing you what's under the hood. So those are two very special bonuses that you'll get if you sign up in the next hour. And that will be all sent out to you here today with your access, along with the special video walkthrough. Again, this is a one-time payment. There is no rebilling. There is no subscription required. It is a year of smart money powered and AI combined signals, straight from what we've developed over the last 16 years. So I'm out of time. I think I'm 2 minutes away from the next speaker, so I don't want to take any time away from your great next speaker who's coming up. But if you're getting started right now, put a heck yeah in the chat box, and I'll make sure to look out for you and get your information out to you in the next half an hour. So I'm sorry we didn't have much time for questions, but I hope that I answered them all, at least to my best ability, over the last 55 minutes.
I think you did great.
Thank you so much, Jeffrey. It's an absolute pleasure being back.
Thanks for coming. All right, let me appreciate that. We've got the chat links in the we've got the link in the chat, both in YouTube and in GoToWebinar. So acornwealthcorp.com/power. Really good presentation. Thank you very much, John.
My absolute pleasure.
All right, very cool. Gonna go ahead and do this and just kind of grab the presentation here, show my screen. And actually, yeah, I think that's it. That's what we need to do. Let me do this too. Okay. All right. So I want to say thank you real quick to CMT Association. One of our sponsors, the cmtassociation.org. Look, if you're looking to manage money or have funds under management, or would like to kind of have a business around that, or if you just want 3 cool letters at the end of your name, a CMT designation can help with all of those. So you can find out more about the CMT Association at cmtassociation.org. You can also give them a call, 646-652-3300. They specialize in quantitative systems development, portfolio management, behavioral finance, all that kind of good stuff. So we really appreciate the CMT Association for sponsoring the event this week, and our thank you. Of course, we are Metastock. We've been talking a lot about Metastock over the course of this week. 31 years it's been rated #1 in its price category. You can buy a month and get 3 months. Works really well. Metastock.com/conf promo. Greg, are you available to?
I certainly am.
All right. Let's do prize then. Okay. So the next prize on the table is going to be from Melissa Armo. She's coming up. She's speaking tomorrow, I believe. But she has a market report. She talks about gaps. Very, very interesting. I like your T-shirt, but I can't figure out the equation on it, Greg.
Well, get a load of that. Get out the calculator and go crazy.
I don't think it's solvable, actually. Anyway, we're going to give away a Melissa Armo market report 1 month. It includes economic reports for the week, stock picks, all of that kind of good stuff. Normally about $50. We're going to give away a free subscription to it. And Greg, what I need from you is a number between 1 and 58.95.
Okay, and I'm going to get that for you now. How about 4332?
Okay, that is Terry W. with a Gmail account in the USA. A lot of USAs we're getting today. Let me go ahead and push this over. Let me just make a note of that so I don't forget. Okay. Now remind people, if you don't mind doing my job for me, Greg, how, if I'm watching on YouTube, can I make sure that I am prize eligible?
I don't mind telling you at all. Simply go to metastock.com. There's a large banner right at the top of the page, and go on there and register for today's event. When you do so, you will be sent an email showing you how to view it on GoToWebinar if that's what you prefer to do. And that is all you need to do. You don't need to do that more than once. That'll take care of it for the whole week.
If you're already watching us on GoToWebinar, you're good. You're already ready. All right. Thank you very much for the assist, Greg. I appreciate it.
You're welcome, sir.
All right. Very cool. Let me go ahead and kind of do this. One more over. And we'll talk about our next guest. Our next guest is John Thomas. I like to bring John Thomas in. He has always a very interesting take on kind of the markets and what's going on. And I always kind of like to grab a notepad and take some notes. I'd recommend you do that. John, let's go ahead and get you started. How you doing?
Yes, I am great. How are you today?
Good. I can hear you. You sound great. We got to make you the presenter. I'll make sure I can see your screen too.
Okay, show my screen.
Perfect.
You see a B52 or B29?
Oh, okay. Yeah. What do you say?
Yeah, it's a B29 in the Atomic Energy Museum in New Mexico.
Cool. Well, we can see it. We can definitely see the right screen. I don't think your PowerPoint's enlarged yet, so I don't know if you have two screens. But
I have to start the slideshow. How about this?
Perfect. Yeah, looks great. I will let you. I'll get out of the way. It's your turn. Go.
Okay, I am broadcasting to you live from beautiful Lake Tahoe today. Pristine blue waters, blue sky, and as soon as I'm over with this webinar, I'm going to put on a 40-pound backpack and hit the trails. So this is John Thomas, the Mad Hedge Fund Trader, with you, and I'm going to talk about trading the greatest capital spending binge in history. That is exactly what's happening right now, with massive implications for all asset classes. So take out your pen and paper and prepare to take notes or start typing in your smartphone. What I'm about to tell you will blow you away and change your life. For I am in the early retirement business, your early retirement. Learn what to buy, when to buy it, and why you're buying it. So how would you like to earn 350% in Vertex Pharmaceutical in 1 month? 394% with Palo Alto Networks in 2 months, 412% with JP Morgan in 3 months, 421% with Berkshire Hathaway in 4 months, or 811% in NVIDIA in 6 months. Well, that is an actual customer performance, which I just got last week. But first of all, why listen to John Thomas? Well, I have 55 years of experience in the global financial markets, 10 years as the economist correspondent in Tokyo and later the White House, 10 years running the international equity division of Morgan Stanley, Marine Corps combat pilot in Desert Storm, 10 years running the first international dedicated hedge fund, 5 years fracking for natural gas in Texas, now 16 years publishing the Diary of a Mad Hedge Fund Trader. I am one of a handful of founders of the modern hedge fund industry who's still working. Oh, and if you ever want to ride in a World War II fighter plane, I'm your guy. So what is the greatest capital spending binge in history? Well, up until now, that was all the spending that took place during World War II, which won World War II. In 3 short years, we built 297,000 high-performance aircraft, 193,000 artillery pieces, 86,000 tanks, one of which was driven by my dear old dad, 2 million trucks, double-tracked all east-west rail lines, and created from scratch 4 atomic bombs, which is no easy trick. And that's me in front of the Memphis Belle B-17, which was used to make the movie about 30 or 40 years ago. So what does today's capital spending binge look like? Well, it's bigger than the last one, believe it or not. The AI investment of the Magnificent Seven requires $632 billion in AI spending by 2028. It created the NVIDIA $60,000 Blackwell chip, which is now dominating the AI business. It's rolling out AI apps faster than most of you realize. Artificial intelligence is slowly taking over your life. It's causing earnings to explode at the Magnificent Seven first, and then the rest of the economy later. Creates a bull market in stocks that could take the Dow up to 240,000 by the 2030s. And this is me on Guadalcanal with my Marine Corps fatigues, and that is a Grumman Bearcat, a World War II carrier fighter. This one crash landed on the island, and we found it in the jungle. So why listen to John Thomas? Well, how about a 52.43% average annualized return for the last 16 years versus 26.49% for the S&P 500? And don't listen to me, listen to what the customers have to say about all this. Oops.
Hi, my name is Wilson, and I've been with the United Fund Trader since 2019. I caught the phenomenal return 2019 and 2020, somewhere in the order of 80–90% returns on both of those years. I caught all of those trades, NVIDIA, and so many more.
Hey, John, I can't hear the audio on that video anymore at all. Hey, John, I don't think we can't hear that video at all. I can't hear John anymore either.
Jeff, I can hear you, but I cannot hear John anymore.
Yeah, I can't hear him either. And it looks like his PowerPoint's looping too. John, we can't hear you anymore. Okay. All right. It looks like John is aware his audio is not working. He is working on it, it looks like.
Sounds like a good time to break out the dad joke book.
Oh, right on. Yeah. What did one wall say to the other wall?
Test.
There we go.
Can you hear me now?
Yeah, we can hear you now. There wasn't a lot of audio for the video that was played.
Yeah. Okay, well, let's move on. For some reason, the audio flips off when I use GoToMeeting these days. So, but we also got a Microsoft or an Apple upgrade last night at midnight, so that may have had something to do with it. Those often reset all your settings. Anyway, let's talk about how an actual customer did with our service. My friend Wilson, he made 482% on NVIDIA call spread. He made 811% on NVIDIA again, 421% on Berkshire Hathaway, 412% on JP Morgan, 394% on Palo Alto Networks, 350% on Vertex Pharmaceutical, 113% on Silver, and again, 87% on JP Morgan. And of course, the list goes on and on. This is all I could fit on one page. So good for you, Wilson. And most of our followers are getting similar results to this. I basically get testimonials in every day. So let's say how we're getting these performances, and that is with the Mad Hedge Profit Predictor, my market timing index. That's my secret weapon. It's an artificial intelligence driven algorithm that analyzes 30 different economic, technical, and momentum driven indicators all day long. Took a team of mathematicians, 1,000 hours of calculations to create this. And you can see right now we are approaching overbought territory in the market. That's not a stretch because we've gone up almost every day since the Fed cut interest rates 50 basis points almost 2 weeks ago. So why do you need an algorithm? Well, why is the toolbox missing its most important tool? Algorithms have become so dominant in the market, you should never trade without one. It does the work of a seasoned 100-man research department in seconds. It runs real time and optimizes returns with the addition of every new data point far faster than a human can. Imagine a trading strategy that upgrades itself 1,000 times a day. Don't go to a gunfight with a knife. If you're trading against algos alone, you will lose. Algorithms algorithms provide you with a defined systematic trading discipline that will enhance your trading profits. And this is 3 years of market timing index calls. You can see we get a lot of buys at market bottoms, sells at market tops, buy, sell, buy, sell. It's like having a money printing machine. I'm not the only one using algorithms to trade. Some 80 to 90% of all market trading is now algorithm driven. And this is where we are now in the market timing index. We are right up here after this tremendous run after the Fed interest rate cut. And you can see the volatility in the market has increased dramatically over the last 3 months. We're getting these wild swings, which we've never seen before. Basically, what's happening is you're getting 1 month worth of market movement, or actually 3 to 4 months of market volatility compressed into 1 month. So that's how we're getting these wild swings. Of course, having an indicator like this telling you what's actually happening is a huge advantage in the marketplace. So why cover all asset classes? Sounds like a lot of work to me. Well, believe me, it is a lot of work. Information about one asset class sheds light on all the others. For example, knowing what the bond market is going to do and therefore interest rates is incredibly useful advantage when picking stocks. Some asset classes will be doing great while others are dead in the water. It will point to you where to trade the winners and how to avoid the losers. Give yourself every advantage. Knowing what's happening all the time everywhere is incredibly valuable. So there is a method to my madness. The monster 50 basis point rate cut triggered a massive risk on move, which 2 weeks later is still going on in all asset classes. We are in the middle of or maybe just the beginning of a melt up. All interest rate plays are delivering massive upside moves. We're unlikely to see more than a 5% drop in the index for the rest of this year. US dollar is getting trashed and could stay weak for years. Technology stocks will recover after a much needed sideways time correction. Energy is getting dumped on slowdown fears and overproduction by the US, by stocks and bonds and dips, but now it's all sectors, not just the Magnificent Seven. Okay. All right, our favorite sector at the moment is precious metals. Gold has hit an all-time high almost every day this month because it's the only way the average Chinese citizen can save, because they can no longer speculate in real estate, which is disaster, copper, which is collapse, and they don't trust their own currency, the Chinese yuan. When 1.2 billion people want to go save in the same place, it has a big impact on the price. We're up about almost 40% in the past 12 months. Central banks in emerging market countries are also continuing to buy gold, with purchases tripling since the middle of 2022 amid fears of US financial sanctions and a mountain of sovereign debt. Goldman Sachs is taking a more speculative approach to commodity investing, pushing gold but avoiding crude oil and copper prices as China continues to drag. Silver is rising on economic prospects that are improving, and that is driven by EV and solar panel demand. Global monetary easing is at hand. Buy precious metals on the dip because interest rates are now following decisively, and that means you buy the GLD, the SLV, the AGQ, and the WPM. And what are these things? Well, here's the gold ETF. How about that for a trend? We've been long the entire year, and it's been a fantastic trade. We're looking for $3,000 an ounce by early next year. And if you like gold, you should like silver even more. And here the SLV ending a 6-month sideways range trade while people were worried about the economy is now in the process of engineering an upside breakout. And if you like silver, you'll like the AGQ even better. That is a 2x long silver ETF, and it has risen 35% in the last month. Stocks have a new lease on life. The market scored the biggest turnaround in 2 years now that the rate cut is in, scoring an amazing 900-point intraday swing. Solar stocks got the Harris bump. Alternative energy would do well under her administration. FedEx got crushed 10% on disappointing earnings. Intel got crushed even more, and they seem to be throwing out the lifelines to anybody who will take it, such as Amazon or Qualcomm. Charles Schwab popped 5% on good earnings. Wells Fargo got hit by another regulatory action for failure to control money laundering. This is the most sued bank in the United States by the US government. And of course, Palantir and Dell joined the S&P 500. That was worth 5 to 10% pop in each one of these. So what's in the market and what is coming into the market? This is what's in the market now. High inflation, an oil shock, a labor shortage, supply chain headaches, Fed interest rate rises, quantitative tightening, poor earnings. So in the stock market, we're in the what's going to happen next business, and that is what will move prices. What's going to happen next in 2025? Plunging gasoline prices, weak commodity prices, stabilizing supply chain, low 4.2% unemployment rate, better than expected earnings, $1.25 trillion in stock buybacks, falling interest rates, and a weak dollar. Of course, this year we have the election dilemma to worry about. With polls unreliable, uncertainty is at a maximum right before elections like now, and markets hate uncertainty. So look for the market to drift sideways into October. Once the election is over, you can expect markets to rocket with the uncertainty gone. It really makes no difference who wins or which policies are implemented. Markets will go to new all-time highs like they are today. With markets at all-time highs, 90-day T-bills yielding 4.75% are still a good option, but they won't be there forever. 90-day T-bills will probably drop to 3.5% by the middle of next year. So by any weakness in coming months, we are in a major bull market. So we run barbell portfolios. That's half big tech and half domestic recovery low interest plays. Big tech accounts for 2% of the US workforce, 35% of market cap, and 35% of US earnings. This is the big cap spending play. Domestic recovery stocks include railroads, airlines, cruise lines, industrials, couriers, steel companies, interest rate sensitives, banks, commodities, housing, construction, credit card companies, hotels, casinos, and online ticket sales. NASDAQ, of course, is the major index that's been leading all year, or at least until the end of June, and it looks like it's on its way to breaking out to a new all-time high once again. We're looking for 20,000 in NASDAQ by the end of the year. That means buy technology stocks on dips. Microsoft is the AI leader with ownership of ChatGPT. Microsoft knows every keystroke you've made for the past 30 years. It's all about data, and we're targeting 500 for Microsoft. And I do fly a lot of these planes at air shows. This is a B-24 Liberator. This is a B-17, Boeing B-17, and there are only 4 of these left in flying condition right now. Meta, profits are tripling on sales and massive cost cutting. They know every social media post you've made for the last 20 years. And we're looking for $600 a share in Meta, and that is the B-24 Liberator, which I also fly in air shows. Amazon knows everything you bought or thought about buying for the last 25 years, and we are looking for $250 a share in Amazon by next year, and that is a Mitchell, that's a B-26 Marauder, which I found in Florida once. NVIDIA, of course, we all know NVIDIA. Everybody's got it tattooed on their inside wrist by now. They're the global player in AI graphics cards. We're looking for $180 sometime early next year, and that is a P-51 Mustang, also based in Florida. Google knows everything you search for the last 20 years. We're targeting $250 a share there. We don't think the antitrust suit will go anywhere, and this is another P-51 Mustang. Palo Alto Networks. Hacking never goes out of style, and the 3 leading companies have a monopoly on customers have to buy all 3. We bought this last February, have had monster moves since then. We're targeting $400 a share in Palo Alto Networks. That is a Mitchell B-25 bomber that did the Doolittle raid in 1942. Second half of the barbell depends on falling interest rate plays. It bets on falling interest rates for the next 2 years, global economic recovery to begin in 2025. Upside potential recovery for stocks is far greater than tech from here. Some of these have not moved for 5 or 10 years. Focuses on economically sensitive cyclical industries, makes a great counterweight to high growth technology stocks. We could spend the next several years rotating between these two groups. Of course, the front runner here is JP Morgan. We've been long the stock the whole year. It's practically doubled, and we're still buying the dips. You know, I updated all these charts up to yesterday, and this is not a bad place to get involved right here. We're looking for $250 a share in JP Morgan. Home builders, falling interest rates means you want to rush out and buy a home as fast as you can. This is the best new construction play. They also can offer discounts with free upgrades and so on. We're targeting $250 a share in DH Horton. And Visa is the touchless payment play. Of course, they also got hit with an antitrust suit just yesterday. It's giving us a great buying opportunity. And you can also see there's a golden cross about to happen right here with the 50-day going through the 200 days. So I'd be buying Visa right about here. And Union Pacific. In economic recoveries, you have to move a lot of big stuff and a lot of commodities. Railways are the only way to do that. Buy UNP on dips. We're looking for 300 a share. And Federal Express, just offered us weak guidance, which crushed the stock. I'd get involved in it right here because in economic recoveries, you move a lot of small stuff also. We're targeting 400 a share for FedEx. Berkshire Hathaway is the one-stop barbell stock. They're heavy in technology with a giant position in Apple, and they're also big in financials. We're looking for $600 a share by the end of this year, and we've just had this monster up move right here. Freeport McMoran is a copper play. The first thing you want to run out and buy on any recovery in the Chinese economy. It looks like we may have a potential breakout this morning with the announcement of the Chinese stimulus package overnight. And of course, this is a play on EVs, solar, wars, because those 155 millimeter shells use a lot of copper, and the enhancement of the electrical grid, which has to increase 5 times over the next 5 years to accommodate current AI demands. Emerging markets, another great play. Again, you can see the reaction to the China stimulus right here. We're looking to buy that on dips, targeting $70 by the end of the year. Moving on from stocks, bonds have been another great play this year. We've been long the bond market really for the last 18 months. That's how long we anticipated the cut in interest rates that finally came 2 weeks ago. Another government shutdown is in the works. It happens on Monday, unless the House can pass a bill. Interest payments on the national debt, now $1 trillion per year. I bet more than anybody, the US government would like to see interest rates drop because they're the biggest borrower in the world. Jump in debt service came as the US budget deficit surged in August. We're now running at a $2 trillion annual rate. Yield curve has de-inverted, meaning that short-term interest rates have fallen below long-term ones. That's always positive for the bond market, and yield chasers are now posting record demand for junk bonds, which right now are yielding 6 to 7%. So you want to buy every interest rate play out there, and there are quite a few of them. This is the TLT. We're looking to buy the dip right around here. We see it hitting 110 by the end of the year, and we really have been involved heavily in this since April. So again, buy the dip, buy the dip, buy the dip, and of course we send out trade alerts every time you need to do this. And this is the yield. We're going to go from a high of 5.08% earlier this year to 3.5% by the middle of next year. So there is a major falling interest rate play going on here. Junk bonds have been on an absolute tear all year. We think these could hit 110 by the end of the year by the JNK and the HYG on dips. And Crown Castle International, This is a 5G cell phone REIT, or real estate investment trust. We bought them for the 6% yield at the beginning of the year, and it has been also on an absolute tear. Our target here is 150. Foreign currencies, of course, when you lower interest rates, you also lower the value of the currency that's underlying. That means everything else in the world goes up. Dollar hit a 7-month low last week as US interest rate cuts loom. Could be a decade-long move. The yen carry trade is back with hedge funds piling into positions they bailed on only a few weeks ago. It's just a matter of math. Now that the Bank of Japan has given up raising interest rates anytime soon. What this means is more leverage, more risk, and more volatility for global financial markets. I love it. Prospect of falling interest rates means that the greenback is toast. You want to buy every foreign currency out there. And of course, our favorite is the Australian dollar, which we see eventually going to 1-to-1 to the US dollar. That is a call on a global economic recovery. Emerging market currencies are also the other high beta play in the currencies. We see that rising 40% this year. And of course, the euro nonstop tear all year since April, and we're looking to buy the euro on dips. We're targeting a 25% gain this year. Energy and commodities, you want to avoid like the plague. That's because the US is now at record high production. 13.4 million barrels a day production by the U.S. 20 years ago, we were only about 5 million barrels a day. So tax subsidies had a major incentive to leading to overproduction in the energy area and collapsing prices. Of course, China being in recession, the world's largest consumer oil, also is another major reason why oil has been weak. Over the long term, we expect oil to eventually go to zero as it is replaced by alternatives, but that is a 20 to 30-year play. Eventually, it does go down to $10 a barrel, and we've already seen the greatest double top of all time. This is a 16-year double top between these two peaks. The harsh truth is you really need my help. Majority of individual traders lose money. They lack the correct training and discipline to succeed. Most broker research suffers from grievous conflicts of interest. Wall Street is all about moving money from the uneducated to the educated. The easy solution to that is to get educated yourself. Fidelity did a 20-year study and learned that their top performing investors were dead people. Why do dead people do so well? Because they never sell. That's why. And never selling while the market, the Dow is going from 600 to 42,000, not such a bad idea. You need a real pro to guide you through the market maze. The market is not monolithic, and 95% of it can be completely ignored. There are a few great sectors and a lot of awful ones. You can get a 10x return on the great ones, but get wiped out by the losers. Let a 55-year veteran steer you to safe waters. Let me sit next to you and guide your hand on every winning trade. 52.43% average annualized return for 16 years. Richard made millions religiously following my trade alerts. He now spends his retirement restoring vintage aircraft and flying them over the California coast. And Greg turned 100,000 into 3 million solely on my trade alerts. He bought a new home in Orange County, California with Tesla solar panels, Tesla Powerwalls, and a Tesla Model 3, and still had enough money left to send 3 kids to college. And let's listen in on another friend of mine.
This is Bob. I live near Denver, Colorado, and I'm hiking on top of the Continental Divide.
Oops, lost it. Okay.
9 months ago, I joined John's global dispatch service and was so impressed with the profits I made that 2 weeks ago, while hiking in the Dolomites, I joined his concierge service. And in 2 weeks, It is 100% paid for it, and I couldn't be happier. Life is good. John really helps. The other day I had a text message exchange with him regarding some concerns I had with TLT. Put spreads, he encouraged me to stay in. I did, and today they went out at 95% of maximum potential profits. And that's the way it works for me. Hope you all do well trading yourselves. Thank you.
All right, thank you very much. And let's move forward here. Okay, so what do we do about all this? Stocks, you want to buy the next dip. Bonds, you want to buy dips. Commodities, stand aside. Energy, buy dips, or energy, stand aside. Currencies, buy foreign currency dips. Precious metals, buy dips. If you were not up 52.43% in the past 12 months, as I was, you are reading the wrong newsletter or following the wrong trade mentoring service. 52.43%. You get those kind of numbers, you get to do things that other people can't do, like ride the Queen Mary owner's suite from New York to England. When you get to England, you can take the Orient Express to Venice and enjoy yourself there. This is the very long view. This is where the big money will really be made. The 2000s and the 2010s were the hard decades for making money. The 2020s and the 2030s will be the easy ones, as a global demographic wave brings on a new golden age. 85 million millennials will become big spenders over the next 15 years, while 80 million baby boomers, a drag on the economy, fade from the scene. This will create an economic boom that will last another decade that started in 2023. So what happened the last time we had an identical demographic tailwind to what we had now? Well, that was from 1982 to 2000. The Dow went up 20 times in 18 years. Are you ready for a replay? This is what that would look like. Up 20 times from the 2009 bottom takes us to Dow 120,000 by 2030. Except this time it's different. We're already 2/3 of the way there. So we only need one triple to get us to Dow 120,000. That looks like a piece of cake to me. Except this time it's different. We have an AI tech turbocharger. Technology is hyper accelerating on all fronts simultaneously, and the pandemic greatly sped up the rate of change. AI-based products and services are just starting to roll out. The development of a functional quantum computer means that computational ability is about to increase a trillion-fold at no cost. The world's major computational challenges will shortly be solved, such as weather forecasting and cancer cures. Needless to say, barbell stocks dominate in this scenario and will account for the bulk of stock market gains in our lifetimes. The 90s had cheaper computers, cheap operating software, and a new internet. The 2020s will have 10 times this number of new technology drivers. So who will show you how to play the next 90,000 Dow points? Sit with me, John Thomas, the Mad Hedge Fund Trader, and my Global Trading Dispatch. Discover how you can tap into the top performing trade mentoring service in the industry, up 51.63% in the past 12 months. Follow my research and market beating trade alerts, and you will rake the profits in. Leonard Marine Combat Pilots Theory to Big Profits. We trade single stocks, options, and ETFs for global equities, bonds, foreign exchange, energy, commodities, precious metals, and real estate. This is a typical trading month for us. You can see we bought the S&P 500, 16.3% profit, sold short treasuries for 8.6%, bought the Russell 2000 for 14.8%, bought Amazon for 12.1%, bought Apple for 7.6%, lost 21% on Biogen. We stop out of losers very quickly. It's easier to dig yourself out of a small hole than a big one. As you can see, the rest of the trades for that month were profitable. So it's just a matter of time before barbell stocks break out to new all-time highs. Watch this space melt up for the rest of 2024. get ready to start reeling in those whoppers with Global Trading Dispatch as your guide. This is how our algorithm works. It spotted an imminent breakout in NVIDIA way back in January, so we sent out a buy alert, and this is what that looks like. It says buy NVIDIA at 480 or best, and these are the pre-split prices that prevailed in January. It was an opening trade, and for this particular position, you needed to buy 21 shares for a $10,000 exposure. What happened? NVIDIA went up 45% in 22 days. Do we just sit around and pat ourselves on the back? No, we put out a sell alert. Take profits, sell NVIDIA at 695 or best. And on this trade, we made $4,515 in just a little less than a month. So this is a history of our 10 baggers, stocks that went up 10 times after we recommended them. Those include Zoom, Lam Research went up 10.6 times. NVIDIA went up 30 times. Square went up 25 times. Moderna went up 40 times. We bought it just before the pandemic started. And Tesla went up 178 times. I gained financial independence for life, and so can you. All of this can be yours. Discover how to make thousands of dollars a year in extra income. Go from complete beginner to seasoned pro in weeks. Learn how to quit your day job and trade for a living full time. Trade from anywhere, anytime. Supplement your retirement income with the satisfaction of booking winning trades by the hundreds. With my Mad Hedge Global Trading Service, you get instant trade alerts and at market sweet spots, about 200 a year, and all the reasons to execute them. Live bi-weekly strategy webinars with an interactive Q&A, special reports on urgent investment topics, invitations to strategy luncheons around the world, more educational videos and webinars than you can consume in a lifetime, access to a 16-year database on investment ideas, searchable by names and ticker symbols. And I'll even give you the name of a surfing camp in North Africa with a seniors division. Watch out though, it's a lot harder than it looks. This is the one-stop shop. Learn all you need for every level. It's for individuals who want to understand what is happening with their retirement funds. It's for people who want to learn how to trade for a living. Get the financial education of a lifetime. It's for smaller institutions and financial advisors who can't afford an in-house research department. Get in before the next melt-up begins. This is what you get in your inbox every morning. The Mad Hedge global market comments and the research for the day. You also get Mad Hedge hot tips, the 5 most important things that happened today and what to do about them. This is what I'm not going to charge for this service. I'm not going to charge you $100,000. That's what I charge my big hedge fund clients, and they're happy to pay because I make them millions of dollars. And I'm not going to charge $12,000. That's what I charge my concierge clients who get my personal cell phone number so I can act as their investment 911. And I'm not going to charge $3,500. That's the full price of what I'm offering you on my website. This is the real deal. Creating this product cost me millions of dollars. With the best customer service in the industry, running it costs millions more. And here's the offer you can't refuse. 6 months for just $997. That is a 71.5% discount to the website price. It's a limited time offer. We only take 25 new subscribers at a time so we don't overwhelm the market with our trade alerts. So it's first come, first serve. I can't wait to make you a top drawer trader. Just click on the chat box on the right. And Jeff, if you can put the link in there, I would greatly appreciate it. And let's see. Okay. Let's see. Let me make the money for you to pay for your own subscription. You make the trades. Discover how an experienced hedge fund manager finds and exploits the best sweet spots in any market. just click on the blue link on the chat box on the right. We offer a money-back guarantee. If you're unable to make money with Global Trading Dispatch, you can get 100% of your money back at any time. We only want happy customers, and we very rarely get requests for refunds. Anyway, usually it's because somebody died or something like that. 6 months for just $997. Buy now and you will instantly receive a trade alert with an extremely high probability of success that you can execute immediately and make some of the most serious money in your life. Don't leave good money on the table. 95% of these alerts make money. Just to give you a tease, this is the chart on a trade alert you will receive within seconds of completing your purchase. What I'm not going to tell you is whether this is a buy or a sell. That one is up to you. So who is John Thomas? Well, if you're going to work with me for 6 months, it's best to find out who I am. My family origins are very humble. Growing up as the oldest of 7 children on a remote farm in Southern California. I lived the all-American childhood playing Little League Baseball and becoming an Eagle Scout. There wasn't much to do in the old days in California, but hunting, so I picked up a job as a paper boy for the Los Angeles Herald-Examiner. I found the stock pages, bought IBM at 20 and sold it at 30, and suddenly found a far better way to make money than delivering newspapers off the back of a bicycle. By the time I was 16, I earned enough money to fly to Europe. By the age of 17, I'd visited more than 50 countries and spoke 4 languages. At UCLA, I majored in math and DNA research, which landed me a job at the nuclear test site in Nevada. Their yield didn't mean interest paid, but millions of Russians killed. I didn't see much of a future in that, so the government sent me to Southeast Asia for a few years of research where I learned how to fly and jump out of perfectly good airplanes. There I advised the militaries of America's Asian allies. As the war wound down, I became a foreign correspondent for The Economist magazine, where when they learned I had a math degree, they switched me over to covering the Asian economy and the stock market. And this is a box of medals which I trot out once a year on Veterans Day. This is what I got for 10 years of government service. As a foreign correspondent, I covered China during the Cultural Revolution, was the first American reporter to visit North Korea since the Korean War, and covered the rest of the continent all the way to India. I figured out very quickly you didn't have to be that smart to make money in the stock market, so I got into the industry, joining Morgan Stanley. After 10 years there, I started my own hedge fund, and see, this is my original ID card from Morgan Stanley for 1983. Yes, the years have been cruel. And this is me losing the All Japan Karate Championship, never enter a karate final with a knife, with a broken wrist. Of course, Desert Storm kept me occupied both as a tank commander and as a pilot. I rapidly became the top performing hedge fund of the 1990s, eventually bringing in a 1,000% return in a decade. Then the money really started to pour in. It's an understatement to say when your income goes from the thousands to the tens of millions, it really has an impact on your lifestyle. You get to collect the latest hot car, fly your own private plane around Europe, go marlin fishing in Mexico, and collect vintage Rolls Royces. I now spend my days pursuing my first love, finding winning trade alerts, but I now do it from my 3 mansions in San Francisco, Lake Tahoe, and Zermatt, Switzerland. And I've quit turning millionaires into billionaires. There's far more satisfaction leveling the playing field for the average guy and teaching him how to trade, and that includes you. If I can take a $50,000 account and turn it into $500,000, that is more job satisfaction than I could get anywhere else. In the little free time I have left, I pursue my other love, flying vintage aircraft on weekends. See an old plane flying loops over San Francisco or London these days, it's probably me. The ultimate luxury, of course, is to give to those who need it. As a Marine Corps veteran, I volunteer for grief counseling for widows and orphans, and am a major donor to wounded warriors. When wildfires hit California, I visited the main evacuation centers and handed out $10,000 worth of Target gift cards. So when you make millions of dollars for your clients, you get a lot of pretty interesting invitations. $5,000 cases of wine, lunches on super yachts, free tickets to the Olympics, and dates with movie stars. So it was in that spirit that I traveled to the famed World War II fighter station at Biggin Hill in England to meet Mad Hedge concierge member Peter Monk. Peter was a poorly paid pilot for Ryanair when he first signed up for my global trading dispatch. After doubling his money in the first year, Peter upgraded to my concierge service. Then the money really started to pour in. Peter plowed his Mad Hedge trading profits into restoring a 1940 Battle of Britain veteran, a Supermarine Spitfire 9, in his backyard, begging, borrowing, and trading for parts all over the world. He eventually built up a fleet of 16 flying aircraft, which today are worth $65 million. When Peter invited me to fly one, I jumped at the chance. It was a mild and blustery day when we took off and headed for the English Channel. Even though the plane was 82 years old, we managed a brisk 250 miles per hour over the English countryside. The Spitfire could outmaneuver any plane the German Air Force threw up against it. And this particular plane is credited with shooting down 2 Messerschmitt 109s, and it's easy to see how. We found a clear piece of sky over the White Cliffs of Dover between 2 big fluffy cumulus clouds and commenced a full-on aerobatic flight test. Pilots always want to see what I can do in these old planes, and this time is no different. I executed multiple loops, barrel rolls, chandelles, lazy eights, Immelman turns, and wingovers, careful never to exceed the 1G limitation, or the wings might fall off. Spitfires can dive like crazy. We dropped from 8,000 feet to 2,000 feet in seconds. Then it was back to Biggin Hill for a perfect 3-point landing and a pint of beer. Let me make millions of dollars for you as well, as I have done for thousands of other followers over the last 16 years. I look forward to working with all of you. And let me check my store route and see what the orders have come in. We've got Rob from Toronto, Ontario, Elizabeth from Amherst, Maine. We have William from White House, Ohio. We have Karsten from Vail, Arizona. We have Dan from Wasaga Beach, Ontario. Dan, check your inbox, and you should have the trade alert in there right now. And since the market's open, go ahead and execute that trade right now. Very high probability you'll be well in the money by tomorrow. Buy today, own it tomorrow. Sounds like a great trade to me. So here's the offer you can't refuse, 6 months for just $997. Okay, let's see if we have any questions. I think we have a couple minutes left. So let's see.
I have a question from YouTube for you.
Go ahead.
VJ wanted to know, what is a barbell stock?
A barbell strategy is a strategy that makes 2 bets at the same time, and they often countervail each other. So in our barbell strategy, we have half technology stocks, which go up whether interest rates are going up, down, or sideways. And we have half domestic recovery stocks, which are all interest rate sensitives and have the biggest moves up when interest rates are falling, like they are right now. So that is the barbell strategy. And the great thing about the barbell, you always have something that's going up, because you're always going to have one kind or another economic conditions taking place. You will always have something that has a positive reaction. And this is how a lot of big hedge funds operate, is they run barbells where you have multiple bets against each other, but always have something that's winning.
Another question that we have is, how much is the renewal after 6 months?
Once you subscribe at the $997, you're grandfathered for life. And it's my life, not yours. So that is the answer.
All right, that is all of the questions that I see over here in the YouTube side.
All right, well, just let me take a quickie look at my store, see which other orders have come in. We've got Vincent from Armagh, Ireland. Thank you very much, Vincent. Promise to work hard for your money and earn your trust. We have Norman from Odessa, Texas. Probably get a lot of oil input there. Michael from Charlotte, North Carolina. I can see we're going to hit our 25 limit pretty soon. So if you're just hemming and hawing and sitting on the fence, go ahead and place your order or the store will shut down. We have Lewis from Lakewood, New York. We have William from Billings, Montana. And we have another one here, Nigel from Hong Kong. All right, well, I think that just about does it. Those who purchased, look forward to working with you in the coming 6 months. This is John Thomas, the Mad Hedge Fund Trader, signing off for today. Good luck and good trading.
Enjoy that hike, John. Thanks for coming in.
I will. I do it. I enjoy it every day.
All right, awesome. Thank you so much. All right, let's go ahead and do this real quick. Let me go ahead and make me the presenter. And okay. Perfect. Very cool. Let's go ahead and just take a moment. Thank to some of our sponsors. AAII.com is up this time. AAII has been a great sponsor of us for a few years now. A huge nonprofit. If you've heard about the AAII investment survey, that's them. You can find out more about AAII at AAII.com. We are, of course, Metastock. Metastock has been rated #1 in its price category for 31 years in a row. I love the ability to scan through the markets, eliminate those stocks that are not interesting, and find the ones that have opportunities, potentially. You can also use it to test market ideas, forecast probable price movements. We're going to be talking about kind of a lot of the power tools here in just another session. Real-time commentary, alerts. Pricing here in the US actually starts at $69 for our end-of-day version and $265 for the real-time version. The special that we're going to do today is if you buy a month, we'll give you the second and third month for free. So if you do that today, you'll be running until Christmas Eve. And what a great time to be able to kind of go in, start to really figure out the software. As part of the software, we give you unlimited access to our support team over here. They do a great job. They get rated highly every time we do a survey. We do a survey every time somebody calls support. You also get Unleash the Power of Metastock, which is a training course that you can go through on your PC. It shows you all of our favorite tools, how to run everything, all that kind of stuff. And we also have you sit down with somebody on our support desk. We call it our white glove installation. They'll help make sure everything gets installed for you. They'll answer any questions. They'll tour you around the software. All of that stuff is included. And if you do it on the end of day version, it's going to cost $69. Again, that's the version that's been rated #1 31 years straight in its price category by the readers of Stocks and Commodities magazine. So it's about $23 a month. You can do that in a number of places. Let me go ahead and get these typed in the chat for you. You can do it at metastock.com/conf-promo.
Yeah, if I can get those. I was working on it.
All right, there you go. And then metastock.com/sales-chat and Metastock 800-882-3040. But Greg, I need you for something.
How may I be of assistance?
You know, we got all these prizes. They're not going to give away themselves.
Okay, what do we got?
All right, let's see. The next prize in the list is
number generator.
The next prize in the list is going to be the Matt prize package. So Zaheer talked earlier. He started the day with us. He has a prize package that includes his portfolio accelerator calls, a stock market blueprint, a methodology user's manual, a wealth calculator, and a bonus recording. Value of $297. There's a lot of bonuses in that one bonus package. Greg, what I need from you to give away that prize package is a number, and that number can be anywhere between 1 and 6,585.
Oh, you changed that parameter 6585?
Correct.
Okay. According to the random number puller, it's 2510.
Okay. And then that is Joseph L. with another Yahoo address. Interesting enough. Now, Greg, why don't you tell people that might be watching on YouTube how they can actually be eligible for a prize?
Absolutely. All they need to do is go to metastock.com, hit the banner on the top of the page, and register there. It takes about 2 seconds. Also, they can see the schedule of the events for the remainder of the day and for the remainder of the week while they're there. Also, you don't need to do it more than once. You only need to do it once for the entire week.
Awesome. Just in case, if you win a prize or when you win a prize, I'm an optimist. When you win a prize, what's going to happen is we're just going to keep them in a spreadsheet until the end of the week. At the end of the week, I'll distribute all the prizes to the winners. So you'll be contacted about how to claim your prize next week. All right. Greg, thank you very much.
Thank you, Jeff.
All right. And actually, we're doing so good on time today. Let's go ahead and go to our next speaker. Our next speaker is Jeff Tompkins. Jeff has been a partner of Metastock for a number of years. He started teaching people how to trade on a website called udemy.com. In the time that I've known him, absolutely fantastic guy. Lives up north of us in Idaho. He's actually kind of set up a hedge fund, started to manage his own hedge fund. Very, very great guy. Super good guy to work with. Absolutely love it. Every time I talk to him, he's always in a good mood, always happy. Let's go ahead and get you started. Jeff, how are you doing?
I'm doing well, Jeff. How are you doing?
Good. Nice name. Let's see. Where did my attendee list go? Shoot. Oh, here we go. Okay. I had to be able to find you so I can actually make you the presenter. I can hear you well.
Good.
And then here comes the presentation screen.
All right. Let me show my screen here.
Perfect. I can see it and I can hear you. And I'm going to get out of the way. It's your turn. Go.
All right. All right. Well, thank you. Thanks for having me. Great to be here. Welcome to all of you. We have a lot of great stuff to cover today. I'm going to be sharing my Slingshot setup. We're going to look at some charts together today. You're going to walk away with an actionable strategy that you can add to your trading arsenal. So I'm excited to share this with you guys today. This is going to help us buy low and sell high. And it's also going to give us up to 3 days of advanced warning or notice of a trend reversal or trend continuation. So a lot of great tools to take a look at today. Read you a quick disclaimer before we get started. We, of course, know that trading securities and options involves risk. Prior to buying or selling an option, an investor must receive a copy of characteristics and risks of standardized options and need a broker to trade securities and options and must meet suitability requirements. We'll be going over some various results on our session today. I do my very best to use real world, real money results. So I'm actually going to be sharing some results that back up the strategy that we'll be looking at on our session from my personal trading account. I was about to say TD Ameritrade, it's now Schwab, my Thinkorswim account. So we'll be looking at some different results, but just know that anything that I do share due to the time critical nature of trading, brokerage fees, activity of other traders, we don't guarantee that anyone will mirror the performance. All right, so let's start out by looking at why markets are so difficult to trade. Obviously, if it were easy, we'd all be doing it and making millions of dollars. The reality is that it's challenging. And there's a number of things that can create challenges in trading and investing. Really, a lot of it can be boiled down to psychology. And this is, I think, a very useful psychology curve as it relates to the markets. And I'll kind of walk you through it, and then we'll get into the Slingshot setup and talk about how it can overcome some of these drawbacks. So typically when we get into a trade or an investment, right, we start out with some level of optimism, maybe enthusiasm, even exuberance as we get into the trade. We wouldn't enter a trade otherwise. But the reality is markets are, and they're becoming more so, volatile, right, and unpredictable. So often when we get into a trade, they can move against us. And that enthusiasm and exuberance can quickly turn into anxiety, denial, fear. This is where we typically will see panic selling. We've seen this quite a bit over recent times. We were in a bear market in 2022. We just recently seen some pretty big market corrections. This can create a lot of challenges for us. But inevitably, if we can stay in the market long enough, that cycle kind of turns back the other direction, and that panic selling, basically converts into some degree of renewed hope or optimism and relief, and we start the process all over again. Now, the thing to notice here is typically when we're over enthusiastic about a trade, that tends to happen when there's a high level of financial risk. So when we're greedy, we often become greedy when there's a high level of financial risk. And when we're fearful and there's a lot of panic selling taking place, that can actually be the best time to trade. All right, so I want you to keep this psychology curve in your mind as we progress, because we're going to kind of turn this on its head and take advantage of it. So when we kind of consider the psychology of failure in markets, what causes it? Well, anytime we enter a directional trade, our goal is to buy low and sell high, right? Unfortunately, that goes against our human instinct. So instead, when a security is going down, again, we tend to panic and sell, and when it's already gone up, we tend to buy. Okay, and we'll panic when prices falling because we're afraid of losing money, right? So we don't know, we don't have a crystal ball. We don't know how long that downturn might take place. So there's a lot of second guessing, okay? And then we'll buy when it rises because we're afraid of missing out. It's the FOMO mentality, okay? And to compound that problem, we're wired to repeatedly make the same mistake. So we'll buy high and sell low because that's what our emotions tell us to do. So this probably resonates with a lot of you out there, and if you've traded or invested for any period of time, you've likely encountered this. And without a solid trading plan, we're vulnerable to our emotions. Okay, and in addition to that, if we're lacking a strategy that can identify momentum shifts, which in other words means that we don't know when to get in or buy low and get out and sell high, that can pose a major problem for inexperienced traders and even experienced traders and investors. Okay, so what we're going to do on our session today, using a very specific strategy and indicator, is turn the tables. And rather than being greedy when there's a high level of financial risk and being fearful when it might actually be the best time to trade, we're going to be fearful. And maybe fearful is not the right word, but we're not going to fall for the the trap of getting in when markets are at, for instance, all-time highs, and there's actually a high level of financial risk. Okay, instead we can play that to the downside. We can take advantage of potential market sell-offs, and when that sell-off ensues, we can actually become greedy and get into some really great opportunities. It's that old Warren Buffett adage, be fearful when others are greedy. Okay, and this is the contrarian approach that famous successful investors like Warren Buffett, Carl Icahn, and others use, and how they've been so successful. So they're aware of the drawback, the psychological drawbacks of trading and investing, and what the herd or the crowd typically does, and they just really do the opposite. So what I'm going to give you today to make it easier is you're going to discover the Slingshot setup that's worked 100% of the time. If you apply this to the major indices, the S&P, the NASDAQ, the Russell, all right, you can go back to the dawn of the stock market and apply this setup, and it works 100% of the time. There's not a lot out there that can make that claim. So I'm going to show you how to identify the setup, how to trade the setup, how to profit from the setup, how to get in near the bottom and out near the top. Of course, we're not going to claim we're going to pick an exact bottom or top, but the Slingshot can help us get pretty close. It's rather incredible. And the good news is you can apply this to really any market, any asset class, any time frame, because it's all really built around the psychology of markets and how market participants, basically view markets and then trade them. So this is really universally applicable to any market, any time frame. I'm also going to give you a really simple but highly effective trick to help eliminate a lot of your losing trades. This is built into the indicator we're going to look at, and it's an I think underutilized approach to entering trades. But I'll show you how it can actually keep you out of a lot of bad trades and out of choppy market conditions. We're going to look at some trade examples together, and then stick with me to the end, and I'll show you guys how you can copy my success and get my trade signals that I use to make a living in the markets. So let's start out by imagining if you could buy low and sell high without using any guesswork. All too often we use some degree of intuition or guesswork in our trading, and this is where the emotional component comes in, where we can have fear of missing out when markets are at all-time highs. And again, these can be really dangerous traps. Well, there's actually a volatility study that's made this possible since the beginning of the markets. Again, so if you go all the way back to the dawn of the stock market and apply the Slingshot setup, it allows you to buy low and sell high with 100% accuracy. So looking at the major indices, the S&P, the NASDAQ, the Russell, incredibly, due to the nature of markets and their long-term upward trending bias, makes this possible. Not only that, it warns us of potential market sell-offs. All right, so this is very valuable because, again, thinking back to the psychological curve, when there's a high level of financial risk in markets, and this, for instance, can occur when markets are trading around all-time highs as they are now, right? There's more downside risk than upside potential, all right? And we become fearful, but we also become greedy. We don't want to miss out on a continuation of an uptrend in markets, but there also is a lot of downside risk. And if that risk plays out and we get a market sell-off, we need to know and be prepared, when that is likely to occur and be prepared for it. And the Slingshot will help us do that. Now we're going to do this with volatility bands. So once these volatility bands can't be stretched any further, they have to bounce back. Okay, it's an inevitability of the stock market. And if it didn't occur, markets wouldn't have the long-term upward trending bias that they do. And this rubber band effect makes it possible to accurately identify tops and bottoms in the market. Okay, and incredibly, this information is highly underutilized and really unknown among market participants. So let's start looking at some examples of how this plays out and really what it looks like in the market. And this is, I think, a great example to share because it's going back in the recent past, one of the most extreme market sell-offs that we had back in early 2020 during the Corona crash. So this is a daily chart of the S&P 500 index. Okay, and for now, I just want to point out what's, kind of the market structure, what's taking place here. So, and again, keep that psychological curve in the back of your mind and apply it to what I'm going through here. So back in February of 2020, markets are hitting new all-time highs. Okay, so we put in a new all-time high around the third week of February. Now, this is where, probably the bulk of retail traders, most market participants are experiencing FOMO. Their fear of missing out. If they're not in a trade, they start buying in because markets are hitting new all-time highs, and the natural tendency is to think that they're going to keep going higher, and they don't want to miss out on that. Okay, but there's actually a high level of financial risk here. Okay, and as I mentioned, the downside potential is greater. Downside risk is greater than the upside potential. So this is actually where we, as a contrarian trader, want to sell. Okay, when most other traders are buying. Now, as we all know, there was a major market sell-off. S&Ps were down over 30% in just a matter of a few weeks. All right, now that created a lot of opportunity. And this is where we'd want to look at buying when most other traders are panic selling. Okay, again, a contrarian approach. Now, interestingly, in late March, April, May, into June, markets rallied right back up to that level, which was right around 3,200, where that initial sell-off ensued. Okay, this is where we can look at taking profits when most other traders are starting to get back in and buy. Okay, and notice how we came right back up to that level and then actually pulled back. Okay, this is no accident. This occurs repeatedly in markets. Okay, there was, if you look at like large institutional players, this is probably what they're looking at. They're looking at that initial volatility expansion level, the sell-off that ensued, the rebound, which they got in on, and this is where they're going to be taking profits. Okay, so we're going to come back to this chart because this is the essence of the Slingshot, and we're going to come back to this chart and apply the actual rules of the Slingshot to this specific scenario. Before we do that, I'll just give you a quick background on myself. Again, I'm Jeff Tompkins. Thanks for being here today. Promise to make it worth your while. I'll give you just a brief background on where I come from, what my experience is, and then we'll get into the fun stuff. So I have over 2 decades of experience trading the stock, options, and futures markets. I received my professional training at Morgan Stanley as an intern at the trade desk back in the early 2000s. I founded Altos Trading, where I'm the chief investment strategist, about 9 years ago. And we've grown rapidly to over 60,000 members in over 100 countries across the globe. I'm also a hedge fund manager, and I manage money for my clients at Altos Capital. In fact, the Slingshot strategy that I'll be sharing with you guys on our session today is one that I utilize within my hedge fund, and I really credit it along with the indicator that we'll be looking at today, to the success of Altos Capital and never having a losing year in the fund. We've had positive years every year since we've launched the fund. I'm also the founder and creator of the Trade Trend Signal software, which we'll be using alongside the Slingshot as well today. So by the end of our session, you're going to discover one trade setup that has never failed going back to the beginning of the stock market. And it's so reliable, it's worked 100% of the time on the major indices. So again, if you apply this Slingshot setup that I'll be revealing momentarily to the major indices, the S&P, the NASDAQ, the Russell, it works all the way from the beginning of the market, and it plays out every time all the way up until today. And we'll look at some recent examples on some charts. So it hasn't failed even once, not even in the Corona crash or the 2022 bear market. It happens repeatedly with astounding predictability. So whether you're just starting out or you're a seasoned veteran, this is must-have information for today's markets as they become more volatile, more erratic, and less predictable. So you're going to discover why volatility is one of the only leading indicators of market direction. Okay, and this is what we call implied volatility, which we'll be talking a little bit about on our session. How to identify when markets may be vulnerable to a sell-off. This alone can completely turn your trading around because it helps mitigate or even eliminate that fear component when markets are at all-time highs and there's a high level of downside risk. How to identify when the market is likely to go up. So when there is a sell-off, maybe it's a black swan event or a full-on bear market, okay, how do we know when to get in and buy? How to determine exactly how far the market is likely to go up. Okay, this is what I call the trader's dilemma. You get into a trade, it's working out, it's going in your favor. And again, without a crystal ball, you don't know how far it's going to go. Then emotions come into play. You don't want to get out too early and miss out on future potential profits. You don't want to hang on to a trade and have it reverse on you and watch your profits evaporate and turn into losses. These are all major psychological dilemmas that we can overcome with the Slingshot and the Trade Trend Indicator. I'm going to show you how to get your hands on a tool that will change your trading forever, which I realize is a bold claim, but it's one that I make because it's changed my trading forever. I use it religiously. I stand by it, and I use it alongside highly effective strategies like the Slingshot. So let's imagine a Slingshot, all right? So you'll see here quickly why I call this setup the Slingshot setup. As we pull a Slingshot back, okay, muscle energy is transferred to elastic energy in the bands of the Slingshot. After we release the Slingshot, that elastic energy is transferred to the stone as energy of motion, okay? And this is referred to in physics as kinetic energy. Well, kinetic energy kind of plays out in a different form in markets. So again, this is why I call it the Slingshot. This is the analog. And it plays out in the form of supply and demand. So when there's demand for an asset, that creates buying pressure. Buyers come in, right? If there's excess supply, it creates selling pressure. Just like any other market in the world, financial markets, the stock market, are all built around supply and demand. Okay, and this is where volatility and the Slingshot come in, because once the bands become overstretched, it gives us a buy signal and we can enter the market with high confidence that prices will go up to the initial resting point of the band. Okay, and again, there's not a lot of inevitabilities in markets. Again, they can be very erratic and unpredictable, but this is one inevitability. If this did not occur, we wouldn't have efficient markets, and the stock market wouldn't go up over the long run. Okay, it might just range sideways or even go down, and nobody would ever invest in it. Okay, so this has to occur, and we're going to apply this Slingshot effect using volatility bands. Now, volatility, specifically implied volatility, is a forward-looking predictive indicator. Okay, and the volatility bands are going to tell us when prices move too far from the mean or the average and is likely to reverse direction. So we call this mean reversion. Now, the two tools that we're going to be using, two indicators in combination, we're going to eliminate all the lag. Okay, so most indicators have a major lagging component. And this is why often you'll look at them on a chart in hindsight and they look great, but they don't work too well in live markets when you go to try to use them to place trades. Okay, so we need to get rid of that problem and use indicators and information that eliminates most, if not all, of that lag and gives us current information. Okay, and we can do this with the Bollinger Bands. So we're going to be using the Bollinger Bands as one of our indicators. This indicator, it's been around for many decades, developed by John Bollinger. You can get it on any retail trading or charting platform. It's available on the Metastock platform, which we're going to be looking at here on our session. And it can help us, like any other indicator, there's a multitude of ways to apply it, right? We're going to look at one very specific way, and in that specific way can help us pinpoint turning points in a security with incredible accuracy. So this is kind of what it looks like on the chart. Okay, so notice we have the Bollinger Bands plotted. For now, I just want to kind of point out a couple things, and then we're going to dive a little bit deeper into this. Now, on this chart, we see that price is breaching the lower band, and I'm going to walk through here momentarily what the band settings are and what the implication and significance of what they're telling us. But for now, I just want you to notice that price is breaching the lower band. All right, and notice that we have a sell-off. Now, this is what we call volatility expansion. Okay. Now, markets are always, in terms of volatility, contracting or expanding. So after this sell-off ensues, eventually it creates demand. So there was previously excess supply, there was a volatility expansion, and then it creates demand and attracts buyers and drives price back up to that initial level. Okay, so this is the slingshot, and we'll come back again to some charts to really dive into how to trade this. Okay, let's talk a little bit about the Bollinger Bands. I'll give you kind of a high-level overview what they are, just more for purposes of background information. So you have a baseline understanding of why we're using these and what they're telling us. And basically, it's a simple indicator. It just consists of 3 bands. Okay, it's plotted right on your chart, and that center band is just a simple moving average of the securities price. Okay. Once we have the simple moving average, we then take a standard deviation of the securities price. Now, standard deviation is simply a mathematical measurement of average variance, and it measures how spread out numbers are from an average value. So I won't go into all the calculations, but those are the outer bands that you see on your indicator. Okay, so again, 3 bands. The key thing to understand in terms of interpreting these bands is that because standard deviation is a measure of volatility, when the market becomes more volatile, we see the bands widen. And when the market is less volatile, the bands contract. So recall how I mentioned that markets are always in volatility, expansion, or contraction mode. So they're always alternating between contraction and expansion. So when you apply the Bollinger Band indicator to your chart, you're going to see the bands widen, then contract, then widen, and then contract. All right. Now, as far as settings, I use the default settings for, these are the settings that most trading platforms, charting platforms will default to, including Metastock. So if you go into the Metastock platform, pull up the Bollinger Band indicator, plot it on your chart, it will already default to a 20-period SMA or simple moving average and a 2 standard deviation setting from the mean for the outer bands. Okay, so that tells us that when price is trading around or at the outer bands, it's trading 2 standard deviations away from the mean. Okay, that's actually really good information to have. Reason being, price can't sustain a 2 standard deviation move from the mean for very long before it retraces in the other direction. All right, let's look at some common ways that Bollinger Bands are used in practice. Okay, like I mentioned, any indicator that you look at, you can give it to 100 traders and it could be used 100 different ways. Okay, there's a lot of ways to use it. These are some of the more popular ways the Bollinger Bands are used, and we'll talk about what they are and some of the drawbacks. One is to buy at the bottom band and sell at the top band. This is probably one of the more common ways that people use the Bollinger Bands, but there's a problem with this. It can work in low volatility conditions or volatility contractionary periods. But the problem is that price can hug an upper or lower band for extended periods of time. So when price eventually breaks out and goes into a trend, it can follow one of those bands for an extended period of time. So while this approach can work in very specific limited market conditions, it can fail miserably in strong trending conditions. For that reason, don't prefer to use that approach. Another common approach is band contraction and expansion. This actually is very good information, and it's one that we're going to incorporate into the Slingshot. because it can be a good indicator of an impending big move in a security. Now, the problem with it is we don't know in which direction the move will occur. So it doesn't really give us directional information. It just tells us that when we're in volatility contraction, we know that inevitably volatility expansion is on the horizon, but we just don't know which way. So for that reason, we don't use that approach alone, but we will build it into the Slingshot. Now, another common approach is to buy or sell at the middle band. This is what we call a mean reversion strategy. And this particular tactic can work in strong trending markets, but it fails in sideways ranging markets. And most of us realize that markets don't trend most of the time. Most of the time they range. Okay, so for that reason, we don't prefer that approach. Now, the Slingshot is a unique approach using the Bollinger Bands to not only analyze volatility, contraction, and expansion, but also tell us directional information. So what we do is we wait for the lower band to break. I'll explain what that means. And then price will hug that lower band and ultimately rebound to where the breach initially occurred. This is the essence of the Slingshot. Okay, so we're gonna now dig a little bit deeper into the Slingshot, look at some examples, look at some charts. But incredibly, as I mentioned, if you apply the Slingshot to the major market indices, the S&P, the NASDAQ, all right, it's returned to the initial volatility breakout with 100% accuracy. So that includes the bear market of 2022, the flash crash of 2015, the flash crash of 2010, the crash following the 2008 mortgage crisis, the 2000 dot-com bubble, even the recent Corona crash. So these are all major market downturns, okay? But every black swan event, market correction, major crash, bear market, you name it, this plays out. And we're gonna shortly look at some actual real world examples of these, okay? So let's start doing that. We're gonna go back to this S&P chart of the Corona crash, okay? But now we've got the Bollinger Bands plotted on the chart. All right, so get your pen and paper handy. I'm gonna walk through the rules of the Slingshot and how to identify this. First, I want you to understand the market structure. Anytime you trade, always step one is alongside considering your risk tolerance, etc. Market structure. So you want to know what is the market structure, the context of the market that I'm trading in. Are we in volatility contraction? Are we in volatility expansion? How do we know that? Well, the Bollinger Bands tell us that. So if you look just to the left of where this Slingshot started, so this is where the bands are getting pulled back. We're in volatility contraction. How do I know that? The outer bands are relatively narrow and horizontal. Okay, so we're in volatility contraction. Now we want to look at that in reference to the price. What's happening to the market, to the S&P 500? It's hitting new all-time highs. So when you see the candlestick there hitting the upper band, again, that's a 2 standard deviation band from the mean. Okay, that's where markets were hitting all-time highs. Now they start to kind of go sideways and retreat. Then they rotate lower into that lower band. This is the beginning of the Slingshot. So I mentioned at the beginning of our session, I would let you know how to tell when markets are vulnerable to a sell-off. This is where that begins to occur. When the price, in this case the S&P 500, breaches the lower band. So notice how on that first candle it just touches the lower band. We even got a little bit of an intraday pullback to the upside. On the second candle, we get a volatility expansion. So notice how the range of that candle widens from the candle that just touched that lower band. And there's something else critical here that is the key to identifying the beginning of the Slingshot, and that's the outer bands. So when that candle breaches the lower band, and it also closed below it, the outer bands, which were previously narrow and horizontal, begin to diverge. So notice that they're diverging as price is breaching the lower band. This is our clue that markets are likely to sell off, okay? Of course, that occurred. S&Ps lost over 30% of their value in just a few weeks. Here's all the panic selling, okay? This is excess supply that is resulting in panic selling and eventually creating demand and attracting buyers back into the market. Okay, so this is where your Warren Buffetts, your Carl Icahns, your George Soros are coming in and buying. Now, again, let's think about this in the context of the actual crash and the catalyst behind it. Okay, at this point in time, which was around the 3rd week of March, okay, we're still in the infancy of the COVID pandemic. Okay, we don't have really any clue about the magnitude, the global impact. We have no viable treatment options, no vaccine at this point. We have global economies, governments shutting down. Okay, there's a lot of turmoil at this point in time. So it would make you wonder, how did markets just around the 3rd week of March over the coming months, April, May, into June, return right back up to that initial level? There was no resolution to the catalyst that caused the sell-off. Okay, this is supply and demand at play in markets. And this is the essence of the slingshot. So we know when markets are likely to sell off, when they're vulnerable and there's a high level of financial risk. And as a contrarian trader, we can play that to the downside. It also allows us to get in and buy when other traders are panic selling, and take advantage of lower prices if we want to go long and get back into the market. And then if we do that, we're in the trader's dilemma. Okay, so how do we know how far the markets are likely to go back up? Obviously, at this point, they've far surpassed this level. But in the near term, we're just looking for the market to return back up to that initial volatility expansion level. That's that left circle on your chart where the slingshot begins to get pulled back. And sure enough, they're right back up there in June with no resolution to the catalyst that caused this. Okay, this is the slingshot setup. Let's look at some other examples. You can apply this to individual stocks. This is an example on Apple daily chart. So we're just looking at a daily chart here. Notice on the left half of the chart, Apple's in a strong uptrend. Okay. Now in the middle of the chart, we get a bit of a downside retracement into that lower band. And for any of you who are candlestick traders, you'll look at this and be like, oh, these are 2 bullish reversal candlestick patterns right off that lower 2 standard deviation band. I would venture to guess this trapped a lot of traders who use that approach that we talked about of buying at the bottom band and selling at the top band. A lot of traders probably came in here and tried to buy. In fact, we know that they did, because if you look at the price action of these 2 bullish reversal candles, we see intraday that there was some degree of a sell-off into that lower, and even breaching that lower 2 standard deviation band, and then an intraday reversal back up and a close near the open. Okay, so that occurred for 2 days. Okay, but notice what happens on that second candle when it breaches the lower band. The outer bands diverge. That is volatility expansion. So we're going from an uptrend into a potential sell-off. There it is. Okay, Apple sells off right into a support level, creates enough demand to attract buyers that drive price right back up to that initial volatility expansion level. And in this case, it went on to make an additional upside move, which is an extension of the slingshot that, due to the limitations of time, we won't get into. I just want you to understand the basics here. Okay, but a lot of times these can go on to make significant extended moves to the upside. Here's another example on the Qs. Okay, this is back from 2018. We had, I think, like 4 corrections back in 2018. Okay, this was one of them. So this is a daily chart again. Notice on the left edge of the chart, we're in volatility contraction. How do I know that? The bands are horizontal and relatively narrow, and price is hitting the upper band. Now, should I be greedy and start jumping in and buying the Qs at this point? Absolutely not. This is where I want to wait for volatility expansion. And there it is. This is the start of the slingshot. How do I know? The candle breaches the lower band, and simultaneously the outer bands diverge. They went from being relatively narrow and horizontal to diverging. That tells me we're going into volatility expansion, but that's not enough information. It has to happen simultaneously with the breach of the lower band. There's our slingshot. There's a major sell-off from roughly around the 180 level down into the 143.50 level. Okay, people are losing money here. They're panic selling, but it creates a buying opportunity, and the buyers come in and drive price right back up to that initial volatility expansion level. Let's look at another example. Does this work on intraday timeframes? Yes, it does. Again, this is universally applicable. AMD, this is a 5-minute chart. Okay, notice on the left part of the chart, price is just basically oscillating between the lower and the upper band. That was an approach we looked at. And as I mentioned, it can work in very brief, specific, market conditions when we're in a tight range. So you could have had maybe 2 or 3 good trades here if you bought at the lower band, sold at the upper band, until you got trapped right here around the 1800 hour. Notice how price begins to breach the lower band. It starts to rotate lower, and we get volatility expansion. Okay, then we get the sell-off, which eventually attracts buyers who drive price right back up to that initial volatility expansion level. So there's a slingshot on the 5-minute intraday time frame. So identifying when the market is vulnerable to a sell-off or whatever asset you're trading is relatively straightforward, right? We're just looking for a breach of the lower band and a simultaneous divergence of the outer bands from a previous volatility contractionary period. But how do we identify the buy zone? This is the real challenge, okay? It's kind of like trying to catch a falling knife. You know, where do you catch it before it hits the floor? That's difficult to do. So there's a number of approaches for identifying the buy zone, but the trick is really to identify when the band is overextended and is ready to snap back. Because we know when we're in volatility expansion, that's when we're getting a sell-off. We're going to go back into contraction, right? And price is going to reverse back up. Markets don't go in straight lines forever, unless, you know, you are one of the unlucky few who buys a stock that goes down to zero. You know, eventually markets reverse, and that's the challenge, okay? But we know it's going to happen. So there's a number of ways to do this. And I actually spent over a decade and thousands of hours trying to determine when momentum is shifting and a new trend is starting. I used to do all this manually. And unfortunately, I had to use some amount of guesswork. And this is, again, where that psychological component comes into play. We want to eliminate that as much as possible. So there's some different approaches that I would typically use. Wait for maybe a sell-off into a key support level, wait for that level to hold, and then a confirmed reversal back to the upside. I've used bullish candlestick patterns and even combined those with key support levels. Waited for price to come back in to the mid-range of the bands, which many times, unfortunately, causes you to miss out on most of the move. So that there was a lot of limitations here. Okay, so I decided to develop this into an algorithm that can accurately identify when a trend is likely to reverse direction. Not only that, it can also identify the beginning of the slingshot when markets are likely to sell off. This took an enormous amount of work and time, and really I credit Metastock with Metastock and their team of programmers are the ones that actually initially helped me develop this into an indicator. And there was a lot of challenges. We had to configure it to work on all time frames. Obviously, we want it to work on the major indices like the S&P, the NASDAQ, the Russell. But what about all the individual stocks and now, cryptocurrencies and Forex pairs? So there was a lot of testing that went into all these markets to make it an adaptable algorithmic formula that can reliably predict market trends. And not only that, and this is where it gets really unique, it can actually tell us up to 3 candles in advance of a move of a likely trend direction or trend reversal. Okay, so it's going to give us a buy or sell signal near the outer bands, okay, up to 3 candles in advance of the move. Now, the cool thing is this indicator can actually be used as a standalone, but it's a real powerhouse when we combine it with the Bollinger Bands, okay, which is why I'm sharing the Slingshot setup with you today. Now, when you formulate the right combination of momentum indicators, volatility studies, and price action, okay, because we're trying to eliminate as much lag as possible and really just use real-time current market condition information, we can actually accurately identify buy and sell signals at the outer bands, up to 3 candles in advance. So what that means is if you're trading off a daily chart, you can have up to 3 days of advance notice with the trade trend indicator. All right, so the trade trend indicator gives us accurate buy and sell signals up to 3 candles in advance of a trend. Okay, so if you're a day trader, you're trading off a 5-minute chart, you have up to 15 minutes of advance notice. Okay, if you're trading off a 30-minute chart, you have up to an hour and a half of advance notice. Using a proprietary momentum algorithm, it reads the market in real time. Okay, it also has a trailing stop algorithm component that helps us manage the position. It can help predict short-term and long-term trends with astounding accuracy. It can be really applied to any asset class, equities, ETFs, futures, Forex pairs, cryptocurrencies. It has a built-in scanner so we can scan for forecasted signals in advance before the move occurs. We can apply it to any time frame. I'm an options trader. By training, that's how I really started out. And the bulk of my trading is in the options market. I use this indicator to help me time my option strategies. It's an incredible tool to use along option strategies. For any of you guys who trade options, there's real time critical nature of those. The indicator does not repaint. So once you have a confirmed signal, it's there on your chart. This, if you're not familiar with what that means, a lot of indicators repaint. So if you go back and look at them in hindsight on a chart, they look really good. When you go to use them in live market conditions, they don't perform the way that you expect them to. This is often due to repainting. Okay, so the indicator does not do that. It has built-in protection to avoid whipsaws. It captures most of the trend before it reverses. It's designed to limit losses and let profits run. You can use this with any other indicator system, just like the Slingshot. All right, and we're going to look at the indicator with the Slingshot here in just a minute, and help us trade without guesswork. Okay, so there's no guesswork involved. It gives us the exact entry, the exact direction, and the exact exit. Now, I mentioned I'd give you a little trick that can help us eliminate some losing trades, and simply by staying out of the trade. And this is built into the trade trend indicator. It's a specific type of order called a buy stop or a sell stop order. Now, the bulk, if you look at broker data, right, the bulk of orders are either market or limit orders, and that's fine. There's nothing inherently wrong with those, and there might be an appropriate time to use them, but this is highly underutilized for directional trading. So if you anticipate an asset to go up in price, yeah, you could jump in right when you make that decision with a market or limit order. But what if it doesn't follow through and you don't get the movement and it just reverses? You probably experienced this where you've gotten into a trade and it immediately moved against you, and you're wondering, like, why is it when I get into a trade it just immediately goes in the opposite direction? Well, what you can do to help eliminate a lot of that is, for a long trade, you set a buy stop order above the current market price. Okay, and again, this is built into the trade trend algorithm. It gives you an exact entry price above the current market price, and it's got to follow through. So the cool thing about that is you're generally going to be in a winning trade right off the bat. And if we don't get the follow through, then you just don't get into the trade. Conversely, you use a sell stop order for a short signal. We'll look at some of this, don't worry. But I do use this in my own personal trading account. And I like to share some of the worst market periods in my results. Yeah, I could cherry pick easy market conditions. We've been in a lot of those in this recent bull market. But what about like during the Corona crash, when there was huge losses taking place? There's a lot of panic selling going on. Well, I use the Slingshot and the trade trend indicator. So the trade trend indicator gave me a sell signal. I saw the Slingshot setting up. I knew markets were in vulnerable territory. I actually was very cautious and was mostly in cash. I was just putting on some small positions to play to the downside on that last week of February. So these are just my trades from February 27th toward the end as the market was selling off. Okay, so just in that last week, okay, over $13,300 on the downside. So I was playing the Slingshot to the downside. Now, obviously, in March, markets rebounded, March of 2020. I got a buy signal from Trade Trend. So I went ahead and got a little more aggressive. I was still trading relatively small position sizes. You can see my 1, 2, 3 contracts there. Buying in using the Trade Trend buy signal and the Bollinger Band Slingshot. And by the end of March, booked over $27,000 in profit. So when hedge funds were folding at unprecedented rates, retail traders were taking unprecedented losses, I booked over $40,000 in profits with most of my account in cash, using very small position sizes and just 2 indicators, the trade trend indicator and the Bollinger Bands. Okay, that's it. This is exactly how I did that. Now, guys, this can work in any market, any time frame. You can do it with any size account, and it provides predictive buy and sell signals before the move occurs, up to 3 candles in advance. So we don't want to wait until after the trend is already, set in. We want to try to get in this as early as possible. And Trade Trend has forecasted every market crash and rebound in the history of the market with 100% accuracy. So I'm going to be telling you how you can get this indicator on your own charts. And once you do, I challenge you to apply it to your chart, apply it to a chart of the S&P 500. Go back as far on that chart as you can. If you can, go back to the beginning of the stock market. Every market crash, black swan event, bear market, you're going to find a trade trend sell signal. Okay, here's some examples. This is the flash crash of August 2015, August 19. Notice how in the left half of the chart, okay, we're in volatility contraction. Markets are just oscillating between the upper and lower band. Okay, we're just in a ranging market until August 19th. Okay, trade trend flashes a sell signal 1 day before we get the flash crash. It then flashes a buy signal in early October on that double bottom, and there's the Slingshot. Markets rebound right up to that level. Now, this is the 08 mortgage crisis. Markets lost more than half their value in the second half of 08. Trade Trend gave us an advanced warning, May 21st. There's the sell-off. It also flashed a buy signal at the end of November before markets rebounded. This is going back over 2 decades, 2000 dot-com bubble. Okay, there's the sell-off. Can you guys spot the slingshot here? Okay, notice just a bit after those vertical dotted lines, okay, price comes down into the lower band, it breaches it, the outer band simultaneously diverge, trade trend then flashes the confirmation sell signal. There's the 2000 dot-com bubble crash. Okay, it also flashed a buy signal towards the end of September, early October, before markets rebounded. All right, let's actually hop over real quick to the Metastock platform, and I'll just show you some like recent examples of this. Hopefully you guys can see my Metastock chart here. So this is what the trade trend indicator looks like. All right, it's going to give you an advanced buy or sell signal. Okay, so the buy is a green diamond. Okay, and then a confirmed entry is a green arrow. A sell is a red diamond. Okay, this is again up to 3 candles of advance. These both gave us 1 day of advance warning, and an actual follow through entry is a red arrow to the downside. Now there's a couple slingshots here. Let's see if you guys can spot them. Let's look at this one here. Let me see if I can get my drawing tool up here. All right. Okay, so here's an example of a slingshot. Okay, notice how price is beginning to breach the lower band. By the way, we're looking at a chart of SPXL. This is the triple leveraged S&P ETF. Notice SPXL breaches that lower band. Simultaneously, we get diverging outer bands. Okay, previously markets were all-time highs. Okay, we should be fearful, not greedy. There's our slingshot sell-off. Trade trend gave us a very accurate buy forecast. Slingshot was going to rebound. And sure enough, SPXL is right back up to that initial level. Surpassed it a little bit, then we get another rotation lower. Trade trend gave us a sell warning here, which was actually a very nice forewarning of this sell-off that's coming. However, we didn't get a trigger within the next 3 candles. Each warning signal is good for up to 3 candles. So entry would have been with a sell stop right around down there. We eventually got there, but just not within the next 3 days. That's okay. You can still trade these if you prefer to. We just don't count it as a confirmed signal. But there's another slingshot. Okay, we start to get a breach of the lower band. Simultaneously, the outer bands diverge. There's our slingshot. We actually got a buy signal here. It was a little premature, no trigger, so we would have entered up there. Notice there's no green arrow that follows it, but still a nice slingshot. Okay, again, we could have gotten in there if we wanted to. And what do you know? Price comes right back up to that initial level, almost pretty much touches it to a T. And then we get another sell-off. This was a confirmed sell. So we got the forecast there around middle of October. We got a confirmed entry, so we'd enter here. There's our confirmed sell. There's a slingshot, right? Diverging outer bands. And there's our buy signal and a beautiful move up on that one. So there's some examples of a couple of recent slingshots on SPXL and using those alongside the trade trend indicator. Okay, and so this is all available on the Metastock platform. Obviously the Bollinger Bands is included, and we're going to tell you how you can also get access to the trade trend indicator. All right, so guys, virtually every system is going to produce winning trades. The problem is they don't keep you out of the market when conditions are not favorable. So you can end up giving back your profits on the losing trades. Okay, we're going to change all that. All right, this is more real world proof, guys. I use the trade trend indicator, as I mentioned myself, in my personal trading account. I use it in my hedge fund. This is real money proof. Now, these were not even slingshot setups. This is just using the trade trend indicator in the futures market. I also do trade futures. And guys, all I'm doing here is trading typically one contract, 1 or 2 contracts. All right, and has allowed me to produce over $8,000 profit in a day, over $6,500 profit in a single day, over $6,000 in a day, over $5,400 in a day, with as much as $27,500 in open profit. Now, there are going to be losing trades. The trade trend indicator helps me keep my losses contained. So notice I do have some losses in here, but they're relatively small compared to my winning trades, which the trade trend indicator allows to run and maximize. And so there's also, I didn't get into it due to the limitation of time, the trailing stop component. Okay, that's built into that as well, and it's going to tell you when you get a confirmed signal how to manage that position and lock in profits on successful trades. Here is a real money example from my personal account using trade trend and the Slingshot in combination. All right, and I did this just on 3 futures contracts. All right, and did over $26,600 in P&L for 1 day, with over $115,000 in open profit, just on 3 positions. Okay, this is using trade trend with the Slingshot. So now I'm going to make a promise to you guys. I want to help you guys have days just like these, and I'm going to give you access to my indicator. Okay, the exact indicator that I use and have used to produce results like I shared with you guys today. So this is a one-time opportunity for the MetaStock Summit to join me to discover how I make consistent income in the markets day after day, week after week. I don't hold anything back. So I reveal every one of my techniques like I did today with the Slingshot. You get full access to the indicator. Okay, I don't give you like some reduced version of it. You get the exact indicator that I use. I don't hold anything back. And there's a whole lot more that comes with it. So not only do you get 12 months of trade trend, and again, you can use this with equities, ETFs, futures, Forex. On the MetaStock platform, you get the exact entry and exit signals. I also hold weekly live interactive sessions. So every Tuesday evening, we meet with our members at Altos and have sessions where we analyze the markets and look at trade trend signals together. We also record these sessions, so you get access to these weekly sessions if you're not able to attend, and they'll be posted in the members area. You get full support and coaching from me on these sessions. So I'm there every week with you guys. And it's kind of like we did today with our Slingshot setup. We go through different strategies. In fact, we're going to be holding one tonight. So hopefully I see you guys there tonight at 7 Eastern. We also give you a lot of training that goes along with this. So if you guys are options traders, we're going to include, and I'll give you some more info on this momentarily, a lot of training around trade adjustments. So we look at some of the more popular option strategies and what to do when things go wrong. Inevitably they do, right? The markets throw us curveballs. We have to be able to deal with those. So we have a lot of training around how to adjust trades. I also go through, some of my own personal trades. So on the weekly sessions, I'll share with you, my actual trades that I have on and why I'm placing them. Ultimately, we've built a package to help you guys cut the learning curve and trade like a pro. Okay, so we realize there's a very steep learning curve associated with trading and investing. We want to help you guys cut that and give you the tools to be successful. So the package includes an entire year of trade trend on MetaStock. Okay, that's a $1,499 value. You get live trade sessions with me each week. Normally we retail those for $550. You get personal coaching from me weekly on those sessions. My personal coaching normally starts at $19.97 and goes up from there. We're going to also obviously give you access to me on a weekly basis every Tuesday evening. As part of the package, you get exclusive invitation-only Facebook group, access to our private Facebook group. We have over 800 members who use the trade trend indicator and our strategies like the Slingshot. Normally we retail that membership for $199, but you're going to get access to that as well. Again, you get our online training for trade adjustments to help fix bad options trades. We normally retail this course for $900, but you're also getting that. And ultimately, we're here to help you guys learn to trade equities, futures, Forex, options, whatever market you trade. We cover it all with consistency. We're going to throw in a couple bonuses. Our professional trading series online course. Okay, this is over 10 hours of online content. Again, it's kind of like our session today where we focus on one strategy, the Slingshot. We have dozens of other strategies. We cover other markets, and we built that all into one easy to access online course with modules that you can go through at your own pace. We normally retail that course for $595, but that's going to be thrown into the package as well. As my latest ebook, which is bonus number 2, how to create risk-free trades, which is a great supplement to all the tools and education you get in this package because it incorporates money management strategies to help mitigate risk and even in some cases eliminate it from your trade. So I go through some different tactics to do that. Normally we retail that ebook for $97, but it's also yours as part of the package. So the total retail price, if you bought all of these things from us individually, is over $5,100. And we're knocking 80% off for the MetaStock Summit today only. Okay, so $997, you get this everything here, 80% off. It's a screaming deal. Breaks down, I think, like $2.87 a day over the course of the next year. Probably most of you are paying far more than that to your broker and trading commission. So it's a screaming deal, guys. You get a ton of stuff here. We do limit this to 25 seats. We provide, as well as MetaStock, provide white glove treatment to help you guys get set up with the indicator and get access to all of the training and live sessions. So it takes a lot of legwork on our end. We don't limit this as some sort of like marketing gimmick or anything. It's literally, we don't want to sacrifice sales for customer service. All right, so we do limit this, which means you can still get any of these things, but this will go back to the retail price of $5,145 after those 25 seats are gone. So if you want the 80% discount, all you have to do is go to altostrading.com/slingshot. You can lock it in. You're in at the grandfathered 80% discount for as long as you want to be. We don't have any contracts or commitments. You can cancel anytime, and you get everything that you see here on your screen. All right, and that includes bonus number 1, which is our professional trading series course. Bonus number 2, my latest ebook, How to Create Risk-Free Trades. And we also have a guarantee. So if you don't make at least your membership fee back in the first 90 days, we're going to give you an entire extra year of trade trend on the house. And that's a $1,499 retail value, but we really stand by and stand behind what we provide to our members at Altos. And I know Metastock does the same. So we'll back that up with an entire extra year of trade trend if you're not able to make your membership fee back in 90 days. Okay, and we're here to help you guys do that. So I've got a little bit of time left here, and I'm happy to go ahead and take any questions if you guys have it. If you come up with questions after we sign off, you can always contact us by email or phone, support@altostrading.com or 1-800-895-9348. Again, that link for the 80% discount is altostrading.com/slingshot. The seats are going fast. They are flying off the shelf. So if you guys want to get that 80% discount, just head on over there and grab it. And I'll go ahead and take some questions. So let's see. Yeah, Greg. So yes, you get a year of the indicator on Metastock, and I believe Jeff Gibby has a package as well that he can fill you in on that relates to Metastock. But yes, you get an entire year of trade trend on Metastock, and you're grandfathered in at that discount as well. Let's see. Marlene's asking, can we get trade trend on Thinkorswim? Yeah, Marlene, so our package today includes trade trend on the Metastock platform, but we're gonna do something very special since you asked that question. Thanks for asking, Marlene. We do offer the indicator on other broker and charting platforms. So alongside Metastock, you also get it on, we'll comp it on one other platform of your choice. So just after you claim one of the 25 seats, shoot us an email and we will hook you up with a second platform of your choosing. All right, looks like I got a couple of those. Kind of a quiet audience. That's all the questions I see. I guess I answered the questions in my presentation, so that's good to see. But again, if you guys have any additional questions, support@altostrading.com, or you can call us toll free 800-895-9348. Bruce asked, you mentioned it works on different time frames. Do you use the same settings on the Bollinger Bands? Yeah, Bruce, same settings regardless of time frame. And same thing with the trade trend indicator. That can be applied to any time frame, and the settings will actually adapt to the behavior of the time frame that you're trading in. Once again, here's everything in the package, guys. We really want to thank you guys for being here. I hope the Slingshot proves to be valuable for you as part of your trading arsenal, and I hope that you get a lot out of the trade trend indicator. I want to thank Jeff Gibby and the entire Metastock team for having me. It's always a pleasure to be here. Jeff, I'll pass it back to you.
All right, thank you, Jeff. Good to talk.
Thank
you.
you.
Good having you. Thanks a lot.
Appreciate it.
Okay, I'm gonna go ahead and make me the presenter real quick. And let's just kind of, just to reiterate, turn on the camera, all the kind of good stuff. The dude, this has been a very popular add-on. Wow, we got 3 more days. It gives you real-time signals, setups, alerts, commentary with Metastock. You do have scanning. I think, in my totally biased view, Metastock's the best scanner that I've seen. Allows you to scan any instrument, anytime. It's not like some of the server-based scans where you get a scan they ran yesterday. You can run it. It's going to show you the real-time results right here on the fly. Runs relatively quickly compared to a lot of the other scans that I've seen. And yeah, does a really, really good job. So you're going to get that. You're going to be able to system test it. Has a comprehensive user's manual that's included as part of it. Everything you need as part of that. You can go up to the altostrading.com/Metastock. You can also, if you have any questions, feel free to give us a call. 800-882-3040. Metastock.com/sales chat. If you're interested to see what this looks like on a chart, if you have questions about it, give us a call. We'd be more than happy to kind of help you with that. So there you go. Bruce has a question. Well, we're going to talk about Metastock right now, some of the power tools and that kind of stuff. With Metastock, the question that you have, Bruce, is what's the cost of the Metastock platform? And thank you for your interest. Thanks for coming. Actually, let's go ahead and kind of advance 2 slides. We can talk about this on a Metastock side. So with Metastock, we have 2 different versions. We have our end of day version. We've got our real-time version. And with both of those, we provide Metastock. The Metastock platform has been rated #1 in its price category for 31 years in a row. In addition to that, we offer the data for any region that you're interested in, whether that's North America, South America, Europe, Middle East, Africa, all of that's included. So 2 versions of it. Our end of day version is $69 per month. Our real-time version is $265 per month. And the way that the special that we're running here for Metastock is if you buy a month, we will give you our 2nd and 3rd month for free. So if you want to try it with our DC, our end of day version, you can do that. What we're going to do is we're going to give you all the Metastock tools, all the systems that it's including, the ability to scan the markets, test trading ideas, our patented forecaster, the real-time commentary alerts, all that kind of stuff. You'll pay $69 for that. And basically that's about $23 a month, because we're going to basically, for that $69, set you up until December 24th. Christmas Eve. So you can definitely do that. Metastock.com/conf promo, metastock.com/sales chat, or 800-882-3040. As part of that trial, you're going to get unlimited access to our support team. They do a really, really good job. You also get Unleash the Power of Metastock, which is some trading videos that actually our next speaker, Clement, put together that'll be available for you as well. So thank you for that question, Bruce. Hopefully that was a pretty good answer. Clement is going to cover it a little bit more in detail in terms of what that is, but I appreciate the question. Before we kind of move on to prize time, I do want to say we would love for you to come and join a partner forum called the Traders Forum, www.thetradersforum.com. You can come in, chat with other traders, learn about the markets, learn about candlesticks. It's a great community of traders, helping traders, sharing ideas. I'll see you there, thetradersforum.com. We'd love to see you there. So with that being said, Greg, let's do prize time. I think we can cut into Kelly's time. It'll be okay.
I insist we cut into Kelly's time.
I mean, not that what he doesn't say. Not that. Let's not cut too far into his time though. He's got some important stuff to cover.
Well, if he asks, you said it, because Kelly's our boss.
Yeah. But I think it would be a good time to give away a Metastock prize. So, and we haven't done one yet, just because we have so many prizes to give away that. Anyway, so what I'm going to give away is going to be a month of Metastock, or actually, sorry, 3 months of Metastock real time. I'm going to give away a month of Zenith. Zenith, I don't know, Greg, if you know this, but they spent over $1 billion designing it.
I heard that.
It's a very, very similar platform to as if you were a bank, maybe getting Bloomberg or something like that. The news is provided by 3,000 journalists in over 200 different 2,000 different journalists in 200 different news bureaus around the world. Tens of thousands of research pieces and information. Just a top tier. Like, it's the kind of news service that if you're a hedge fund subscribing to a news service, that's probably what you'd get. So we're going to throw in 3 months of that. We'll also give 3 months of Learn Metastock. Learn Metastock is a partner of ours. They teach how to use Metastock. It's a subscription service. Hundreds of videos. You'll get that as well. And that's going to be the Metastock prize. Greg, do you want to help me do a drawing?
That sounds awesome. Let's go.
All right. So I just need from you, well, I need to get all of this webinar stuff out of the way so I can get to my spreadsheet. I need a number between 1 and 6585.
585. Okay, spinning now. That'd come out to be 3,088. 3088 is what the Google random number generator gave me.
Okay, and then the winner is in the US with the first name of Gents, last initial J, and a Gmail address. That seems like that would probably be a pretty unique combination. So Gent, hopefully I'm saying that right. It might be a Genus. Congratulations. Well, I'll contact you. We'll kind of help you get set up for that prize. Greg, thank you for the assist.
You're welcome. Before I go, if I can remind you to tell people to register for this event, and then they'll be eligible for the door prizes that we're doing now. If you're watching on GoToWebinar, you needn't worry about it. You've already registered. If you're watching on YouTube, just go to metastock.com and click the banner at the top. It just takes a moment to register, and you don't need to register every day, just once for the whole week. And look, it's Kelly.
Why don't you introduce our next guest, Kelly or Greg?
Oh, Jesus. I'm not prepared. I'm not wearing a nice shirt. I don't know. Okay, go ahead.
I can. Kelly is actually our boss.
Mm-hmm.
If you've had the pleasure of watching any of the Unleash the Power of Metastock, he is the voice you get to hear for that, and the person you get to watch while he's talking about it. But Kelly does a really good job. Today he's going to talk about the power tools of Metastock, I believe. Right, Kelly?
That is right. Yeah, that's correct. Yes.
I could have.
You know, I was going to be offended that you cut into my time, but then you gave away Metastock, and I was like, yeah, that's okay.
All right, cool. Well, in that case, I'm going to get out of the way. Greg's your responsibility. Let me make you the presenter real quick.
Well, I'll get out of the way as well. Break your leg, boss.
Good luck.
All right, let me share my screen here. Make sure I'm getting the right screen.
We can see it.
All right. Okay.
Everything's working. It's all you.
Thank you so much, gentlemen. I appreciate the introduction. Hello, everybody. My name is Kelly Clement. I am excited to be talking to you here about Metastock. First of all, I would like to thank Jeff and Greg for their efforts in the conference. It's a lot of work to sit here and go through the conference, put it all together. Jeff does a great job of coordinating everybody, getting everybody corralled to get this conference together, to provide all this amazing content that you're going through. Greg does an amazing job letting our customers and people know about the conference and then putting it on. It's a lot of work. So thank you to Jeff and Greg for putting all their work together and getting this done and getting it out there. So first thing I'm going to do, as we do at any Metastock presentation, I'm going to go through a disclaimer. So we're going to read this really quick and then we'll be good to go. So this demonstration is designed to instruct you on using Metastock and accompanying software plugins and is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock and its employees shall have no liability for any investment decisions based on the use of their software, any trading strategies, or any information provided in connection with the company. Metastock and its employees do not endorse the purchase of any security, nor is it paid for the promotion of any security. No information contained in this presentation should be construed as investment advice or a solicitation to buy any security. So I'm not here to tell you what to buy or sell, when you should buy or sell it. I'm just here to show you how Metastock works and how you can use it in your trading. I will give you a treat, and I'm not going to read the bottom two for you, but be aware of the CFTC rule and the characteristics and risks of standardized options. You can go ahead and go through those. Let me introduce myself. Again, my name is Kelly Clement. I am the president of Metastock here. I've been with Metastock for 23 years. You know, I've been here a long time. And I love working for Metastock. It is such a great company to be able to come to work every day. I get to work on an amazing software product. I get to watch the markets. I get to trade during the day. There's not a lot of jobs that allow you that flexibility. So that's a great thing. I am, first of all, a family guy. I love my family, work with my family a lot. Well, don't work with my family, but I love my family. I am a trader. I do love speaking, coming out to crowds, talking about Metastock, what Metastock can do and how it can help them in their trading. I also do create systems. I've created systems that are included inside of Metastock. And then I also work heavily on the product design side. So I work with our programmers on putting together how Metastock should look, how it should feel, what it should do. So that's a big part of my job here. So that's just a little bit about me. But what I really want to focus on is Metastock and what Metastock is and how it can help you in your trading. Now, you've seen this over the last few days. Jeff talked yesterday about some of the tools in Metastock. We're going to have another presentation from Scott Brown tomorrow. But just a quick introduction to Metastock. We've been around since 1982. So that's 42 years that Metastock has been around in some form or another, providing amazing analysis tools to traders. Okay, and there's not many software companies that you can go out and name that have been around for 42 years. Metastock is one of them. We've been around doing charts and providing tools, like I said, to traders over that time. Now, during that time, we've been through several different versions of Metastock. We were purchased by Reuters back in 1995. If you're familiar with Reuters, they're a news organization that provides amazing research, content, and news to traders, big banks, hedge funds, institutions. Their news is what moves the market. Okay, if you follow Reuters, you're probably a news-driven trader and follow that. So Reuters actually bought us so we could help them provide better charting analytics to their institutional customers. Okay, so that's why we came along. So along with the same tools that you see in Metastock are tools that institutional traders are using, and I'll be showing you those tools today. So we've released several different feeds to feed Metastock, data feeds, based off of Reuters technology. So we released something called Quote Center back in 2005. Then we released a new feed called Metastock Zenith, which is what we use now. That's based off of an institutional platform that helps traders get very timely, up-to-date information and provides Reuters news as part of it. Okay, so we provide information to these big banks, hedge funds, and institutions through Metastock charting, and we get to provide some of the same tools that they're afforded. Okay, it's a great relationship that we have. So Metastock, global product, sold over the world, over 80, 90 countries, people using Metastock currently. And then back in 2013, we divested from Thomson Reuters. We became our own company to get back and kind of focus on the retail market, where our big focus is in helping retail traders maximize their trading. Okay. Now, as I go through my presentation today, we're going to cover a lot of different things. And if you have questions, please feel free to put them in chat. I will stop, talk about what your question is, and address it right then. Because we want to, if you have a question, odds are other people have the same question. So I'd love to address it as we go through the presentation. Okay, last slide about Metastock for the moment is Metastock has been a winner of the Stocks and Commodities Reader's Choice Award for over 30 years in a row. Okay, and this is if you haven't read Stocks and Commodities, great magazine, covers a lot of different technical and information about the markets and different trading strategies. And we've been voted as their best analysis software over 30 years in a row. Can't say how proud we are of that. Okay, so what we're going to be talking about today is really how to identify trades, how to develop a trading plan, and how to follow that plan through. And where I always like to start is here, okay, in the cockpit of a plane. And why would I want to start in the cockpit of a plane when we're talking about trading? Well, I'm assuming most of you have been on a plane before, but if you haven't, when you get in a plane, you'll see the pilots sitting up at the front of the plane. And what are they doing when they're sitting up at that front of the plane while you're back trying to get your luggage in the overhead bin and hoping it fits? What they're doing is they are going through a checklist and saying, okay, this needs to happen, this needs to happen, this needs to happen, this needs to happen. And you want those pilots following that checklist to a T. Because if they don't, that's when things go wrong on a plane. Okay, I travel a lot. I go around the world a lot for my job. And, so I want those pilots doing that. But at the same time, there's a show that I really like to watch. It's called Airplane Disasters. And I get asked quite frequently, well, hey, if you travel a lot, why do you like airplane disasters? And it's because of what they do. After an incident with a plane, these investigators will go in and they will sit down and they'll go through and try and figure out what happened on that plane, what caused the disaster. And if something wasn't mechanical, if it wasn't something that went wrong with the plane, well, what it was is typically an error with the pilots. They didn't follow their checklist, and that's what caused the disaster. Okay, and we see that same type of thing with our trading. If we don't follow our plan, we don't follow our checklist, that's when we get in trouble. Okay, so that's what we're going to talk about today. And we want to talk about the ability also to say, if my trading went wrong, can I go back and look at what I did wrong to correct that mistake moving forward? And that's a big part of it. Okay, I do that myself. Okay, what went wrong with that trade? Why did I do something wrong there? And what can I do to be better? That's part of life, and that's part of trading. So what we're going to talk about today is trade identification. Okay, so one, we're going to talk about how to find the best stocks to trade, when you should get in and out of a trade, how to test your system before you spend your first trading dollar, and how to add clarity to your trading decisions. So these are the things we're going to really focus on today. Okay. Now, when we get into this, we really talk about trading indicators and looking at indicators and what they do. Okay, so if I talk about indicators, there's really 4 different main categories, of indicators. Okay, so our first type of indicator would be trending indicators, momentum indicators, volatility indicators, and volume. Okay, so these are really the kind of the encompassing indicators that we see out there when we talk about indicators. Now, if we want to get a little bit more granular with that, so if I'm looking at trend, now when I do, and actually I'm going to ask this question because I'm very interested in what kinds of things people look at. So when you look at indicators, and put this into chat, what do you look at? Do you look at trending indicators, momentum indicators, volatility indicators, or volume indicators? And if it's a combination of both, that's okay. But I'd love to hear in chat what type of these indicators that you use. Now, if you're not sure what grouping these are in, let's talk a little bit about it. Because if I'm talking about something like trend, I'm talking about things like moving averages, MACD. Okay, so those are a few examples of trend. So some examples of momentum would be things like stochastic or RSI. Volatility, we're going to talk about things like Bollinger Bands. Okay, if you were in Jeff Tompkins' presentation, he talked a lot about Bollinger Bands as part of his Slingshot. Okay, so he's looking at volatility. Then we also have average true range. Volume, what we're looking at are things like on balance volume and shaken money flow. Okay, so and volume itself. Okay, so there's these different groupings of indicators that we look at. And our question as traders is, okay, well, I mean, there's obviously a lot of different indicators. There's lots of different styles of using these indicators. I mean, I've got 4 different groupings. You know, how do you start to know what you should use and when? Okay, and that's the challenge we kind of face. So if I'm looking at a chart, so if I look at this chart, what should I use? What should I use on this chart? Okay, should I use trend? Is this a trending stock? Well, I mean, it had a big downtrend here. We had an uptrend here, but now it's kind of volatile. How's volume? Volume seems low. You can start to get into some analysis paralysis when you start to look at this. Okay, so James uses all 4. Great, yeah, I mean, and there's going to be times to use all 4, and there's going to be times to look at each individual one. So that's great, I love it, okay? So let's talk a little bit about a chart here for just a moment. Okay, so if I go over to Metastock here, we're just going to we're looking at Bristol Myers here. What is Bristol Myers doing? Okay, and again, this is our question. What's it doing? Eric tells me he uses trend, volume, and momentum. Great. Those are great combinations. Trend and volume together and momentum together, great combinations. So here what we're seeing is we have Bristol Myers, and what we're looking at right now is we're looking at one of those trending indicators. We're looking at the MACD. Okay, so MACD is a trending indicator. If you're not familiar with the MACD, what it is, it's the difference between a 26 and 12 period moving average, and that's this red line right here. And then the dotted line is a 9-period exponential moving average plotted over it. Okay, and when those cross, it will give you buy and sell signals. Okay, so if I just grab my horizontal line right here, okay, so right here you can see we had a crossing, right here we had a crossing, and then right here we had several because we had kind of had this kind of channel right here. Okay, then we had a crossing here, and right here we are actually crossing above the signal line with this big bullish bar, and that's generating a buy signal. Now, if you're not familiar with indicators, one of the great things about Metastock is I can go and I can right click on anything in Metastock anytime and say help. And what it'll do is it'll tell me what I'm looking at. So here I'm looking at the MACD. It tells me how it's calculated, what I'm looking at, what the parameters are, tips on how to use it, and you can go through and you can look at all this. Okay, so you can kind of read the dictionary version of all this. Now, another great way to learn about something in Metastock, like an indicator, is to go to what we call the expert advisor. Okay, the expert advisor does just that. It gives expert advice. Okay, so if I go in here and I search for the MACD, I'll just attach this. You'll see it'll give me buys and sell signals on the chart based off of when I get those signal line crossings. So I can see every time it crosses above or below, I'll get my MACD buy signal. So Metastock is very helpful in this respect in helping you identify opportunities. So if we go to the commentary window, okay, so the commentary window here will, along with the expert advisor on the chart, walk you through what's going on with the MACD. So the MACD can provide buy and sell indicators in 3 ways: signal line crossovers, which is what we're seeing right here, overbought and oversold conditions, and divergences. And then it kind of takes you through a commentary window that's going to describe what's actually happening on the chart right now. So currently the MACD is bullish since it's trading above its signal line. The MACD crossed above its signal line 0 periods ago, meaning today. And since it crossed, it's moved so far, and you can see that it's what its range is. Okay, it's not overbought or oversold right now, and there's been no divergences in the last 5 periods. So every time I go back, if I go back a bar, you can see this little triangle right here, and that's telling me what's happening since the last sell signal. Okay, but our challenge here right now is looking at this chart is how do I know that the MACD has worked well, and is it going to work in the future? Well, one, there's some tools that we can use to see if it has worked well in the past. And 2, we don't know. If we knew, then we'd be very, very lucky, and we'd be trading extremely well. What we wanted to be able to do is increase our odds of success in our trading. And that's some of the tools that we're going to talk about as we move into the next stage of the presentation. Okay, so what we're going to do is we're going to take 2 different workflows to identify trading opportunities. The first one we're going to do is I'm going to show you how you can use any of your preferred indicators, some of the indicators that we've talked about, or if you have a different indicator, it doesn't matter. Whatever indicator it is you're trading, you can use these tools to identify this workflow. So we're going to use your preferred indicators, identify opportunities, and then see if they work. And then we're going to go to a second workflow. And the second workflow is how to find the best indicator to work on a particular stock, future, coin, whatever it is. And in the second part of the presentation, I'll actually ask you for symbols that you might want to look at, and we can test and see which one is the best indicator working right now. So don't put those in yet. I'll let you know when I'm available for some symbols to put in, but we'll get to those in just a few minutes. Okay. So what we're going to do is we're going to start with using your preferred indicators to find opportunities. The way we're going to do that is through market scanning. So Metastock has a great tool called the Explorer that lets you go through the market and identify opportunities. Jeff was talking about it after Jeff Tompkins came out, where you can actually take a strategy, scan the market with it, identify opportunities that are happening right now. Okay, it's not server-based, it's actually happening on your computer, and it's finding those opportunities. So let's show you how this market scanning works. So if I go back to Metastock, I'm going to go up to what's called the Power Console in Metastock. Now the Power Console is what lets me open up charts, open up lists, scan the market, backtest, we'll talk about in a moment, forecast, which will be a presentation we have tomorrow, and then analyzing options. But let's go to market scanning. Okay, since we're talking about the MACD right here, I'd like to focus on the MACD for just a moment. So let's actually find some opportunities based off of the MACD and see what's happening. So I'm going to just, there's a huge list of built-in scans here that you can see. You can scan on candlesticks, you can scan on different trading indicators, whatever it is you want to scan for, it's probably built in here. But if there's something that you don't see, you can design your own, or there's many add-ons like Jeff Tompkins that you just saw. So there's a lot of different things you can do here, but we're going to focus on the MACD for just a moment. So I could just type in MACD and it'll find all the different scans in here that have MACD in here. So I would like to use this MACD expert system. What it does, it looks for buys and sells that are happening today based off of the MACD, and it looks for overbought and oversold conditions with the MACD. So it's looking for 4 different things at once. So we're going to use that MACD. And then what I'd like to do is actually scan the S&P 500 list. So I've just gone down here. You can see all the lists built into Metastock here. So we're going to do the S&P 500. So I just go ahead and click Start Exploration. Now, when I ran this, and I'll just move this to the side for a second while it runs so I can show you this. Right here, I set this to a daily time frame. Now, if you're trading at the end of the day, you can scan at the end of the day and look for opportunities. You can also, if you're using Metastock real time, you can scan 1-minute charts. You can scan 5-minute charts, 30-minute, 240-minute. So you can scan whatever time frame that you want. So in this example, I'm showing you daily, but you can really scan on any time frame that you want if you're using Metastock RT. You can also do the daily, weekly. So that's what I'm using here. I'm using Metastock real time, so I can scan on any custom time frame. If I was using Metastock end of day, it'd be daily, weekly, monthly, quarterly, yearly. Okay. So it looks like our exploration is done here. And let's talk about what we're seeing. What we've done, we've looked through the whole S&P 500 to identify opportunities. Up here, we kicked out 460 of 503. So we rejected 91%. So if we have 460 rejected, but we have, so we've got 43 results down here. So you can see we've got 43 results, 460 rejected. So all of these 43 right here have either a buy opportunity, a sell, they're overbought based off of the MACD, or oversold based off of the MACD. What we can do is rank these columns. So if I click on one to double click on it, you can see I get these ones in the column. These ones mean that it matches my criteria, and then you'll see it goes to a 0. That means it no longer matches my criteria. So if I double click on sell, you can see the ones that have a sell opportunity. If I double click on OB, these are the ones that have a buy opportunity. Then I have oversold, and there's no oversolds today. Okay, so if I have 43 opportunities, I could open up each of these stocks, look at it, try and figure out, okay, I know I have a buy opportunity, but I don't want to take 43 different opportunities. I want the best opportunities. I really want to focus on what the best trade's going to be. Okay, so at this point, we're actually not even going to open up a chart, because what we want to do is take the emotion out of it and find out which one of these is best systematically. And let's talk about how we're going to do that. So if I go back to my presentation here, we're going to be talking about backtesting. Well, what is backtesting and how can it help me in my trading is the question, right? So backtesting is a method of evaluating a strategy, or models performance by applying it to historical data. It's commonly used in finance to assess the viability of trading strategies. It's used by all level of traders from beginning to institutional level traders to identify the best opportunities. So basically what it said there, okay, if we look at that, we're taking historical data. What we can do is we could say, okay, well, Fox Corp here, I want to look back historically. I want to take every trade that has happened on the MACD over the last 1 year, 2 years, 3 years, 4 years, 5 years, and see how the MACD has performed on this stock over time. In doing so, it helps us identify if it's worked well historically, it gives us a better odds of success on that next trade moving forward. It doesn't guarantee that things are going to go well. And I'll show you a little bit more on how this kind of all comes together. Now, here's why traders use backtesting. So backtesting can help traders identify strengths and weaknesses in their strategies. It can help them make informed decisions on their next trade. It can help you make informed decisions by providing objective analysis based on the strategy's performance, which is exactly what backtesting is. Help you manage your risk. Okay, if something's hasn't worked well, but you still want to try the trade, well, this will help you manage that risk. It can help you understand how volatile an asset class is and how it can be used to manage your risk, improve your trading confidence, and it can help traders increase their confidence in a strategy by showing them how it would have played out over time. Okay, so those are kind of our core reasons why we want to use backtesting. So the way I kind of like to describe it when I'm talking to traders and kind of describing how it works is, think of it like Match.com for trading, right? So, you know, if I want to see if the personality of the MACD works with Foxconn, it might not. It might not be a trending stock. It might be a volatile stock. It might not have that correlation that puts it together. So Match.com might say, no, that doesn't work. And that's what we're going to do, is we're going to see if these personalities of these systems work with it. So rather than looking at 43 stocks here, we're going to just close this. We're going to go back to the Power Console here and then go to system testing. Okay. And what I'm talking about system testing now is, again, I'm just going to take my system. So we had a MACD is what we had. And then what I had down here is I had my exploration results. So in Metastock, it'll always save your exploration results from the last time you ran a scan. So then I can just come back and back test it, or I could open up that list, either one. But here I'm going to back test it. So rather than me spending time going through 43 charts to figure out which one is the best, I'm just going to have the back tester do it for me in Metastock. Okay, it makes it really, really easy to do. Okay. Now, when I'm back testing, there's a couple of things that you have to consider. One, you have to say what type of trader you are. Do you trade long? Do you trade short? Do you trade both? And in this case, I was looking over at our poll in YouTube today, if you're over all my YouTube crowd, and in there, we had more people say that they trade both rather than just long only. So we're going to say we trade both. So we go long, short, and both, because that's what the majority of people over in YouTube say, is that they trade both. Okay, now we can tell the system tester how long we want to look back for. So if I want to look back over 1 year, I could put 250 records on daily. If I wanted to go 2 years, 500, because every trading year is about 250 trading days. So we'll just say we'll go over the last 5 years. Okay, so we're going to look at 1250 records. Excuse me, I think I'm going to sneeze. All right, I might quickly have to put you on mute if it builds up. I'm sorry. Okay, so we're going to do daily, and then we need to tell it a few more things. All right, I caught it. You're lucky I didn't sneeze into the microphone. All right, so here we're going to tell the system tester a little bit more about you. Because if I was to ask each of you out in the audience, and I'm not going to, please don't put this information into chat, don't do this, this is for you to think about, is account. Because when you're back testing, how much money you have in your trading account, how much money you're willing to risk in your trade, you know, if you're trading futures and you're doing points only, there's a lot of different variables when it comes to system testing. Okay, so this is why it's important to tell it a little bit about you. And that's important, you know, if you're on match.com, you'd have to say stuff about you. So that's what you're doing here. Okay, and this isn't on a server. We don't know how much money you have on your account. This is all you. Okay, so you can say how much money you have in your trading account. You can put in here how you trade. So if you only trade, say, 100 units at a time, or 5 units at a time, or 1 million units at a time. Okay, so you can say how many different, how many lots you're trading at any given time. Okay, so you can do that. You can say, I only will risk 1,000 in a trade at a time, 5,000 in a trade at a given time, 10,000 in a trade at a given time. So you can set that specifically in here. Or you can say percent of available equity. Now, percent of available equity, what that does is if I say I have 100,000 in my trading account, or 1 million, or whatever, or $100, whatever it is. Okay, so you can say I have that much in my trading account and I'm willing to risk this much of that. So I have here 15%. Now that's a high number. Most people aren't risking 15% of a given trade in there, but I like to use just a bigger number for math, okay? Because if I'm doing that and I say I'm risking 15% of 100,000, I'm risking 15,000. If my account goes up to 200,000, well, now I'm risking 30,000. If it goes down to 50,000, well, now I'm risking 7,500. Okay, so that's kind of the way the math works. So that's an important part of system testing and something that you need to set. Okay, here you can say if you pay commission. Okay, if you pay commission to get into a trade, or you, it's an important part of it. Now here in the U.S., we are lucky that most brokers are commission free these days. We don't have to pay commission. But if you are international, I know there's a lot of traders that have to pay commission still. So you can put that in. That's a real part of your trading cost. So it should be accounted for in your system testing. Okay, you can put in here if you trade on margin, what your margin requirements are. And then you can put in here what we call trade execution levels. A lot of this you're really going to leave as a default, except account. You're really going to have, that's one that you need to customize. Everything else can kind of just stay as it is. But one thing I like to talk about here is what we call realistic market prices. Well, that sounds exciting, right? Well, what happens with realistic market prices? What realistic market prices is if I get this buy signal here on a chart, or any of the 43 stocks that I would just had an opportunity show up on. Well, if I have that opportunity, when am I really getting into that trade? Am I getting into it today, or am I getting into it tomorrow? Because if I'm looking at a daily chart, it's typically the next day. Or if I'm on a 5-minute, it's on the next 5-minute bar. It's not on that current bar because we want to wait for the close of the bar to confirm our buy or sell opportunity, right? So realistic market prices, it says just that. But you can change that if you want to and say, well, no, I want to get in on the close of the second day or the close of the third day. So you can say, I want to delay opening. But again, most people aren't going to do that. It's just going to stay right here. Then you can also account for slippage. Now, slippage is really, really important in trading, and it doesn't get talked about a lot. Because what happens with slippage is if I say, hey, I'm put in a buy order at, 50.97. Do I always get filled right at that price? Because I may say, or best, and it may give me a little bit of slippage. It may move more than that. Or if I'm just doing a market order, it may move more than I expect it to before I get into it either way of the trade. So you can account for slippage in there as well. So that's an important part of it, okay? So that's all the customization stuff. So let's go in, let's actually look at what system testing does for us. Okay, so if I go ahead and click Start System Test, you can see what it's doing. It's crunching all these numbers for me. It's going through every trade over all 43 of those stocks over the last 5 years, and it's putting together a report for me. Okay, so let's just maximize this up a little bit here. Okay, so if I'm looking at this now, what I'm seeing is you'll see this ID number, and that corresponds to these numbers up here, which correspond to these instruments here. Okay, but what I want to do is come along here and go symbol, periodicity, which is the time frame I'm looking at, the date range of what I tested, my net profit, my percent gain, the number of trades, how many were winners, how many were losers, and my average profit, average loss. So let's rank on percent gain here. Okay, so if I look at this over the last 5 years of these stocks, I can see that Tesla was the best performing stock over the last 5 years, trading the MACD out of this list of 43. Over that period, I had a $72,000 profit, a 72% gain, 297 trades, and then this is interesting. I had 150 winners, 147 losers. Okay, we all know that there's losses in trading. Okay, so what does that mean when I have 150 winning trades and 147 losing trades, but I still killed it over the last 5 years in this? Well, if I look at it, it's going to tell me that my winners were bigger than my losers. So let's actually look at it a little bit more and see if that's the case here. So if I click into it, it's going to give me a detailed overview of a lot of stuff. Okay, there's a lot of stuff and a lot of information in system testing, and we're not going to cover it all today. What I want to show you are the critical bits of information to me and what I like to look at. Okay, so what we had here, again, we had 72,000 in profit, 72% gain. Annualized performance was about 14.5% per year. Okay, if I would have bought and held it, I would have made 232,000. Okay, so I would have done better buying and holding it over the last 5 years. But that's not the way we're thinking here. Okay, remember, this is if I was trading just this one stock over time, and we're not. We'll trade Tesla, then we'll move on to the next thing. We'll trade something else, move on to the next thing. It's typically the way most traders work. Okay, so this is for information here. I had 150 profitable trades. 122 of those were long, 28 were short. My average profit per trade was about $1,300. My highest profit was $9,200, and my lowest profit was $4. Okay, most consecutive wins, 10 in a row. My unprofitable trades, 147, 113 were long, 34 were short. My average loss was 869. Then my highest loss was 5506. Now let's stop and talk for a second. Because if I look at this, you might look at that and go, well, I would have never lost $5,000. That seems like it would be outside my stop level. Okay, that's an important part of this. The way I just tested this, I did not account for stops. And stops are so important in trading. If you don't use stops, start using stops. Well, it's something that you'll hear from everybody. If you want to increase how you're trading, use stops. Okay, because you're protecting your money, you're protecting your assets, and you're getting out of trades earlier that are bound to go against you. Now, I didn't use stops in this testing. Why? The way I ran this system test is I wanted to see how the system stood on its own. Okay, if I just said buy it when it says buy it, sell it when it says sell it, that's what we're doing here. Now, can you put stops into the system tester and tell it, hey, I want to get out when it goes down a certain percentage? Absolutely. Absolutely, you can do that. And when you get our white glove service to help you get everything set up and you want to ask them about that, they can show you how to do that. I just don't have time to go through that aspect of it here in the presentation. So that's an important part of it. Okay, so let's talk about what else is important to me here. Now, I'm not going to talk about anything else on this here. You can see how long you're typically in a trade. You can see how your account variations were. You can see how your orders were done, how the positions ranked. But what I like to do is look at this line right here. This line right here is called an equity line. And the equity line is basically how my money has performed over time. Okay, so if I look at this, my initial equity here was 100,000. That's what I started with. So, and then down here, this is the number of data records. So I did 1,250 days. So that these are my days. So if I was trading Tesla every day, just trading the MACD, this is how my money would have looked. Okay, and if I look at this, I can see that, you know, a few years ago it was trending really well. It lost money, it went flat, but for the last 2.5, 3 years, it has been trending up very consistently. Now, I'm not saying the stock has been trending up consistently. I'm saying my equity in my trading account from trading Tesla has been trending up over the last 2.5 years. And that's what we'd want to see in system testing, is a nice smooth upwards equity line. Because if you have a nice smooth upwards equity line, it means it's consistent, it trades well, and it's consistent in the way that it does. Now we know that there's losses, okay? And this could look very different if you put stops into part of it. But this is how the system stands on its own. So now looking at this, I could say, well, Tesla has been performing consistently over the last 2.5 years, trading the MACD. Well, if I have a signal today, is it something I'd want to consider because it's been trading so well? And this is where we get into the historical data aspect of it. Well, it's been performing well historically. Well, we don't know what's going to happen tomorrow, but if it's performed well historically, is it a better trade than some of the others? Well, let's take a look. So let's maybe look at the second one down. Let's just go right to the equity line, because that's typically where I go. Okay, so Carnival has been flat for half of it, but then smooth and consistent. But then we had drawdown, we had loss coming from it. So we had a drop down, but then it's kind of popped back up. So this one isn't as consistent as Tesla, but it has had a lot of consistency. Okay. So let's look at Arista. Okay, so now, even though this is our top 3, it was consistent, huge drawdown, and then flat. So this is one I would just say, I'm out. I'm not interested in it. It hasn't been performing consistently well, so I would just drop it out. Blackstone, okay, performed well, but it's been having drawdown recently. Okay, so you can start to see how we can quickly throw things out because they haven't been performing well. Now let's go down to one of these bottom performing ones. Let's go down to Biogen. Okay, so now if you're presented the option between Tesla and Biogen trading the MACD based off of what the equity line has done, which of the two are you going to choose? Now, I'm not saying you should buy Tesla. I'm not saying that at all. What I'm saying is, if you look at this and say, okay, Biogen has consistently lost money trading the MACD, and Tesla, over that same period, has consistently traded well using the MACD, well, which of those two are you going to consider? Okay, and that's what system testing and back testing is all about, is looking at that historical data and saying, hey, this one's traded well. If this one's traded well, are my odds better on my next trade than Biogen that hasn't traded at all well using the MACD? That's what back testing is. Okay, you can quickly look at it and go, okay, if you throw that one out, throw that one out, throw that one out, and suddenly I've narrowed my list of 43 down to maybe top 2 or 3 contenders. And that's what system testing is all about, is improving your odds of success based off of that historical data. But again, hindsight's 20/20, and that's part of system testing, is looking at it and going, okay, yes, that has worked well, but it helps me gain a better confidence in that next trade. Okay, so now in the next part of the presentation, again, is where I want to look at stocks that you're interested in. It could be stocks, it could be futures, whatever, currency. So go ahead and throw some symbols into the chat, both YouTube and GoToWebinar, And we'll look at a couple. We'll kind of see maybe what performs best with them. Okay, but while you're doing that, I'd just like to recap how quickly that whole process worked. I'm just going to do this, say remember we had our report of 43 different stocks that we had on our exploration. So we ran a scan, got a list of 43 stocks. I go over to the system tester and just say, run a system test and do that. And I've got my result in about 2 minutes. Okay, so it's a very quick process to go from taking it up and eliminating it down to just a few. Okay, so now we're getting some symbols over on the YouTube side. GoToWebinar's a little quiet. Maybe we should get some over there. So let's go over to, let's do Mavericks and look at ARM. Okay, so I'm going to go into the system tester. And this time what I'm doing is I am going to take just one symbol. Okay, I just want to see if that's on the NASDAQ or ARM. Let me pull up that chart just to see here, just to make sure I'm getting the right symbol. Okay, ARM Holdings. Okay. Okay, so what I'd like to do is actually take this one, and what I'm going to do is I'm going to put it against probably 10 of the top strategies out there. Bollinger Bands, directional movement, MACD, momentum indicators, stochastic RSI, Chaikin, relative strength index, stochastic, turtle trader, volatility, and we're just going to see out of those 10 which perform best on ARM. Okay, so this time what I'm doing is I'm saying, okay, I'm going to take ARM and I'm just going to say what works best on ARM, just to kind of change the workflow a little bit. So let's start our system test here. Let's view our report. Oh, I put in the wrong symbol. That's my bad. We go back up here, ARM.O, and we'll do the same thing. So we're going to go both on our trades, long, short, and both. Okay. And this is where system testing is so cool, because when I did this, if I do my percent gain again, so I can see that ARM over that same 5-year period has been more of a trending stock because we're using the MACD. Now, the MACD is not always the best performing system, but it's a very popular one. So we can see here we had a 14% gain over those 5 years, 50 trades, 27 winners, 23 losers. We can go in and we can look at our equity line here. And what do we see here? Okay, with this equity line, what's it been doing the last maybe a year? Looks like this one's been around about a year, actually, because we didn't do that full period. So it's been trending up fairly well in the last period. So the MACD seems to work pretty well on it. Now, our other system that we had here as our second system was the turtle trader system. Now, the turtle trader system is also a trending indicator. So it kind of gets us in that same mindset as a confirmation that trending seems to be working very well here. Okay, so that's another opportunity with that. So think about that. So once I find out here that, hey, the MACD is the best performing system, what I can do is I can then come over here, go to my expert, go to attach, put on the MACD, and there we are. Now, one of the challenges is with the first workflow that we did, we knew there was a current opportunity. Okay, so we knew that there was a trade because we had found it with the market scanner. In this workflow, what we did is we actually said, well, hang on, we're just going to test to see which of the indicators works best. It doesn't mean that there's a current opportunity here. So what I'm going to have to do is wait for the next opportunity. But you can see we're in this MACD buy trade right here. And what's it been doing since that last signal? It's been going up fairly well. So if we had taken this based off of that last system test and last market scan, we'd gotten this signal, that would have been a great setup. Okay, so we can really use the system tester to help us identify these opportunities. Let's just do the other one that I saw. It was knee. Okay, NextEra Energy. Okay, we'll do the same thing. We'll do those same 10 strategies against knee and see what performs best. I was going to say, I'm going to laugh if it's the MACD again, but there it is. MACD was the best performing system on that list of stocks. 24,000 profit, 25% gain. Now this one, we actually had more losers than winners, but let's look at our equity line. Okay, again, nice smooth equity line to the upside. Very interesting to look at in that case. So then we could just go and open up knee. And well, you can definitely see the trend in that stock there. So let's put on our expert. Let's put on the MACD again. And there's our, well, now that one would have gone against us, right? But that's trading. That's the way we go. That's why we use stops, and that's why we work to protect ourselves, right? Okay, let me go back to my PowerPoint here for a moment. Let's just recap here. So again, we did 2 workflows. One was using your preferred indicator to scan the market and identify opportunities, and then backtest them to identify if they have worked historically. The second workflow is we took whatever it is that you're trading, and then we found the best indicator to work on what you're trading. So if you have a stock that you really like, the second workflow is great. If you don't care what you're trading, as long as it's a good opportunity, first workflow is for you. So there's 2 different workflows that you can use. And there's actually even more workflows that you can do, and we'll talk about how you can learn about those in just a moment. But backtesting, again, is really about helping you identify the strength and weakness in your strategy, matching the personality, and helping you understand if your trades have worked well historically and given you a better odds of success on the next trade. It's what it's all about. Okay. Again, Metastock has been the winner of Stocks and Commodities Reader's Choice Award for the last over 30 years in a row. And it's very powerful software, okay? We've just scratched the surface of what Metastock can do. But the great thing about Metastock is it can grow with you. You can start with basic charts using the Expert Advisor. You can grow to market scanning. You can grow to back testing. It will grow with you as you go, okay? I've been here 24 years, and I learned something new about Metastock just about every day, okay? How much does it cost? And that was one of the big questions earlier on, is how much does Metastock cost? So there's the 2 versions that we offer. So we offer Metastock Real-Time, which includes Metastock as you've seen it, and Metastock Zenith, which is our real-time news and information service that comes along with it that powers Metastock. So that is $265 a month plus exchange fees. And that'll allow you to do analysis in tick, 1 minute, 5 minute, 30 minute, 240 minute, 44-minute bars, daily, weekly, whatever time frames that you want, and get streaming market data based off of those exchange fees and different things. Otherwise, it's a 15-minute delay. Okay, $265 for that version. Metastock End of Day runs $69 a month and includes your end of day market data. Now, you don't get Zenith with that. You don't get news. It's just the Metastock analysis and the market scanning back testing on a daily basis, daily, weekly, monthly, quarterly, yearly. Okay. So that includes that stocks, futures, indices for a region in that package. Okay, with Metastock, you get our free white glove service to help you get it set up and installed. So our support staff will schedule time with you. They'll call you, they'll walk you through how to set it up. They'll show you how to do things in Metastock. We offer free lifetime unlimited support. You can call our support staff, chat with them, email them, whatever you're most comfortable with to get support. They can do screen sharing with you anytime. Free unlimited access to all of our recorded training. Plus, you get what we call Unleash the Power of Metastock. And that is it's an ebook and a video set that you get that's exclusive to people who have Metastock that trains you on back testing, how to learn all these different things, how to forecast, how to use a lot of the different strategies in Metastock with over about 3 hours of video included. So what we're offering here is a buy 1 month get 2 free offers. So if you pay for that first month of either package, the end of day or the real time, you pay for that first month, you get the second and third for free. That includes Metastock 19, which is our latest version. You get data for the region of your choice, wherever you are in the world, white glove installation support, and plus the free Unleash the Power of Metastock. And all you have to do to get that is call us at 800-882-3040, go to metastock.com/sales chat, or go to metastock.com/conf-promo. Any of those places can get you set up on this 3-month trial. But if you're not sure which version to get, chat up our sales guys or call us at metastock.com/sales chat or 800-882-3040. Those guys sales are awesome. They'd be happy to talk to you about what it is you're trading, what version's best, and how to get you up and going. With that, Jeff, I think I'm right on the mark.
You're doing great, for sure. Hey, I'm gonna turn on my camera real quick, and before I let you go, I'm gonna give Greg Lewis a break.
Oh.
So, I'm gonna have you help me do a prize. So.
Okay.
I'm gonna give. Okay, now you can see me. See this book?
I see it.
All right. Oh, here. I'll make myself the presenter too while we're talking. All right, so I can show my screen. So this is Around the Horn by Adrian Manz. You know, this book is actually pretty hard to come by. It's out of print. It's a $95 book. It's really a cool book too. It talks about all of Adrian's patterns, kind of how he uses stuff, all that kind of stuff. And I've got only a handful of copies left, so we're going to give away one of them. Let me go ahead and tell you what I need you to do. And it doesn't necessarily need to be totally random, Kelly.
Okay.
So you don't have to Google random number generator like Greg did. He really went above and beyond. But what I want you to do is just give me a number between 1 and 5,895. I'm sorry, 6,586.
Okay. Let's go. And we're gonna go lucky threes. We're gonna go 3,333.
Okay.
Sounds like a lucky 3. I like that.
I did something wrong. Okay, hold on.
I don't believe that. I don't believe that.
Okay, the winner is actually Dennis K. With actually your name is actually in your email address. So I'm going to go ahead and make that note. And next week when we have a little bit of time and I'm getting all caught up and the dust is settling, I'll reach out to you to make sure we have a good address so we can send it out. Greg or Kelly, thanks for the assist. I appreciate it.
Thank you, Jeff. Thanks for everything you're doing here.
Of course, man. It's been fun. All right. I do want to say thank you to our sponsor, Stocks and Commodities Magazine. They've been a sponsor for the Online Traders Summit since we started the Online Traders Summit, and it's been, gosh, I think it's been like 13 or 14 years now. Great partners, but it's also a great magazine. I feel like in life you're either getting better at something or getting worse. And obviously, because you've been here for so long, you probably think you probably want to learn more about the markets and that kind of stuff. I love getting a Stocks and Commodities subscription mailed to me every month. There's all kinds of really good articles on technical analysis. If you subscribe to Stocks and Commodities Magazine, you get access to 17,000 articles that they've created over the years. You become one of the 1.2 million subscribers they have. They've been publishing since 1982. You can find them at www.traders.com. So thank you, Stocks and Commodities, for all of the support over all of these years. Really, really appreciate it, and all that. We are, of course, Metastock. Metastock's been rated at 31 years in a row. I'm going to go ahead and correct Kelly's slides a little bit. But 31 years in a row, it's been rated #1 for the software in its price category by the readers of Stocks and Commodities. That offer that we're doing for the conference is if you buy a month, we'll give you the second and third month for free. That means it's about $23 a month to try Metastock, and you'll try it as of today until Christmas Eve. So crazy to think that that's just 3 months away. So anyway, metastock.com/conf promo. If you want, you can get out your phone and sign up for it on phone. 800-882-3040 if you have any questions, or metastock.com/saleschat. Our next speaker is Oscar Carboni. Oscar is a huge friend of Metastock. We love to go down to Oscar. He does like a boot camp in Las Vegas and talks about the markets. Very, very good at trend lines, identifying them, and is somebody that Greg Lewis calls the stock. Oh, I can't. Force of nature. Yeah, I almost forgot what he calls it. Among other things. Oscar, how you doing? Okay, I don't think I can hear you. No audio. No bueno on the audio. Oh, it looks like it just needs to be unmuted.
I thought I needed you to unmute that. My apologies.
Oh, no worries. Let's see. It won't actually let me do it. I can't actually send a request to you.
Muted. Kelly, thank you so much for that presentation. It was fantastic. We love it. Great stuff.
Let me go ahead and make you the presenter, though. I have to do that.
Show my screen. Boom.
All right. As always, everything's working great. Oscar, I can see you. I can hear you. You look dapper. I love the outfit.
My everyday wear.
I know. All right, I'm going to get out of the way. I'm really interested to see what you have to say. Thanks for joining us, and thank you for everything else.
Well, thank you for inviting me. Metastock, great program. Anyone listening, please make sure that you subscribe to Metastock. I have literally been using it since I'm 18 years old, and Metastock was a brand new baby. And I literally joined, and I was customer number 11. And I am still with Metastock to this day. And I've used everything on the planet. I love Metastock. So just thought I would throw that out there. Make sure you send me the check, Jeff. All right, so traders, good morning, good afternoon, good evening, traders from across the globe. Thank you for tuning in. I've got some great stuff I'd like to share with you. I know that you've sat through a lot of presenters in the last few days. They're all fantastic. Everyone's showing you great stuff. I thought I would stop the offering of programs for a moment and instead just offer you some good information that I hope will help you make money for the rest of the week and into next week. So I'm going to go over a series of charts that I have found that I think will absolutely help the traders of the world watching this webinar moving forward. This is going to be two parts. The first part is literally going to be a webinar part 3. Explain quickly. Omni started getting interested in a bunch of AI stocks as well as NVIDIA October of 2023. And I did a webinar to mention that to everyone. And then in the webinar, I gave you a host of stocks that would move up with the AI revolution with NVIDIA. And they're cheaper than NVIDIA, and you can put them in your portfolio and ride them into the sunset. And the reasoning behind that was this. First of all, welcome to the AI revolution was what I said in the beginning, the first webinar, which was done back here. And in that webinar, I said, listen, you don't understand what's going on. I'm going to explain that to you. This is called a revolution. Down on the trading floor on Wall Street, I lived through several of these revolutions. The computer revolution went on for 7 straight years. Does anybody remember that? Nothing goes straight up. But when computers came out and hit all the desks and we were able to get computers on our desktops, we had about 7 years of bull market before finally there were computers everywhere and the bull market cooled off. Then around 1994, the internet rally started. Bingo, it went all the way till 2001, another 7 years. Then we had the AI. It's only 2 years old, kids. It's the beginning of a revolution. It came out in November of 22. We're not even November of 24 yet. It's brand new. I promise you, you've got at least 4 more years of bull market. Nothing goes straight up, right? So there's going to be pullback times. But you've got at least 4 more solid years of this AI bringing markets higher. And that was the purpose of the video way back in October of 23. Then in Feb of 24, we revisited all the stocks that I offered in that webinar, and we removed 3 of those stocks from the portfolio. Now we are going to revisit all of those again because many Omniacs around the world called me, wrote to me, email, you name it, to tell me, Oscar, thank you for that webinar. I put those trades on. which makes me very responsible all of a sudden, right? So my job now is to make sure that so many people put them on, keep them in tune, and make sure that they're going to be okay. So that's what part one of the seminar we're going to do today will be for. It will be to show you how these stocks are doing. We'll look at the ones that we've removed from the portfolio. We'll look at the ones we left in the portfolio, where they are now compared to the last webinar date. And then the second part of this webinar will be for a bunch of futures, indices, stocks. Well, not stocks, but more futures and commodities traders. I've got a bunch of gifts for you guys. So after we do the stock side of this webinar, we're going to go to the commodity side of the webinar. I've got a list of great stuff you're going to see. You'll love this. So let's start with this. First of all, if you don't know me, I am Oscar Carboni. I am very, very, very easy to find. You can find me 24 hours a day in a live trading room. This would be it. It's always live to the point it's live right now while I'm doing this webinar for you guys. That's me waving in the camera. So there's cameras on, usually pointed right in front of me and one behind. Traders around the world line up and we go through trades and we go over charts and we basically just live our markets together every single day. We live our lives together. That's really easy to find. You would simply go to livewithoscar.com. If you do not have a membership, you would hit the register button. You will just fill out a couple of pieces of information. No credit cards will be required, no anything. If you like what you see in this webinar today, come join me, all right? No credit cards required. It's absolutely free. You'll fill this out. You'll hit send code. The only problem with send code is it will go to spam. I cannot stop that from happening. So the first time you get email, it's going to go to spam. If you just go to your spam box, undo the spam, click the send link, you will come right to livewithoscar.com. You can then log in and you can join me by clicking Oscar's chat room. I'm always there. And boom, you can log in and find me. So if you like what you see here, come hang out with me. It costs you nothing. We'll continue doing this until one of us doesn't want to get up in the morning. So make sure you join me at livewithoscar.com. Maybe if we get a chance before this webinar is over, I'll show you what we did in the trading room for live trades today. We killed it in the S&P. Omni just killed it in the S&P. We give out trading recommendations every day. I'll show you that, but more important, let me show you what's going on with markets. If you want to join me, great. If not, great. We're going to have a good time anyway. So forget about the spam and let's see what we're looking at. So you've got NVIDIA. NVIDIA is in a bull flag, a beautiful bull flag sitting right here. NVIDIA is pulling all the other AI stocks higher. If I update today's bar, if it shows up, you will see what NVIDIA did today. It did not show up yet. As soon as 5 p.m. hits, I can update and you can see it. But I believe NVIDIA today literally rallied up to about here, broke out of the flag and rallied up about this far today. That flag worked perfectly, right? Beautiful job, rallied out of the flag, what we were looking for. Very nice hold here. So Omni got interested in a bunch of AI stocks. We told everybody about those stocks in this webinar. We went to this webinar and made you remove 3 of them. Now we're doing this webinar to catch up. So that was NVIDIA. I hope that today's session helps you make money. I hope you see you see some things that you like, and I hope you take some notes. Let's get moving. So these are some of the stocks. Well, these are all of the stocks that I've been putting in my two webinars ago, 1 webinar ago, and this webinar. So this is part 3. Let's go take a look at them. So we looked at NVIDIA. One of the stocks I told you that you can get into is the AI play called AIQ.O on Metastock. It's the global AI technology ETF. Now, for whatever reason, the street absolutely loves the 120 bar algorithm on this stock. They love it. So let's take a look at this. It's all about market geometry. Wall Street watches market geometry like hawks. Everything that happens is based on previous market geometry. So Omni gets interested in this stock here and we tell you about it. We love this little gem, put it in your portfolio and hold on to it. Since then, we did another webinar to show you where it was from when we got interested to where it was next. And here we are now, still moving up. We're going to continue to hold this one in our AI portfolio. It's all about market geometry. Oscar, what does that mean? Well, you see this green line, it goes from this low to this low and then this low when the Omni gets interested. Watch what happens when I extend that line. It goes right there. How did Wall Street know to buy it there? Because they're using market geometry. Check out this example, example number 2. Look at this trend line. All it does is cover these 5 tops. I extend that trend line, and what does it do? The high here, all the lows here, the low here, the high here, and finally the breakout high taking place there. Kids, let me tell you something. It's all about market geometry. If you understand geometry, you got this stuff nailed down. So we are going to keep the AI Play AIQ in our portfolio. Let's go look at the next stock, ETF stock, whatever it will be. BOTZ, BOTZ, the global AI ETF named BOTZ, another AI play. Omni gets interested here. We do a webinar to tell you about it. We did a secondary webinar to tell you whether or not you were going to keep this in your portfolio, but it's looking good, right? From the first to the second. Well, here we are now, my little webinar mark. Let me mark it. We're going to do the webinar today and look at how much better or how much higher we are, albeit it came down a bit, right? But nothing goes straight up. When I offered this group of stocks to you a couple of webinars ago, I told you just hold on. Unless I tell you to get out, you're just holding these. So at this webinar date, we were here. Now we are here. But look at this average. Have you ever seen such respect be paid to an average? Look at here, here, here. Look at the respect. I mean, wow. What a great average. And we're above it now. Tells us we propel higher. So we're going to keep BOTZ in the portfolio. I hope that you're keeping track of these. Let's see what else we can play with. The next one in our grouping was Buzz. Buzz.K is the metastock symbol. Omni takes interest about here. We start letting you know in a webinar. Thank you, Metastock, for the webinar. Traders Corner, we did one for them as well, same stocks. Then we did another webinar here in February to tell you we still love AI, the Buzz K AI stock. Keep it in your portfolio. And here we are now. Moving up nicely, but once again, look at the respect that gets paid to these averages there. It's an amazing thing watching how Wall Street takes these AI stocks and just works around these algorithms and just stays with them, right? I mean, anytime you get near them on the bottom, they buy. If you get under them, they drop. It's just an amazing thing to watch. Look at how much higher we are now. And these are all very inexpensive. This whole group I offered to Metastock traders and my OmniX around the world. When I offered this to you back, last year, I mentioned that these are all extremely inexpensive. This is a $21 purchase. They're all cheap, but believe me, you keep them in your portfolio long enough, AI is going to take them higher. So this one we will continue to hold on to, doing a fantastic job hovering around the average. And this one stays. So next one was the IQM, the Franklin Intelligent Machines ETF. Now, it looks kind of herky-jerky movement, so there's probably not a lot of volume in there, but they're killing it around the 25-bar algorithm or moving average, whatever you want to call it. A moving average is an algorithm, kids. A simple one, but it is an algorithm, so we'll call it the algorithm. So another alternative to high-flying NVIDIA, and when I believe, if you recall, when I first started to show you this grouping, it was before the NVIDIA split. It was $1,000 stock. You know what I mean? Nobody could afford it back then. So that's why I brought you all these alternatives. Since then, NVIDIA split, but the alternatives are still doing well. So we liked it here and told you about it in our first webinar. Second webinar, we told you hold it, maintain. We'll keep it in the portfolio. And it's still doing quite well compared to where we got in. So it's moving higher. It's actually, what I don't like about this one, although we're going to keep it, is a blow off. Something happened here. News, whatever, something ugly happened right here. And from that day forward, the stock just got ugly, right? It went down, but look at the really nasty looking bars after that. Whatever internal happened, something happened in the company here, and it's affected this chart since. If we go too low, we will yank this out of our portfolio long before it gets lower than where we purchased. So we are going to continue to hold on to the Franklin Intelligent Machines ETF, which is the IQM. Once again, much cheaper, or certainly was much cheaper than NVIDIA when it was before the split. And the 25-bar algo seems to be Wall Street's darling. Traders, not only do I offer trading recommendations, which really rock, I also host once every few months a boot camp where I in-person train people. In fact, I am going to the UK to do one in just a few weeks. If you are watching this from the UK and you want to join me, you go to omnibootcamp.com and fill out an application, and I'll call you personally and let you know where I'm going to be in the UK and how you can attend my webinar, my seminar. That will be a live seminar, 4-day-long boot camp, very intensive. I'll send you home with a brand new laptop, which I'll pre-program for you, and all my knowledge. So if you want to get involved in the one happening in October, November, go to omnibootcamp.com, tell me you're from the UK, and we'll get you involved. What's next on our list? The AI play loop. This one is just killing it. I mean, it's got a lot of yo-yo style movement, but look at when it, after the drop, boom, the big ricochet back up. Now, we got interested in it back here in October, right? We told you to keep it in your portfolio, maintain it sometime in February of this year, and we still are maintaining it. Now, I'm not loving the yo-yo style, but you know, when you're a long-term trader and you're holding long-term positions, unless you're really, really deep, emergency stop gets hit, you just hold, you don't do anything. You don't day trade long-term positions, right? We don't do anything with them. We go like this unless we hear the stop get hit. So we're holding this one. We still like it. It's all the way up here. There's nothing wrong with it. And once again, look at the action around the 125-bar algorithm. It's an insane thing for me to watch. I don't know if it's as exciting for you to see, but when I see something that simple to follow, I find it really exciting. It's Wall Street not being complicated. It's Wall Street just doing their job, but you should be able to spot it as easily as I can. What else is out there? So we're going to continue to hold on to the loop. The 7th stock in our portfolio, we ixnated a long time ago. Learns, LRNZ.K. It was the True Shears Technology ETF. We told you about it down here at this webinar. In this webinar, we told you to get rid of it. Get rid of it. We don't like it anymore. Too many red arrows lately. What that meant was I had all green arrows here, green arrow, green arrow, green arrow, green arrow, and all of a sudden we started getting those red arrows and we hopped out. So we told everybody in the last webinar, this one comes out of the portfolio. In all honesty, it's not performing as well as the others, although it is still performing. So that one has been removed and we haven't gone back into it. It's still out of the portfolio. Then we have number 8 in the list, the Wisdom Tree AI Fund, WTAI.K. This one we removed as well from the portfolio as soon as it dipped below the average and below the trend line, that ellipse. When it got below here, we told you about that at the webinar. Remove it from the portfolio. That one's gone as well. So we liked it down here. We told you here to get out. If it breaks that green line, it did, out of the portfolio. We discussed that in our last webinar. So the WTAI is no longer part of our AI portfolio. What else is out there? That's not where we're going yet. There's more. 9. UBOT.K was the Robo AI Automation ETF. That one, I just didn't like its action. We got in, or we told you guys about it down here. Here, we did a webinar and told you if it cannot stay above this support, remove it. We will remove UBOT as well as the other two if it fails to stay above the support. It's been removed, and we did discuss that in the last webinar. So Join me at my free site. Enter that chat room at livewithoscar.com. You can literally be with me right after this webinar if you choose. So we liked it down here. And this webinar, we told you if it gets under that blue line, you're out. And then we removed it from the portfolio. So that one's gone. Who else is next? I believe there's another one. Yes, this one. The AITHNQ, think.K. And I'll tell you, these cats are thinking, because down here we started liking this. It really, really has done well since. Yes, it's had its yo-yo movement, but I like how thick the bars are and how big the bars are, which tells me there's more volume in this than those little herky-jerky bars that you've seen in some of the other ETFs that we've been following. So this one remains in the portfolio. OmniCamp in the UK is coming soon. Kids, if you want to join me, don't forget, go to omnibootcamp.com. All right, let me explain. The reason why I'm mentioning these things to you and I'm telling you about my website, and I'll mention the anatomy of today's trade if I can, is because I keep getting yelled at by all my Omniacs and my staff because I don't sell anything during these webinars. I just give you great information and I go away. And they're like, Oscar, why don't you ask anyone to join us? So, all right, cats. Neil, Dano, everybody, I will do what I can, okay? I promise to be a salesman, but I'd like to just be an analyst. Anyway, if you want to join me at Omni Bootcamp, I will make you a fantastic analyst, but you got to go to Omni Bootcamp and fill that stuff out. It's an application. What else do we have for you? AI play number 11, Defiance Quantum. Now, this one is a monster. I just love this one. It was also part of the, portfolio that we put together in the first webinar back in 23. Then in 24, back in 23. Then in 24, we told you we still love it. Don't stop holding it. And look at what it's done. I mean, now it's getting ready to break out of what looks like some sort of a weird descending, ascending angle. I don't know what it is, but it looks like something that wants to break when it gets to the apex. It's been killing off this average whenever it has the pretty deep dips, and it still looks pretty good to hold on to in our portfolio. So if you have been following these ETF stocks, you name them, since I started offering them 2 webinars ago, we're still in great shape, kids. You're doing really well with all of them, except for the 3 that we removed. And in all honesty, 2 out of those 3 are still performing a little better than what you'd expect. So far, so good. Omni sniffing out all those ETFs, just fantastic. So that is what we did in our last 2 webinars. But what I noticed in the last 24 hours, I literally sat up last night until 6:30 this morning and found a whole bunch of charts that I wanted to bring to your attention for the commodity stock ETF. What else is in here? Mostly, if I would tell you the truth, it looks more like it's more commodities and indices than anything else. But there's something going on out there, and we all need to take a look at this. I don't want people to miss this like everyone missed cocoa. So I'm going to explain a few things to you here that you may or may not like to see, but we'll find out. This shows us something very interesting, and you've seen this in many of my videos and many of my webinars. This guy right here. This is the barometer of inflation, deflation in our economy, in the US economy. It's the measurement of commodity inflation or deflation. This chart looks more like deflation than inflation, right? So I've been showing this to you in so many of my videos I do at night to keep Omniacs posted and apprised of what should happen the next day, and in these live webinars. So we had 140.55 was the price of the inflation index right after COVID, when supply chains went ballistic and we couldn't get anything. 140.55 was your price. You were way up here. You have dramatically dropped in all these inflationary markets like crazy, all the way down to 99.05. You went as low as 95.19. So you would think, well, that means there's really no markets going up. Everything is going down. And I will tell you that's not exactly the case. Let's go take a look. So what I have noticed is, let's see if I can find something. Let's start with just the S&P. Traders using technical analysis, which we're really good at here at the Omni Trading Academy. I put this chart in front of everyone's eyes at the beginning of September when we were having tailspin crash days like this one and this one. After these 2 days, if you recall, TV was talking about, oh no, the Fed missed the ball, forget about it, we're not gonna have a soft landing, it's gonna be a crash landing, it's a cookbook. They were going crazy on TV, right? And I came out and said, everyone, stop, what's wrong with you people? Don't you know how to read charts? And I put this very chart in front of everyone's eyes and I said, here's what's going to happen. Once the right shoulder gets resolved of the inverted head and shoulders, left shoulder, the inverted head, the right shoulder, inverted head and shoulders. Once the right shoulder gets resolved, it's going to break out through the exit door. And I drew this and I put an exit door right here. And I told everyone, I gave you 50 charts and a bunch of reasons why all those charts prove S&P goes back up. And once the right shoulder gets resolved, it goes right outside that exit door. This is what it looked like. And that is what happened, kids. I mean, is that not insane technical analysis? Can anyone do that? That was put before your eyes. It did exactly what I told everyone it would do. It's going to come down the whole week. Don't worry about that. Once the right shoulder resolves, it's going to go out that exit door. I drew that exit door when there were no bars past this. How about that, kids? That tells you that all the other work I did was absolutely right, because it allowed that piece of analysis to turn out to be true. With that in mind, we have a lot higher to go. And let's see if I can explain some of that to you. So you just seen the ES, and this tells us that it's got a lot further to go. Now, traders, I've got targets, year-end targets. 5770 was my year-end target that I put on my whiteboard in the beginning of the year for the S&P. We were trading at the price of 4,600, and I told everyone S&P would go to 5770. And of course, I sounded crazy in the beginning of the year when we were a lot lower, but look at us now. And then I put a secondary target in of 6040. And it's on my whiteboard in every video I have done this entire year. Just look at my whiteboard to the right, you'll see these numbers. 6040 is going to get hit because we've already taken out the 5770. We're at 5790. Congratulations on the Omni year-end call. We nailed it. Unbelievable, right? The beginning of the year at 4,600, I gave you this target. We nailed it. But you'll hit this one this year as well. So congratulations to Omni for nailing that. Now let's go show you commodity and futures traders a bunch of really smart gifts that I'm going to give you. So markets are starting to explode. Obvious is like the EMA, the S&P, and the NASDAQ, right? Here's another obvious one. Another obvious one is gold, right? Very obvious. Gold's exploding. We've been talking about gold for weeks. We showed you the bull flag before it was even finished developing. Called for the upward move. Made some good money in gold yesterday, trading the Omni. Made money again today in the S&P, trading the Omni, using the same methods. This is obvious that it's going up, right? But there is more, kids. I promise you, there's a lot more markets that are going up that people haven't paid attention to yet. So if we go to, now I've got a list. I'm going to read off this list so I make sure I give you every one of these that I looked at myself. Watch this. And if I remember right, we wanted to go to ECOZ24. Cocoa. Nobody even noticed cocoa when it started running. Let me take you back to show you what I'm talking about. Cocoa started to do this. And who pays attention to cocoa? Nobody, right? It was at 2,700. It started to do this with no one paying attention. It went to 10,000. That's 10,000 up there. 10,000, the price of cocoa. All right, no one was paying attention. So I went on a hunt. I said, I'm going to hunt down the other markets no one's paying attention to, because the inflation index would make one believe that there's no inflation taking place in commodity markets. All right, let's go see what markets we can actually follow that are starting to move higher. Cocoa did it, no one paid attention, almost everybody missed it. Who's going next? Look at this guy. No one is paying attention This is how cocoa started. This is coffee. Do you hear anybody out there talking about coffee? Do you hear it on TV? Do you read it in the news? No one's saying a word, right? Look at how it's moving higher. Nobody's got their eye on this ball. That's not going to be the only one. Watch this one. Nope, that's not what we want. It's ESBH. Look at sugar. What the hell? There's nobody paying attention to these. I want you to write these down. Check them out for yourselves. I promise you, these things are going. They just started lowering rates, which makes the dollar go down, which creates commodity inflation. These things are starting to go, kids. Pay attention. All right, so sugar. Look at that run in sugar. It was 18. It's trading 23 now. I mean, really? All right, no one's paying attention to that. Let's go find another one. No one's paying attention to orange juice either. Look at this thing start to go. Why is orange juice $500? What is that about? It's supposed to be like $275. No one's paying attention. Traders around the world are starting to recognize after what happened to cocoa that if you quietly, without saying a word, just buy these commodity markets, by the time people realize it happened, you can start taking your profits. They're going up quietly. But these markets are quietly running. So now you got another one to look at, OJ. What else is out there? Markets that people aren't paying attention to. This one is, where am I? EO, this is a good one. Palladium. I know who is paying attention. The Russians sure are. They're not stupid. Palladium's moving higher. They're taking this thing up. Now, it's kind of controlled by Russia because most of the palladium, not all, but most of the palladium that we use in catalytic converters and trucks and cars and all that good stuff, mostly trucks, come from Russia's palladium. Look at this thing starting to go from 828 to 1128. I mean, without people paying attention, I don't hear about palladium. Do you? Nobody's talking about it. Who else is out there? No, this one we kind of know. Look at this wonderful market, T-bonds. T-bonds have been going up for a long time, all the way back here, all the way down here where I can't even show you. They've been going up for a long time now, right? T-bonds moving up, great for the economy, great for the stock market, because that means interest rates are moving down. So you've got T-bonds doing a great job, nice long-term moves. Nothing goes straight up. I tell you that all the time. You're always going to have things like this on the way up, but that's okay. That's just part of market stair-stepping before it moves higher. It stair-steps, moves higher, right? Boom. Let's make that a little prettier. So it stair-stepped and then moved higher. And then once again, you'll get a stair-step, and then it'll move higher again. Well, so be it. We need bonds to keep going up. Makes interest rates go down. Then there's the 10-year. 10-year notes look even better than bonds, to be honest with you. That's a prettier chart. That's a stronger chart. Looks like it wants to go even higher than bonds do. Those are your 10-year notes. Once again, if those are going up, interest rates are dropping. Makes real estate go higher, makes the stocks go higher, makes everything move higher. So we love what we're seeing there. Then there is New Zealand. Do I got any New Zealand friends out there? Check this one out. Look at the New Zealand. No one's paying attention to this one. Look at that New Zealand dollar. When I seen that, I went, oh my God, even that? Are you kidding me? No one's paying attention to that one either. They're just starting to run without anyone speaking of them. And when they don't become in vogue and they don't get talked about in the news and in the newspapers, they don't top out, because that's usually what happens by the time they hit the news and the newspapers. Just quietly running away. So if you're making a list of these, I hope I'm helping you. We've got more. Now we're going to hit some currencies. New Zealand dollar, look at that. Who comes after that? Look at that British pound. Oh my God. Look at that thing go. Once again, it's stair steps, right? It goes up, 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 does a stair step lower, up, 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 then does the stair step lower, right? Then up, up, up. That's just what markets do. Nothing goes straight up, but they're going up, kids. Please join my free trading room at Live with Oscar if you want to continue doing this for the rest of the week and for the rest of our lives. Make sure you go to Live with Oscar and I will get you involved. Look at that British pound. Now, here's the crime about this British pound. I've got to go do a live seminar. I'm going to be in Europe for like 10 days minimum. Me bringing my US dollar to that 134 pound, it's like I got the Mexican peso. What am I supposed to do? I'm going to get hit for like 63 cents on the dollar when I'm there. Everything I buy is going to be like going out to a really expensive dinner in Las Vegas if I buy a cheeseburger. It's what it is, kids. But British pound looks great. All right, who's next? Euro. Look at the euro. I hope some of you are taking notes. Look at the euro. That does not look like it wants to go down. Euro looks fantastic here, kids. You know, you could almost call this some monstrous bull flag, to be honest. You could almost call that the flag and that big drop the pole. That looks like you got a big flag building up there, kids. So euro wants to continue higher. Live seminars, we do those too. You're watching one, you know. So, you know, for you Europeans out there, good time to come to America and party, kids. What do we have next? Oh yeah, check this one out. This one's doing good too. Look at the Australian dollar. I mean, even the Australian dollar is jumping on board, for God's sakes. What does that mean? You got the Canadian dollar to go and you really got something going on. So even the Australian dollar, look at it, boom, just exploding. So we offer live real-time trading recommendations like the ones that we use today to make a bunch of money in the S&P. I hope that you'd be interested in what I can produce because I'm really good at what I do, kids. Ask anyone that hangs around me. Come hang out with me and I'll prove that to you as well. And I'll give you my live trading recommendations and hopefully you'll make some money for yourselves. So we did the Australian, right? Who else do we have? Look at this guy. If you could get the Japanese yen, that's not spelled correctly. If you could get the Japanese yen to move higher, I mean, you got something going on, kids, right? What makes the yen go up? It's been going down since, I don't know, I'm 30 years old, right? It's been going down for about 30 years. You even have the yen starting to move higher. Yen gaining its legs. I don't even know what that means. Just forget about that. I mean, it's not even supposed to be going up. It's the yen. Even that is starting to make its way. Someone's writing to me in my trading room. Oh, you missed the move, Houdini? Don't worry about it. It was, well, hey, I'm just going to write to my traders in my trading room for a minute if you don't mind. Mr. Houdini, there'll be more trades tomorrow. Don't you worry about it. Tonight, forget about tomorrow. You'll catch something nice, brother. Just stay with me. All right, so what else do we have out there? What is making all of this happen? I mean, you're even getting it in a lot of commodities. Look at this one. See if I can remember the symbol to this one. I didn't write it down, but I remember thinking about it. Yeah, I think that's it. That was it. Check this out. Even the meat markets are starting to get into this now, right? From all the way down there, you had your first rally, came down, boom, boom, boom. Nice rally taking place. Lots of markets are starting to join this explosion towards the upside. So keep an eye on these gems, you futures traders. What do you think is making so much of this happen? The almighty US dollar is doing this, kids. It's been coming down for quite some time. And now it's falling out of a big bear flag, which I've shown you in at least the last 3 videos. So look at it starting to fall out of that flag. You better believe those other markets I showed you are going to go up. They will continue going up, especially if you see that dollar moving down as quickly as it's moving down. So that is what I wanted to show you today. That was basically everything I put together in the last 48 hours to present to you at this Metastock conference. I hope everything I showed you helped. Again, please come find me in my live trading room. We can hang out every day of our lives. It costs you nothing to be here. And the high level of analysis that you see in these videos, I promise you, believe it or not, what I am showing you, what you've just seen in this webinar is my 101 analysis. I am sleeping on a cot in my kindergarten class, drinking warm milk and cookies. I promise you, I have shown you my 101. I can show you much more in-depth analysis than that, but I don't want to confuse anybody. I want to give helpful tips, tricks, and techniques that you can use moving forward. If you really want to learn the ins and outs of the Omni, that would be at OmniCamp. That we don't give that away in live seminars, webinars, or any of that nature. So, well, we do in our seminars, but only if it's an OmniCamp seminar. So that is what I wanted to show you. Now, Neil made me promise that I would show you my ES trade for today. So Neil, for you, I will show everybody what we did in the ES today. And if I could just find my trading site, I will show you what we did. All right, so we were here. I sent out a flash update this morning. Don't know how much of this you'll be able to read, but I'll try to blow it up for you a little bit. Maybe you can read some of the words. I sent out flash updates this morning, and the first flash update simply stated, the Omni says to buy long E-mini S&P on a dip down to the 57.61, 57.57 area. Just hop in. Don't worry about the range. Just get in when you can. And here's where you place your protective sell stops. So Omniacs around the world put orders in. Next thing that happens, they get number 2 flash update. Number 2 says, go to market on your ESZ24 buy orders. Your stops will remain the same. Last price of ES is 57.63. Boom, I send that out. Market drops immediately as I hit the send button, and we actually got filled. Omniacs were filled a bit lower. We were filled at 56.59. Really 56.59 and a half, to be honest, in the E-mini S&P. It's already back to 57.61. Keep your stops in place. Next flash update. Now we're in. Last price is 57.74. We got in at 57.59 and a half. The Omni target number 1 for today is 57.75. Please take profits on a portion of your positions at market. Now I want you to move your buy stops, trail your sell stops, trail your sell stops up to 57.54. Your next target's going to be 57.83. So we're trailing stops and we're taking profits on some of our positions. Next is 5th flash update. Omniacs, we just hit 57.83. The target is 57.83. Get out if you want to stay in. 57.90 is your next one. Let's see what happens, but move your stops to break even. And then we get another flash update. Bingo! 57.90 has been hit. Please take all profits at market, except for maybe one runner if you want to hold a one lot. Move your stops up on that runner to 57.83. And the last flash to come out was, okay, Omniacs were filled long down to 57.59 and a half. We took profits up to 57.90. We put a stop in on our runner at 57.83. Stop was hit, out of the trade. See you later. We'll do this again tomorrow. That was today's trade. Sent out those flash updates all day long and all night long so that you can get in and out of the trades with me. And we do that every day here at the Omni Trading Academy. If I could be of help to you, please let me know. Jeff, if there are any questions I can answer, please let me know. Otherwise, thank you.
There are tons of questions, Oscar.
All right, let's see what we got.
We'll start with a comment. Scott says, I followed the Omni for 15 years.
Wow.
And Penny says, what are your thoughts on Bitcoin? I know you're going to have some.
What are my thoughts on Bitcoin? Let's go to a Bitcoin chart. I believe I have one. Maybe it's here. Let's take a look. I got one sitting. We'll look in 2 places because I kind of was messing with it last night, so I would imagine it's going to show up. Bitcoin. There we go. So Bitcoin, what I've been doing for my traders is every time we get to this spot, I do a video and tell traders that we just hit a hold spot. If it holds here, you can go long Bitcoin until it gets here. And then it gets there and it stops magically. And it comes back here and it holds, and it goes there and it stops, and it came back here and it holds, and it came back here and it held, but now it held the average just like it did last time. Look at this. You held the average here. You held it again, but with the trend line. What do you expect? Absolutely, positively, somewhere up here. That puts us around, 70,000, 73,000, somewhere around there before we run into possibly trouble again at the top of that huge channel or big bull flip. So that's what I've been thinking for Bitcoin for the last 3 or 4 months. I still think the same. Created inside of that, it's almost a giveaway.
All right. BB wants to know, US dollar is going down. Does that mean other currencies and commodities are going up?
He did watch the webinar, didn't he? Did you watch the webinar, sir?
He might have joined late.
We just went over a list of all of those that are going up. Yes, the answer would be yes, sir.
And then he specifically asked about oil and silver.
Now we're getting into an interesting place. So let's go find something in oil. Yeah, let's see what we got here. In oil, we're starting to put in a little bit of a bottom here. Little bit of a V bottom is what I've been calling this. If you kind of just throw some trend lines around it, you kind of get a V there, right? So I'm not exaggerating. So it looks like a V bottom is in. It looks like resistance is about to be tested. And if that V bottom gets above that resistance, crude oil is going higher. Now, let's mark this chart for you for a moment. And it's the X. All right, so crude is priced in dollars. And you know, the way the world works, kids, if that, and I've shown you this in many of these webinars, seminars, live videos, if this was a teeter-totter or a seesaw, if you will, and we were out in the park and we both decided to get on that seesaw and your name was the dollar and my name was crude, you'd be a lot bigger than me right now because you're going down. You've got more weight than I do. And what happens on that seesaw when you go down? I go up because I'm priced in dollars. So the stuff priced in dollars, while dollar is starting to tailspin, has no choice but to go up. It is literally priced in dollars. It has to go up. So if you get past, sorry about that. Let's go back to where we were. If you get past this spot right here, Wall Street is going to pay attention. They will see the geometry get broken. They will come in like banshees. At the same time, if you fail there, they're going to do the same thing opposite. They will sell it if you fail there. So keep this in mind. I'll give you a price on it right now. If you could get around 73.30-ish, something is going to happen right there. Keep that number in mind for November crude oil. I hope that helps.
So Pete wants to know, do you have any thoughts on Dr. Copper?
Sure. Let's pull copper. It's not moving as well as the other metals, so it didn't make the webinar, but it's still pretty good. So let's move this out of the way. It's at the 200 bar. Oh, okay. Check this out. In a video not too long ago, I showed this. And in fact, I did it for my buddy Sun King, who actually works at my side. I said, Sun King, we have a bear flag and resistance. If you could get above the bear flag resistance and the 200 bar moving average, it'll go. We were here when I did the webinar. None of these bars existed yet, so it basically kind of looked like, let me see if I can delete these. It sort of looked like this. And I did a video, so you go back and look at my video on my YouTube channel, because I do them just about every night. And in that video, we were here. And I said, you know, Sun King, being that you're a good friend of mine, we love him to death. He helps me with my website every day. And we were right there. I said, you've got the top of a bear flag, the 200 bar moving average, and resistance all at the same spot in copper. If you could get above that, where the bear flag and the 200 bar moving average and the channel meet, you will move higher. If not, you can sell it right there. So it has made its decision, and it's starting to finally move. So I'm liking copper a lot more now that it got above this mess, proved that it's not a bear flag, right? It just looked like one. Instead, you got above that, and that makes it strong. So I like buying different copper.
Oh, sorry. Boris says, interesting. Is this good for intraday trading?
No, not really. I mean, yes, but intraday trading requires that you get in and out. Almost the moment you notice something, it's almost time to get out of it. So if you're going to do intraday trading, all right, so I'm looking at a bar chart, which is a daily bar chart. That's going to tell me the daily range that I'm looking for tomorrow. If you'd like to trade in and out using intraday charts, you would basically have to go to a 5-minute, and trade for 5 minutes at a time, go to a 10-minute, a 30-minute. And then this analysis does work on that if you're willing to get in and get out of the trades like a scalper. If you're going to do what we do, which we basically swing trade each day. Every day for us is one swing trade day, and we're out at the end of each day. Omni's always out at the end of the day, but we trade the swing inside the day, so we need the daily bar for that. If you were shorter term, if you were looking for quick points in and out, yes, you would go to a smaller time frame chart. Anything else I can help you with?
Sorry about that. Richard wants to know if you can look at NG natural gas.
Natural gas. And we're October, right?
Mm.
No, November. Here's what I have. Natural gas, I've only said one thing about natural gas for the past 3 years, the past 4 years. It's going to $1 and it's going to stay there forever. So I don't like natural gas at all. I think natural gas belongs down here at this price, right about here. There's so much of it. We get it as a gift for shaling. It comes out of Europe. Everybody gets free natural gas. Of course, you got to pay for it if you're not pulling it out of the ground. But if you're pulling oil out of the ground, you're getting that stuff for free, right? How much could it really be worth? So I don't like natural gas. I think it should be worth $1. But you've heard me say this for the past few years. Now it is getting there, right? It's starting to make its way. So I'm no big fan of natural gas. Sell the rallies. And you can even see the geometry telling you to probably sell the rallies when you get there anyway. So I'm no big fan of natural.
BBBB says, how often do you look at the dollar when you're trading?
So when I do analysis, I sort of do analysis on everything that you see on this board almost every day. I look at the grains, the meats, the metals. No, not really the meats as much anymore, but I'll look at the grain sector, the indices sectors. I'll look at the dollar. I'll look at all the currencies versus. Then I start looking at bonds. I look at the crude. I look at everything I can get my hands on. There's more, of course, if I make the board smaller, there's even more stuff I follow. But I actually do analysis on almost everything every night. So if I don't do analysis on the dollar, it would only be because I don't see anything major happening in grains or currencies or something else. If I see anything happening anywhere, you got to go look at the dollar and see what that's doing as well. So I basically try to analyze everything I can every day.
All right. So last question, and this one I think is most important. Is it livewithoscar.com or livewithoscar.com?
Well, you know what? You tell me. Let's do this. If I can find it. Is it live with Oscar, or if you're with somebody who's on camera 24 hours a day, do you actually live with them? It's live with Oscar, but it's live with Oscar.com. We literally live our lives together in this trading room. If you know me, it's live with Oscar. If you don't know me, it's live with Oscar.
All right, very cool. Slick Pete says thank you. Go check him out, livewithoscar.com, or live with, whichever you want. It's spelled the same way either way. I'm going to talk a little bit about that training program we put together a little bit ago. But Oscar, thank you very much for coming in.
Thank you for having me. Traders, I hope I've helped. If you like what you see, please join me in my live trading room. I'm going to go take a 5-minute break, and then I'll be right back here doing my thing. Actually, we have analysis to do tonight, so I'll be doing analysis for tonight's markets in just a few moments. Thank you, everybody, for tuning in. We love this. Love the back and forth that we get with the questions. And Jeff, I couldn't say more about Metastock. We just love you guys. Thank you so much.
We love you too. We love you more, as I would say to my daughters.
Appreciate it. All right. I'll see you on the other side.
All right. Thanks.
Cheers.
Okay. I'll go ahead and do this. All right, BB, I just saw that. So sorry about that. You can go to Live with Oscar and ask him. Just go. He's going to be there. Let's see. All right. Let me go ahead and talk a little bit. You should be able to see my screen. Oscar always does a great job. Unfortunately, we are kind of out of time. But if you do have more questions, you want him to look at more charts, livewithoscar.com. Okay. We did sit down with Oscar a couple years ago we created a training program called Trend Lines and Technical Formations. In it, he talks about how to properly do trend lines, support and resistance levels, technical formations. It was a total of 3 hours of instructions, and it was very thorough. He did a really, really good job. We are going to offer that to you today as part of our conference promotions. Normally, it would be $4.99. As part of this conference that we're doing, we're going to offer a conference price of $279, and you can get that at 800-882-3040. You can also get it at metastock.com/conf promo. If you have any questions, you can call us. You can also visit us online at metastock.com/salespchat. So there's that. I do want to kind of talk a little bit about Metastock. Let's do a prize real quickly. Let's do a prize. Greg, are you available to do a prize?
Yes, I absolutely am.
I'm sorry that I didn't let you participate last time.
I can use a break just like anybody.
All right. So this prize that we're going to give away right now is from Daniel Sinig. It's a Trader Indicators welcome package. It's worth $497. And I'm trying to. The package contains the divergence cloud indicator, which is powered by AI, predicts the odds of winning. In addition to that, gosh, every time I click to move things around, the package also includes access to our weekly training sessions and the trend radar indicator. So that's a package. It's a $297 value. I'm sorry, $497 value. We're going to give away one of them right now. So what I need from you, Greg, is I need you to give me a number, and that number can be anywhere between 1 and 6585.
Okay, that number is 6222.
And that's a Roman, another Yahoo address, Greg. Okay, Roman with a Yahoo address. You didn't register with a country, so I don't know what country you're in, but you just won that. What we're going to do is actually we'll arrange getting that sent out to you next week after the conferences, after we're sweeping the floors and mopping everything up after this conference. So,
after the wrap party.
Yeah. Do you want to talk about how you can be eligible to win a prize for those people on YouTube?
I would like to do that. So if you're watching GoToWebinar, you're all good because you wouldn't have been able to do that unless you hadn't registered. If you're watching on YouTube and you'd like to register for this event, just go to metastock.com. At the very top, there's a banner. Click on that. It just takes a second to register. You don't need to do it for every day. You just need to do it one time for the week, and we'd sure appreciate it. Also, don't forget to like and subscribe on YouTube if you're enjoying this event.
Was it you earlier that told me that people that like and subscribe get good karma?
Well, I think karma came down and told you that.
Okay, all right, cool. Thank you for the assist, Greg. I appreciate it.
Thank you.
All right. I do want to, of course, we've been talking about Metastock all day. Metastock will allow you to scan markets, test trading ideas, forecast probable price movements, get real-time commentary, buy-sell signals. It's been rated #1 31 years in a row. You can get a 3-month extended trial where if you buy a month, you'll get a 2nd and 3rd month for free. And we did the math earlier. That means you'll be running Metastock until Christmas Eve. So you should do that. Metastock.com/conf promo. I believe there's a reason it's been rated so many years in a row as the top. I think it's because all of the people that are using it have been using it for decades. We appreciate that. Like it, and they vote for us year after year after year. So I want you to join those ranks. I wouldn't trade without it. I love particularly scanning with Metastock, going through that list of stocks and finding the ones that hit my criteria or the ones that are ready. So metastock.com/conf promo, metastock.com/salespchat, or 800-882-3040. We'd be happy to send you more information. If you want to get more information, we have lots of it to send. Get started. It's a great tool, and its design is to help you trade more successfully. So I also do want to mention a new partner that we've got, thetradersforum.com. If you go up there, you can join in. You can get live market chat you can chat live with other traders, learn about the markets. There's lots of lessons and PDFs and videos, all kinds of interactive content in there. But mostly it's a community. And the goal that we have for it is a community of traders helping other traders. So go to thetradersforum.com. It's free to join. You can join our chats. You'll talk about the stocks you're interested in and get ideas from other people. Thetradersforum.com. Great site. Highly recommend. I'll see you there. All right, cool. Our next speaker is Adrian Manz. Adrian is another great speaker of Metastock. I've got his book right here, Around the Horn. And if you go through it, it's got very, very patterns, lots of illustrations, very, very visual patterns. It's a great book. And what we did was we sat down and we kind of took the patterns that he has, and with a lot of help from him, created them as scans that you can run on Metastock. So Adrian is here to kind of talk a little bit about the patterns that he likes to use, and kind of and we always love to have him. So Adrian, let's go ahead and get you started. Where is my, okay, things got moved around. All right, there you are. I can see your mic just turned on. I can't quite hear you yet, though. Okay, let me do this. Yeah, do you think, if you can hear me, which I think you can because your audio is connected, what I'd recommend is if you can unplug your mic.
Working now?
Yeah!
There we go.
Cool, cool, cool.
Okay. For some reason, that one microphone gave me 10 different options for which mic to use. Here we are.
Yeah. It's not easy anymore, is it? There's like 52. Everything has a microphone. Let me make you the presenter. I'm glad we can hear you. I was about to pull my cell phone out and give you a call. So we're all good. Now I'll let you know as soon as I can see your screen, and we'll get you started. I can see your screen. All right. I'm going to go ahead and get out of the way. It's your turn. Take us home.
Let's see here. All right, there we go. Okay, so I think my camera's on. I got the webcam on, but we've got all these like television cameras around in here that are going to waste. Go to webinar here, but we're not on TV, so that doesn't count. All right, I am going to talk to you guys today about something totally different than I usually do. I want to take it back to the basics because, you know, a lot of times I do these things and, you know, we sort of dive right into the super technical things. And, you know, I think that's great because you guys are usually a pretty technical audience. I mean, most of the guys who are really drawn to what we do anyways are you know, sort of engineers and professionals, people who like to tinker and reverse engineer things and all that kind of stuff. But today, what I want to do is dive into something that goes back to sort of the basics of how we trade and show you a strategy, just soup to nuts, that you can pretty much just go and start using tomorrow, or at the end, I'll give you a chance to get our trading plans and everything for free for a while, and you know, you can see how we do it and follow along every day. And you should, if you're doing it right, be able to put yourself in front of the opportunity to make some pretty decent profits at least 3 or 4 times a week in just the first hour of the trading day. So Julie and I have been at this for a long, long time. As Jeff said, we've been partnered, I think, with Metastock for probably going on 20 years now. And you know, we started trading back when we were graduate students, and this whole thing was just first coming out of the gate. And you know, we thought, great, this could be fantastic. You know, we were working on our PhDs and our MBAs and everything, and we thought this could be great because we can do this to supplement our income. And then as we finished graduate school, we said, we're never going to make this money doing anything else. So now what do we do? And then we decided, well, we're going to be full-time traders. And full-time traders was great. And, you know, we really enjoyed it. And we did lots of the stuff that we've done over the years has been sort of in connection with the New York Stock Exchange. We used them as a data port, as a data facilitator when we were doing our graduate work. We've gone back year after year and just made sure to, you know, stay in touch with the specialist system or the designated market maker system now, because, you know, it's a different animal. It's very different than the NASDAQ. It's got a different personality. The way things trade is very different than on the purely electronic exchanges. But we got into this thinking this will be a great way to not have to, go out there and teach or consult. I was going to work with McKinsey & Company as a consultant when I got out of school. And, about 4 or 5 years into it, we got to the point where we said, you know what, are we just going to push money around all day? Is there a way to, really stay connected with people? And we love people, and we love, doing sort of live events and teaching. I guess that's why you go get a PhD to begin with. And so we started this Trader Insight thing, and Trader Insight's been fantastic over the years. And we work with small groups of people, and we use it to just, stay in touch with people, build community. We do lots and lots of, like travel events, and like I said, we go to the exchange. We take our guys down to the floor of the exchange. We're only working with probably 40 people a year max. It's a little different than most trader education things, but we love it, right? We just love it, and that's our son Connor, and we drag him with us when we go. So he's been all over the world probably 10 times. We trade from wherever we are. We just set up shop, stay there for 2 or 3 weeks. And we just really enjoy the lifestyle. So the why of your trading is going to be one of the more important things. I'm going to show you a slide in a second, just of everybody, together, one of our groups, and just imagine, it's like the psychology of why you're doing it is as important as anything else. So, we do a show that you may or may not be able to see where you are, depending, where the whole thing is about trader psychology and what it takes to turn yourself into a profitable trader. And we know from working with people that you can take just about anybody and get them to where they are able to do this, and do this for a living if that's what they want to do this for lifestyle if that's what they want to do. I mean, like I said, we love to travel. We love we go scuba diving, we go skiing. Those of you who know us know we do a full 2 months of skiing every winter, where we are just on the road on one destination after the other, and we trade in the mornings, and then we ski in the afternoons when we're out west. And other parts of the country we go and automate things. Other parts of the world we go and automate things, and that's our psychology, right? That's what we want from this business. Yeah, we want to make a living, we want to do well with it. And, we want to share our ideas with people, obviously. But the big thing for us has been lifestyle and the freedom to just enjoy our family and do lots of traveling. And, all those faces on the board behind us there on the Trader Nation set, it's about getting to know a bunch of people and do a bunch of things, bunch of cool things with those people as time goes on. I write about everything that I do. So, that's a hazard of our background is, we like to write, we like to, get out there, show people what we're doing, talk to people about what we're doing. So do journal articles as much as there are journal articles in the business of trading. It's, it's not really an academic endeavor, even though, behavioral finance was kind of our thing for a while, which got us into sort of that university space. But that's not something people are super interested in. What people want is a bunch of ideas about how to get in there and trade, and how to find patterns that are going to go and facilitate a profitable trading business. And what we find is a lot of people struggle for a long time with trading because they try to pound a square peg into a round hole. So they read an article, and they see, oh, what this guy's doing, X, Y, and Z. Here's his strategy. If it's making money, I can make it fit my psychology. And I'm going to tell you, when you talk about war, the war in trading is between your ears. This is not a business where you're in a fight with the market, or where you're trying to outwit somebody on the other side of a trade. This is all about managing what you do in a way that allows your psychology to harmonize with what's happening in the stock market, or in whatever market it is that you're trading. Because when you start trying to outsmart things, or when you start trying to get ahead of things, or when you're chasing momentum, all those things will instantly put you behind the 8 ball and make it very hard, for you to succeed. I wrote a bunch of books. I know Jeff just showed you one. So Around the Horn, I promise there will be a new edition of that. I owe my publisher, a new edition of that, and I'm only a year behind, so I'm going to say it's coming. He wants a much bigger section on psychology in there, and I agree. This book came out in 2001, and it was a runaway bestseller for a lot of years. As a pattern book, as a book that goes through and shows you, okay, here are 9 patterns that Julie and Adrian trade every single day, and this is what they do to make their living. And it was just an honest book that taught a very basic strategy, a very honest way of interpreting what we see in the market cycles, how stocks react to markup, to markdown, to consolidation times, when you can expect reversals in the markets and when you can expect big continuation moves. And it's probably over the years, it's been licensed by a bunch of places that do scans against it. Metastock is hands down the best. So the pattern recognition capabilities of Metastock, if you're a Metastock user and you have the module, then what you know is when you run the scans will give you patterns that look exactly like the ideal patterns in the book. And just about every other piece of software out there that does filtering for my patterns requires a lot of extra work on the part of the end user, where you have to go through and sort of figure out, is it really showing me what Adrian is looking for in his trading, or is it just giving me some mathematical representation? So I don't know exactly how they did it, but Jeff and Greg and all the guys who worked on this thing really managed a long time ago already to get it down to it's going to find the patterns exactly the way they're expressed in the book. Patterns are represented in terms of a analogy. So the analogy is baseball, and the patterns are called things like fastball, backdoor slider, infield fly. It's all those things are just, so if you're reading the international version that's published by Harriman House, which is Beat the Street, that has them as an expansion of range and volume, an exhaustion reversal. We took all the baseball out of it because they don't love baseball over there. World Cup trading was about a soccer analogy. And it doesn't matter what the analogy is, the stuff works because it follows market cycles, and it's not a bunch of hocus pocus trying to layer different things on the back of pure price. This is a pure price action. It's price, it's volume, it's time, and it's all about finding the order flow. So I was saying, we've got these groups that we do. So we do a full year program with our traders. We do 2 live events a year, and we do 2, the rest of it is canned. So the guys who come to the boot camp do a lot of learning. They go through a 650-page manual. They go through 40 hours of online training. They just really go and they drill down before they ever get to that live event. And the goal is to get through everybody's hangups before the thing is over with. So when they're going through the material and they're learning all the stuff that represents how we trade, what we're trying to do is get them before they ever arrive at the live event and do the live trading with us. What we're trying to do is get them on the same psychological footing that we approach the market from, so that they can sort of see themselves interacting with the market the way that we interact with the market. Because if you can't put yourself in my shoes, and if you can't put yourself in the position to have the same perspective on the market that the person who's teaching you how to do this has, it's going to be an uphill battle. Go around that room, I see there's a guy there who was a food photographer. There's a guy there who's a cop in Michigan. We know all our traders, right? We have vacations with these guys. There's a guy in North Carolina who's a former military guy, Air Force guy. There's Colin, who was an engineer with a biotech company. Right? I can go around the room and just say there's lawyers, there's doctors, there's farmers, everybody comes at this with something different. So, whatever everyone who's listening to this comes to this with, understand that you can get profitable doing a thing. It's just you have to go and accept the fact that just because you were profitable as a dentist, or just because you were profitable as an engineer, or as a guy who was promoting products for Siemens, or a guy who was a commodity trader on the floor, right? I'm just looking around this room, or we've got a couple of guys who are software engineers there. Just because you found profits doing that stuff doesn't mean you're going to find profits doing this. So every face at this table, another group of traders, with the exception of my son Connor, who joins us, as I said, on all these things. So the boot camps we do in Miami Beach, because we're out in Malibu, California, and nobody wants to come here to do a 5:30 a.m. Training for 4 days. But all of those guys get into a habit with us of they're not going to go and be gunslingers. What they're going to do is plan trades and then fire off trades exactly according to their plan. So this is one of them. This is the trading plan. For instance, so today's thing is going to be all about time, right? The time of day that you're doing something. This trade is an automated trade that we set up. These are the ones that we do with the Metastock scanner. So these are the ones that Metastock will go and find. And you just see there's a trading plan that I put out for the guys every night. And it gives you very precise entries, exits, targets, money management rules. And this represents, in my trading business, the automated portion of the trading. So we set these up ahead of time, and then we just let them go. So these in our trading software and the interface that we have to the exchange, what we're doing is, in the case of September 11th here, you would take TSN and you'd say it's a fastball, so it's an expansion of range and volume setup, and you would just set up a conditional order or a bracket order that says if 63.04 hits, then we're going to go short. We've got a stop loss $63.56. We've got a target $62.45. 50% of the distance to the target is $62.75. If it hits that level, move the stop to break even, and that's the only thing that your machine or you or anything else is going to do to intervene. The strategy just goes and runs itself. So we don't have to be there for this, but this runs all day. So this is running in the background. The whole idea with this is a 6.5 hour strategy, goes out the night before. I get it ready, so I'll be doing it right after I get off this seminar with you guys. I'll be putting together tomorrow's plan, and this runs all day. And I can go through, and for any one of the strategies that I have, I can go through and I can exactly identify what it is that the strategy is doing in terms of performance. So this is the around the horn trades, the trades that are sort of truest to the ideas in the book. I know that, the pattern distribution, if you're using Metastock to find your patterns, then what that pattern distribution tells you is, okay, well, how many times did Metastock find a fastball setup, an infield fly setup, a line drive setup, a 3-2 pitch, a backdoor slider, a switch, right? It goes through and it just says, here's how many times it found them. The triggered pattern distribution tells me something about my psychology, because if I go through and I see, okay, Metastock selected X, then I put on my trading plan a group of trades. I'm not going to pick every single trade that the software picks. I'm just going to go through and I'm going to find the best setups. And I'm going to say, these are the ones I want to focus on. When I look at that triggered pattern setup, what I want to see is that the distribution looks relatively similar in that pie chart to what's happening in the pattern distribution. And that's because I want to make sure I'm not introducing bias when I'm trading. Same thing goes for long short. If I've got way more shorts than longs, this has been the case this year, I want to make sure that the profitability is much greater on the short side of the market than it was on the long side when I actually did the trades. And then, you can follow the equity curve and all that stuff too. But really, what it says is, I've got a group of trades. that constitute what I'm going to do with the NYSE. Those are program trades. I've also got a group of trades that I set up that are NASDAQ program trades. I call those XRVs. That's based on an algorithm that I developed with my partners in a hedge fund, back in the early 2000s. Now we're not going to look at that today. That's a very different kind of a trading system, and it focuses on some alternate data streams and order flow ideas that you can pick up when you're looking at data a little bit differently. We do an opening gap reversion. If you want to look at that, look at the archives of these Metastock seminars, because I did that, I believe, last time that I was here, or maybe the time before. And then there's order flow trading, which is really what I'm going to talk about today. And my focus today is going to be on this part of our workflow. So we know exactly what we're going to do any given point of the day. In the pre-market, we're setting up the Apple trade that I'm going to show you, and we're loading up those program trades. As soon as the opening bell hits, we're executing these Magnificent 7 trades that I'm going to talk about today. At the 5-minute mark, we're executing our opening gap trades. And then after the first hour, we're just sort of managing things and trading more of the Mag 7 stocks as they come along over the course of the session. We're doing triple Qs, we're doing NQ, we're doing spiders, and we're doing SPY, and we're doing the ES. So we know exactly what we're going to do any given point of the day, and there's a system for each time frame that we get into. And the importance of this, right, is that it keeps your psychology in line with what's going on in the market. You're not out there just firing off trades. You're not out there doing something just because you're bored. I've got a guy who is, I think, super smart and has a very, very hard time over the course of the day, because he'll say things like, I'm just trying to figure out what to do now. And my response is just, sometimes it's just important to sit on your hands. There's not always something to do. Trading can be very boring, and a lot of your time is going to be spent doing nothing, and that's okay. That's just fine. That's the way it needs to be, especially for the type of trading that I'm doing. We're not out there chasing momentum. I'm a trapper. I want opportunity to come to me. If it doesn't come to me, what I'm not going to do is go hunt. I'm always waiting for something to come into the boundaries of one of my trading plans and then set the trade in motion on its own. It gives me a super good way of being very objective in analyzing my trading results. I'm never going through and saying, did I make money today? I'm going to look at this stuff and say, did I do what I said I was going to do? Did I execute the stuff according to my plan? And if I did, that's a success. And it's not about, did I make money? Did I lose money? Because I know that over time, my plans do really well. And what I need to do is replicate the mechanics of the thing. I need to go in there and think like an engineer. I need to put in process controls. I need to make sure that it's almost like a total quality management game. I want to eliminate variability in what I'm doing, because all those tolerances build up. So if you're gonna get a bunch of slips, or you get a bunch of trades where you decide, you're not going to take it till you see confirmation, you're not going to take the trigger, you're going to wait a few seconds. Well, all those things add variability to what you're doing, and variability stacks up on you. So it's like, imagine building an aircraft or a car or something. If the bolts have X amount of variability in them, and the nuts have X amount of variability in them, then if you're unlucky, the variability starts going in two different directions, and you get a car that rattles or falls apart, or things go wrong with the mechanics of things, and you're constantly in the repair shop. That's not what you want to have happen to your trading. You want your trading to be just a fine-tuned machine, and you want to make sure that you always know exactly what you're supposed to be doing before you do it. And as I said, if there is no opportunity right now, then the thing to do is just step aside, go for a walk. I like going out. I hike. There's an hour between our opening strategy and where we start doing the Mag 7 stuff later in the day. I like to go out on a hike or walk on the beach. We live in a canyon at the beach. We're lucky. And why do I have to sit in my chair as if I've got a day job in an office somewhere. I don't. I've worked hard to be able to go and do this thing that I do. So let's go and capitalize on what it is that we've worked hard on. So I'm looking to profit from opening volatility in today's session. So today what we're looking at is this first hour trading stuff. And it's definitely the exciting time of the day to be there. There's lots and lots of opportunities. There is a whole system of stuff that we're doing that capitalizes on the opportunity that's provided by order flow. And in this case today, I'm going to take it all back to the basics. So if you're one of my boot camp guys, then you know that the first thing that we focus on in the training is support and resistance, and how we can correctly identify support and resistance, and how that relates to order flow and what order flow means to our trading. And this doesn't have a ton of indicators. This really has nothing on top of it except for your eye going through and identifying where it is that there's going to be a price inflection, when opportunity comes your way. So it's important that we pick the right trading candidates. You want to create a group of stocks that has good potential to move, high volume. You want to see things that are super liquid. I like, things that are over $100 per share. It doesn't have to be, but I like things that are very liquid and have the potential for some really good range, and don't rely on some guy in a chat room somewhere, pumping a stock or a penny stock or something, and trying to play that game of musical chairs. What I'm looking for is something that trades tens of millions of shares every day of the week, has a big travel range. The bigger the range is, the bigger the opportunities are going to be. And I want to stick to things that aren't going to be highly correlated to geopolitical shocks, right? I don't trade oils, I don't trade banks. I don't like the ability of things that are happening in the world to affect those stocks. I like things like technology. I like things that are more consumer driven. So I do a lot of consumer discretionary stocks. I do a lot of consumer, even consumer durables and things. I just don't like banks and oils. So banks and oils are the things you're never going to see on my list. I do love the Magnificent Seven stocks, and this is just currently, right? So it's been the case in the past that we've been on biotechs. It's been the case in the past that we're on Harley and Polaris and those kinds of stocks all the time. Look at the big consumer discretionary things. But these stocks here are going to meet your liquidity requirements. They're going to meet the range requirements. They're heavily traded. So the pre-market winds up looking a lot like the regular session for other stocks. So even in the pre-market, these things are real liquid. I think somebody's got a hot mic out there. Somebody's coughing and sneezing. I want to isolate pockets of liquidity and use those to identify order flow. That's key to my strategy. And I want to make sure that I've got a complete trading plan in place before the trading starts. So this is, for instance, my NASDAQ volatility band setups. And I'm going to show you the one for today too. Just so you see, I'm not cherry picking something. I put this presentation together on September 11th, and I was using the plan then that I developed the day before. But actually September 18th, I'm sorry, I put this together. I'm thinking here. So the Magnificent Seven stocks, I'll go through and I'll find the ones that have sort of the best ranges, and I'll show you how to identify those ranges that we trade in a second here. And I divide them up into 3 sections and just say, if it hits the entry level, I've got a long bias, a short bias, doesn't matter, based on what the movement of the day was. I've got an entry. In this case, I've got here, Microsoft at 435.54. The first target is 434.87. That level is also then an alternate entry. If it starts somewhere in the middle of that range and then trades down through 434.87, my next target is 434.08. And then the next target is going to be 433.04. And it doesn't have to be a $400 stock. If it is a $400 stock in these very highly liquid Magnificent Seven stocks, then just trade fewer shares, right? You can see there the range of motion that we're expecting is over $2. So you don't have to trade as many shares. Nvidia is going to be, you know, a dollar move that we're expecting. We'll trade more shares of Nvidia. It's cheaper. Tesla, same thing. Right? We're going to scale these things according to the price of the stock. And in the case of Apple, we're going to develop a bigger set of bands because Apple is our opening trade each and every day. And that's because this one is a stock that we can go and identify institutional activity in the pre-market. We can look for where market makers are going to, you know, hedge their bets, options market makers right off the open. That's a little bit of a different strategy, but you can identify the same thing here just using support and resistance. I'll show you the setup in a second. And the important thing is, again, you don't want to be a gunslinger, all right? So that's an old fun photo that I thought is kind of good here, right? I don't want to be the person that I'm portraying right there. I want to be somebody who knows exactly what he's going to do before he's going to do it, and I'm not just going to go and start shooting because then I stand the chance of getting shot. So when we're trading, I say it's trading like clockwork. We've got our clock divided up. That there's an actual clock in our office, looks just like that. It's on the other side of me over here with all the monitors, not back there with the monkey lamps and stuff. This is a first hour strategy that we're talking about here. In the first hour, I'm going to go, and before the opening bell, I'm looking at Apple. So I'm looking at pre-market data. And in the pre-market, what I'm going to say is, these are 5-minute bars. Where do I see support and resistance that's really firm in the pre-market? And how does that line up with what I'm going to expect to see going into the open? So you can see there, that's the threshold level that I've identified. I think there's been resistance there. I think there's been support there. I think there's been a bunch of activity there where if the market opens and price comes back to that level, we're going to see an inflection. And you can see there that when the market opened, we did have an inflection. But those of you who are in the room every day, you know this is exactly what I'm looking for before the bell. I like it a little bit better if we get a pull down to a place that price skyrocketed from. We get a little bit of bad data below there, so that this looks a little bit more compressed than it actually is. Some straight ticks from the exchange there. But you can see there was really solid support and resistance. The blue solid line and the black line, those are just floor trader pivots. And floor trader pivots are just, this is from, you know, when Julie and I started trading and there wasn't a bunch of trading software out there. And you actually went and calculated what's the central pivot. That's yesterday's high plus low plus close divided by 3. That's your fulcrum. That's where you're expecting the value line to be. That blue line is the first resistance. That's R1. The green line on a chart would be would be first support. The black line that you saw on the chart that we just had up, that is second resistance, and we have first resistance on the thing, and then second support is the black line that we just had up. So this is what you're looking at, right? There's all the information that you have going into the day, and really what we're looking for is if price comes down here on the open, just like it did, right? Price backed off, came right down into that line, and it pops. Then what's a logical profit objective? So the first thing that we do is go back to that trading plan. And that trading plan has, you know, we've gone through and we've identified over time where all the support and resistance levels are going to be. But it's hard, right? It's hard to figure out where's the target going to be. So if you look at that plan and you look at all the numbers that I had on there, or all the price levels, those will represent things like intraday support and resistance, and then also a representation from daily bars, right? So you go out to a daily chart and you say, where was support and resistance on the daily chart? And, you know, here you see, okay, there's overhead resistance, $228.11. So that might be a first target for that bounce on that Apple trade first thing in the morning. If we're looking to figure out extensions, right? So we don't know that all that stuff is there. We go back to the 5-minute chart and we say, if we had that move up to 228.13 on the chart that gets up into that daily resistance, that overhead resistance, where could we expect there to be an expansion to? And in this case, we can use a fib study. So you just get your Metastock fib expansions, and what you see is, oh, look at that, the 50% expansion is going to be out at 229.87, and the 382 is going to be like around 229.45. Those are good places to put targets. And you can see here, it gets right up in there. And then if you're an around the horn fan, or if you have the module for Metastock, then what you should see is, oh, there's an infield fly. And on that infield fly, how do we predict where we think that's going to go? Well, probably going to head back down into that fib study, and maybe get us down into that level of support and resistance from the daily chart. All of this stuff overlaps. All of this stuff makes sense, and you're not sitting there trying to fire off random trades. So you've got your pre-market setup is ready to go, and now you're off to the races. Bell rings, and it's time to go to work and figure out what are we going to do from the opening bell through the first hour. So in this case, I've got that trading plan that I just showed you, and one of the ones on there was Microsoft. So we had a chart of Microsoft. How did I develop that trading plan? This is then the chart from September 17th. So we're setting up the plan for the 18th. On September 17th, we're going to eliminate all the other stuff that we look at and only look at price. So when I'm setting up the plan, I go through and I say, where are the pockets of liquidity? Where is it that when price was making a move, it stopped and it either consolidated or it reversed, did something different than what we would have normally expected it to do? And in this case, those lines right there are the places that I put on the trading plan. So those lines that I drew just transferred directly onto the plan. And what I'm thinking here is, if tomorrow I get an open, and that open opens above that top line and then starts trading down through it, my expectancy is going to be that I'm going to have a repeat of that move down into that bottom band. That's behavioral finance for you. The best predictor of future behavior is going to be past behavior. And you can see here, that was our trading plan. That's the one that I just showed you a second ago for that day. And then here is what happened. So you see, we had an open, and it opened sort of in between the top band and the next band down. And then what did it do? It goes and it goes higher, gets up above the band, gets right into the level that it reversed from yesterday, and then it goes and it travels down and it makes it through all the bands. And I'm going to say we get at least 3 days a week where these guys go, and at least one of the stocks on that plan is going to do this kind of a thing, where you can book $2.50 for every share you traded, and you're doing it right off the open. And that feels great. I mean, it really feels good to have. You usually get the Apple trade, which is generally a profitable trade. That's up there in the 80 to 90% profitability. And then you get something like this, where now you've got 2 under your belt right at the opening bell before you even start thinking about the gaps. A lot of days, what you'll see is we had NVIDIA on that plan as well, that you set up a plan for a bunch of these and they start doing sort of the same things. Like Tesla tends to be a counter trend trade. A lot of these other Mag 7 stocks, the tech guys, wind up being trades that are sort of in the pocket together. But you can see it here. We've got a set of bands that we're basing on price action. You're going through and you're banding up the price action. You're going and you're trying to find, where are the volatility bands? Where can I expect that, based on what's happening on a chart today, I've got a good reason to assume that if we've got a stable open tomorrow and we get back into the same price ranges, that I'm going to see a repeat performance of what just happened. And in this case, the case of NVIDIA, we've got a 116.28 top band and a 115.01 bottom band. And when the market actually opens, we see the same kind of behavior again. The stock opens up, moves on up. That red line again is the central pivot, And we know that when it hits a pivot line, that's called confluence. So we've got our indication of where we think the volatility is. And we also have the pivot line, which we assume is going to be an inflection point. And sure enough, the stock goes and it reverses and it makes the move down through those bands. And again, we've got a big opportunity for profit. And in this case, $100 stock, so I'd be loading up more shares, and $1.27 per share traded. And you go through these, and again, right later in the day, you can see it happens again. The point here today is you don't have to sit in front of your computer all day. You can be a 1 hour trader. You can be a first hour trader. You can focus on just these things and put yourself in the position that every day you know exactly what you're going to do before you're supposed to do it. And you've got your plan set up. Here it is on Tesla. Go through. Tesla had a day where it moved lower. You go through, you put your volatility in place. You say, where are the significant highs, the lows, the opens, the closes? Where does a bunch of stuff overlap? And then how likely is it that if the same thing happens tomorrow, I think it's going to happen again, because I want to trade the first hour. I want to go to the beach. Then I want to go hang out with my kid. Excuse me. I want to do something else. I don't want to sit in front of the computer all day. I want to ski. I want to scuba dive. I want to, I do all these things that I do, and I don't want to be just sucker punched into, I have to sit here all day because, well, I want to see if something else comes along. I want to see if there's something else that I could be doing just because I want to be doing something all the time. I don't want to be doing something all the time. I want to wait for the opportunity to come to me. If I get a 229.17 print on Tesla, if it comes down from above, then I'm looking for a move down through that range. I'm looking for something that goes as low as 226.99. Be great if it did. If it stops at 228.42 and I see a reversal, I'm going to get out. If it stops at 227.80 and I see a reversal, I'm going to get out. It's all about watching what's going on, watching what's happening right in front of you. This is actually an example where it didn't make it exactly to the bottom band, reversed. You had plenty of time to get out at that profit target up above there, right? It hit that thing twice, 3 times. You could even have got out, got back in again as it came back down and just kept playing that band. But let's just say you're only doing this opening trade. Now this one opened way, way above the line. And in cases like this, I'm expecting that it might have a hard time getting all the way down to that bottom line, because you can see here the range that it's done before it gets into that top print is going to be more significant in terms of the percent of the move that it's already doing on the day than on Microsoft and what was the NVIDIA, right? We did. Those opened closer to the line. Those had to travel up above the line, came back down through, reversed, had a shallow reversal, I call it. In this case, yeah, this thing opened above the line and went way higher. It went all the way to $232. So we're $3 away from our entry price before it goes and makes the reversal. But when it does, what's it do? Right? Stock comes back down and just cracks right through those levels. These are fast moves when they happen. And what I really advocate to the boot camp guys is, when you see these things in the morning and they're sort of opening in line, set up conditional orders. If last price is greater than 229.30 or whatever it was, then begin. Sell short, stop limit at the line, and then I'll get a signal that just says order, orders filled, order placed, order accepted, order filled. As the order gets filled, then it's time to look at it and say, I'm going to manage this trade. So part of this can be automated so that you don't miss them, because what you don't want to do is we've got a lot of people we've worked with over the years, and what we see is there's this hesitation. So when it comes into that line, they know they're supposed to take their trade. They know they're gonna, I'm gonna take that trade. And then as it gets closer and closer to that line, they go get a glass of water, they go get a cup of coffee, they go to the bathroom, they figure out some reason not to be in front of the computer. Or they see it coming down to the price and, well, you know what, I'm gonna wait for it to get through and move a nickel in favor of the setup. I'm gonna wait for it to go 10 cents in favor of the setup. Before you know it, it's 20 cents and they're getting into the trade in the middle of those two bands, and that messes up the reward to risk completely. Because what you're normally looking at on these is very, very little risk. If it gets back above that band, if it gets back up through the threshold that it inflected at up above, if it's doing something that's counter to what you're expecting, then you're going to scratch the trade. And to me, it's a scratch. If it's a 20-cent loss, that's just a scratch. But if I waited 20 cents before I got in, then break even is a 20-cent loss. And the 20 cents that I need to wait to validate whether or not the trade is going in my favor makes it a 40-cent loss, right? So you just want to make sure you get the courage of your convictions, and a lot of that has to do with psychology. Just a lot of it has. I talk to every one of our boot camp guys just all the time. We stay in touch with everybody. That's the nice thing about only working with 20 people at a time. 20 people twice a year is totally manageable. You can pick up the phone and call me, and I'm going to talk to you. You can talk to me in our room every day. I'm going to talk to you. I'm going to answer questions. And most of the questions are not technical. So we've got lots and lots of people who are very, very technically proficient by the time they're done with this stuff. The problem is always psychology, because it feels bad to lose. It feels good to win. People take smaller and smaller wins off the table. They let losses run all of a sudden, right? These are disciplined people who all of a sudden are staring in the face of a loss, and instead of just taking their lumps and taking the 20 or 30 cents per share off the table, they'll let it run $1 because it feels bad, right? It feels bad to take a loss, and it feels good to have a win. And it's this like sports metaphor that we've all grown up around, and getting the ball across the goal line and all that crazy stuff. It's really counterintuitive to play by the rules. And playing by the rules is the only thing that really is going to keep you alive. You have to be able to say, I'm getting in where I'm supposed to get in. I'm getting out where I was supposed to get out. Whether that's a gain or a loss, doesn't matter. I'm going to exit that trade. This one was $1.37 per share. So, you can see on any given day, I'm going to say on your typical day, you don't get all three of the stocks. Like on my plan, don't go. And if you do, let's say you do 3, you do 5, you do 7, you do all of them, right? It's not going to be the case that you're going to get in and have things run through bands this way, and it's just one after the other, where every one of the trades that you automate goes and triggers and gets you in front of a profit. But most days, you're going to get a shot at least one of them. You're going to get one of them that goes and sets up perfectly. And when it does, you've got the opportunity to go and pull this money out of the market. And this is just strictly a price and time setup. You're just going through and you're isolating where did price inflect significantly over a period of time during the trading day. How could I go through and see ahead of time where something was going to happen? I didn't need a crystal ball. What I needed to do was look at, here's what happened today. These are the threshold levels. There's other stuff that we look at. We look at order flow indications. We look at things that make this an even finer science. But this is where I know a few of you guys are planning on coming to the boot camp in February, I guess it is. So February in Miami Beach. And this is probably where you are right now. If you started this past week, or you're just going to start next week, you're just going to be looking at price inflections. You're going to be looking at support and resistance, because this stuff is the foundation. This is, if you can't identify where support and resistance are on a chart, if you can't identify where the inflections are, if you can't see ahead of time that this is where something important happened and this is where I expect to see something important happen again, it's going to be harder than it needs to be for you to be able to make money in the market. So I said, I'm going to go through today's too. I just want to show you, I'm not cherry picking the plans. Here was today's trading plan, And, you know, really Meta, I think, was the only one that, it is from the plan, right? I do look at, so Meta was the only one that ran all the bands. Microsoft also went, but it went from the alt 1 entry down to the alternate target. So Microsoft was worth $1.20. That's great, but it didn't have this just sort of perfect setup, and Meta did. So here was the setup for Meta. You can see here, I didn't have time to put the price levels in. It was a 566.82 top band, a 565.81 first target, so about $1. 565.81 was an alt entry down to 564.39, and then 39 down to 563.48. And you can see there, it did exactly what we expected it to do. It ran through those bands. It's entirely possible that you caught it all the way down to $554 and you had an absolutely stellar day. You could have, you know, $554. I mean, if you did stick around and trade for the rest of the day, you're a better man than I am, because at that point, I'm gone, right? I'm gonna say I'm totally happy with what happened today. I was totally happy with $3.34 per share. That was fine by me. And you know, so if you bracket up, this is so here's the caveat. I don't care that I missed the rest of it, and a lot of people do. A lot of people will care and really beat themselves up about, you know, why didn't I anticipate where it was going to go next? Why didn't I think about what could happen? Well, this is not fully developed. So this is not as fully developed as the Apple trade. So the Apple trade has all these levels identified ahead of time. These guys, this is what I'm looking for, is 3 volatility bands right off the opening bell. And if you allow this stuff to get into your head, that you missed all this additional profitability, then what's going to happen to you is there's no such thing as a good day, because you're always wrong about something. And you have to give yourself the grace. You have to give yourself the room to just pat yourself on the back and say, I did what I was supposed to do, and not constantly be on top of, I missed this and I missed that, and boy, you know, I screwed this up, I screwed that up. If you're doing that, then it's going to be impossible. Then all this is a psychological train wreck. You just have to be able to get in there and do the trades the way you set them up, and say, I know my rationale for doing things. I know why I set these up the way that I did. I did what I said I was going to do, and that's a victory. So hopefully that stuff today makes sense. Like I said, I think for me, that's taking it back to basics. That's really just drilling down and saying, you know, this is where the meat of this stuff is in the price action. This is how we interpret what's going on. This is how we figure out what's most likely going to happen tomorrow. I don't have a special offer for you, because I'm really not trying to sell you anything. I prefer that you come to us and take a look at what we're doing. I think that if you talk to my guys, they tell you you're crazy for not doing it. There's no pressure to do anything here. I like to just let people come to us, take a trial. It's traderinsight.com/trade. That'll set you up for 2 weeks where you can come and look at our trading plans. You can see all the plans. You can see what we're doing in the morning. You know, we're in there in the room live. You can join us and be part of what we're doing, see the calls, see how we're setting up the trades. It's a community of people who are primarily guys who have been to the boot camps. So it's not like an open outcry room. It's not a live call room. What we're doing is we're taking those trading plans, we're working with the plans, we're working with the opening gaps. You'll have access to our gap scanner as well. And you can just sort of see, is this for you? Is this something that I can make fit with my psychology? If it is, I'm going to give Adrian a call and see about working more together, or working, you know, going to a boot camp or doing whatever. And if it's not, then you just work on things, find yourself something that is a good fit. Because like I said, I think the fit is 99% of the game. So with that, I left a couple minutes for questions at the end here, if anybody has them. This will be the one time that there's not 5,000 questions, and I didn't, usually I go over and there's questions and people can't get them answered. So hopefully this time somebody will have something. Maybe not. I don't see questions. Anybody?
We have a comment.
Okay.
Harry says, excellent coverage from ground up to today's techniques. Thank you.
So that's the that was the goal here, was just to take it back a notch, because you'll see when you look at, if you haven't looked at the Metastock stuff yet, if you haven't looked at the scanners yet, so they've built out a whole education thing that goes with the scanner that shows you how to identify what the best trades are, where the best opportunities are, and those are really based on this stuff. So even back that far, the root of how you're going to get in front of the opportunity for profit is you find the patterns. So you find the fastball, you find the infield fly, the line drive, switch hitter, right? All that stuff, 3-2 pitch, all the patterns that make up that market cycle. And then you go through and you do just what we did today. You identify where was the order flow, where's the significant support and resistance, and then how do I build a trade that makes sense, instead of saying, this is what I want to have happen tomorrow, or I like trading Harley, or I like trading, whatever, Microsoft or Apple or whatever. And you're not trying to force it to do something, because I take the mystery out of it. It's not going to do what you want it to do. It's going to do what the price action, what the support and resistance, what the order flow, what all that stuff in prior sessions dictate that it's going to do today.
All right. Perfect. That's it. In terms of the questions, sign up for your 2-week mentoring trial. Go to traderinsight.com/trade. Adrian, I want to talk a little bit about the add-on that we created for you. Before I do that, I want to say thanks for coming and taking us home tonight, spending an hour with us.
Thanks for having me.
All right. Very cool. Thank you, Adrian. We go ahead and do this. We'll go ahead and do a screen share right now. We'll just kind of show this. So we did, as I kind of talked about before, we did take the book, and with Adrian's help, we put together all of the patterns. And this was quite a little bit of time ago. A great little add-on that we used to kind of create all the patterns with him. Here's the patterns. It's a list of them: fastball, the line drive, the backdoor slider, the double hitter, the infield fly, the 3-2 pitch, the switch hitter. This add-on's only $299. Here at the conference, we're going to back it with a 30-day money-back guarantee and give it to you for $249. So that, like all the other things, if you need a trial to Metastock, if you haven't tried out Metastock before, I'll remind you that it's been rated 31 times in a row the best software in its price category, but you can get a free trial with it. So to do this, you can, or any of the other offers that we talked about today, you can go to metastock.com/conf-promo. You go to metastock.com/sales-chat, or you can call us at 800-882-3040. Want to do a quick shout out to all of the partners that we had today. Thank you for Stocks and Commodities for sponsoring the event. CMT Association, a very well-respected, well-reputed organization. AAII.com, and of course the Traders Forum. If you go to the tradersforum.com, you can register right now. You get live market chat with other traders, learn about the market. It's designed to be a community of traders helping traders. So big thanks to our partner, the tradersforum.com, for helping sponsor today's event. And of course, we are Metastock. Greg, I would be remiss if we didn't do a final prize, but I want to do one a little bit differently for this one. So I may not need your help at all.
Well, I'm here.
Well, it's good to see you. I think what we're going to do, I want to reward somebody that's been here and is still here. So right now, I'll send you
all day long.
I'll send you some tea. All right. So what I'm going to do is I'm actually going to give away a prize, but to somebody that's still here. I have a list, so I don't actually really need you. But I can tell you what the prize is going to be.
I'll just, before I go, let me remind everyone that they can register for today's event by going to metastock.com, hitting the banner on top, It takes a second to register. You'd only have to register once for the entire week. And if you're listening to this on GoToWebinar, you don't need to register because you must have already. And we look forward to seeing everyone tomorrow bright and early at 10 a.m. ET.
The final prize of the day will be a report by Serge Berger. I need to figure out a better way to do this because I had to move everything around to see what the prize description is. So this is $297 value. It's a report done by Serge Berger, reviewing 4 big potential market movers in the 4th quarter this year. And so this is a free guide. What I'm going to do is I'm going to jump onto the list, and I'm going to, here, I'll just basically, I'll scroll around on this list for a minute. I'm going to go down. I'm going to go up. I'm going to go back down. Go up a little bit. Okay. And the winner is Kirby. Kirby, that's a pretty unique name. I think you probably know who you are. And congratulations. You just won that prize. Let me write down what it is. As with all of the prize winners, anybody that wins a prize today, what we're going to do is reach out to you next week. Serge, I'll send your information to Serge's team and he'll send that over to you. Lastly, thank you for being here. Thank you for all of the speakers that are here today. We have a great lineup for tomorrow. Let's go ahead. Oh, that's the wrong one. I have another great lineup for tomorrow. Where is that tab though? Here it is. So if we kind of come over here, we can talk about kind of like the lineup that we've got tomorrow. Wednesday, we've got Serge Berger starting. He's going to start talk about the new indicator that he likes. One of the top technicians in options, Larry McMillan's going to come. Wrote what's widely referred to as the Bible on options traders. We're going to have Marina Villatero, Scott Brown, Steve Primo, another Sonny Harris, and then Peter DeLaw. So full day packed full of things today. In terms of conference offers that we talked about, Adrian Manz, we talked about his add-on. We talked about Oscar Carboni and the training that he did. Kelly talked about Metastock. He did a great job. And then Zaheer Anwari with a special that we really haven't run on the MAT before, where you can pay $99 and get that fantastic suite of indicators. So any of the things that you're interested in, if you're interested in picking anything up, you can go to metastock.com/conf promo. Go to metastock.com/sales chat. Give us a call. We're here to help. 800-882-3040. Thanks for being here. Thanks to all the speakers, the sponsors, everybody. We'll see you again tomorrow. Thanks. Oh, you're welcome, Kirby. Congratulations on winning. All right. See you guys tomorrow.